doing? Can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
You commented, Vanetta, very early on. She got herself a little trading jacket over there, looking very smart.
She's
very
going to be at
nice.
the SIBO.
I'm going to the SIBO today.
Nice.
Mecca.
Yes, because Liz and Jenny are going to ring the closing bell.
Oh, how
Awesome.
sweet.
So it's going to be on like CNBC.
Closing bell? They're going to put in a full day?
Yeah.
Wow.
Watch
very
yourself,
nice.
mister.
What's that like?
I'm excited. Have you ever got to ring the bell? I got to ring the bell at the NASDAQ.
Nobody asked me to do anything, ever. No, I
Sucks
never got
for
to ring the
you.
bell. I did have the opportunity one time to ring the New York Stock Exchange bell, but Tom Sosno said I wasn't worthy. So,
Okay.
yeah,
All right.
yeah, I couldn't do it.
I will out it that you remember we did those like for like a week maybe or like a couple days. We would do the opening bell, but we would go to Liz and Jenny at SIBO.
Yes.
I thought they did that basically every day. Like I thought that was just like how you started the day. It turns out that's a thing of the past.
Yeah.
And that this is just, oh yeah, you want to ring the bell? Sure, we'll do it for you today.
Yeah, ding, 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 ding.
Yeah. So I was a little disappointed in that. I was expecting it to be like an event.
Your whole life is a lie.
Yeah. It's like I figured that this was like a thing, and it's just, but that's cool. That is fun.
Yeah, and then me, Liz, and Jenny are going to get drunk at Sirius Cafe.
Hell yeah.
Best place in the area to get a
Hell
cocktail.
yeah.
Serve it stiff. They serve
Can they even just call it a cocktail? It's a glass of vodka with a Diet Coke.
They do a great job. They really do. And their fish fry on Friday, second to none.
I'm just kidding. We're not going to get drunk.
No, you should have one or two.
You should.
You should.
Yeah. Expense that too.
Yeah. I was gonna say I was gonna go in my pocket and give you some cash.
Yeah.
Expense that.
Yeah.
Yeah. There you go.
I can't expense anything.
Sure you can.
Well,
You put it down as meal allocation.
Business development.
Better to ask for forgiveness
Yeah.
and permission. Always.
All right.
Always.
Something. Shenanigans. What did you get up to last night, Bat?
Ooh, somewhat of a quiet day. I told you I did a whole bunch of over the weekend manual work outside. Power washing and everything. Then my back was a little stiff.
Don't ooh him. Don't ooh that. Don't do that.
A little stiff and sore. So yesterday was a rest day.
Yesterday was a rest. You were on the DL.
I was on the DL. That's
One
right.
day of manual labor.
That's right.
And you were on the DL.
That's right. One day on the DL. Yeah.
I got a massage lady. This is true. She's here in the West Loop, and the massage place has like rails on the ceiling, and she will walk on your back.
Oh, I've had that.
She like
Oaxaca.
gets in there.
Just outside the Indiana-Chicago border.
Yeah, she'll get in there if you want. Nope, don't make it weird. Nope, don't make it weird.
A golf game. Yeah, absolutely.
Why don't you get in your hot tub?
That could have. That would have been nice.
Helped.
You go on the
Or the sauna, even. Yeah.
Yeah, I could have. I didn't. It was kind of it was raining, and it was kind of.
Boo-hoo.
Yeah, it was kind of crappy out.
Yeah.
Vinny went to bed at 8:00. I had to wake him up to make him take a shower so he can go back.
Hungover?
No, he's 16. I hope not. No, just like late nights over the weekend, and just think it all.
Partying.
Yeah, I think it all caught up to him. And I saw him. He was watching the hockey game, which, by the way, are on way too late. Like they should start these games at 3:00 in the afternoon. At least.
Okay, boomer. That's like the most boomer take of all time.
It went into overtime. I stopped at around.
Just ask the East Coast dads. They're
Oh my God, they got to be. Who's at
they're in
work today?
shambles.
That's why we're down 50 on E-mini S&Ps because nobody's at work to buy them.
Who is playing?
The Golden Knights. I think they won in overtime. That was the late game against Utah.
Oh.
Yeah, I saw they scored 2 goals in like 25 seconds. Utah did to make it like 3-2, and then I was like, I can't watch. I mean, this is gonna be. I can't watch it anymore. I gotta go to bed.
Yeah.
I slept like a baby.
Okay.
that's
well,
good.
that's all.
I didn't even wake up for my alarm. If the wife doesn't elbow me, Yeah, I didn't.
She didn't try to give you any more gummies?
No.
That was one and done.
That was
gummies.
Yeah, and it wasn't those kind of gummies. It was like,
I know.
like regular sleep gummies.
Sure.
The mushroom thing is like a hype cycle right now. Everybody, the mushroom, like, there's.
Don't do mushrooms, boys and girls.
No, not those mushrooms, but
No, there's like healthy mushrooms.
Yeah,
like there's mushroom coffee and then like mushroom like for sleep stuff and
it's kind of like the new like it.
Is it a TikTok thing or something? Probably. Probably. Yeah.
Maybe it works.
Maybe that's I don't know. No, I didn't take anything. I was just natural.
But that's what she gave you the first time.
That is what she gave me the first time. That stuff does you.
Lion's mane.
Yeah. Well, lion's mane is other stuff too, I think.
What are we doing?
I'm not going to entertain.
What are we doing?
I'm not going to go there.
What is happening?
You will in a couple of years.
Yeah.
Nikki, how was your evening?
Mine was good.
Hey, lion's mane and your
no lion's mane. No. Don't need that yet.
Did you ask?
Laura's over here like, please stop this. Yeah, nothing much. It's an early night.
See?
Yeah.
You did it too.
Yeah, it was easy. I was like Vinny. I did start, getting my shed together.
Oh.
Yeah, that's my thing.
Do you got a labeler? Like, are you gonna label the shelves or anything?
Painter's tape.
Oh, good idea.
Oh, that works. I do have a labeler. I love. Of course, I do.
Oh my God! I would have bet a lot.
Oh, I love label. Like there's so many practical applications.
Yeah. It's probably better to go that route with non-clear bins.
Yeah.
Clear bins, they look like junky.
Yeah.
I got the black totes, those ones that are
those are
like
fancy.
Duty.
They're
like $9.
You fancy hoe.
There was the only thing that has not been hit by inflation.
That's nice.
It's an $8 huge tote. It's like
wait until they hear this. They'll be going there.
Well, they're overstocked at Home Depot, so I don't think the prices are going up.
Oh, is that what it is?
Yeah.
Got it.
Nice. Are you calling it your she shed?
Sure.
You can't set me up like that.
I'll label it.
Yeah.
I'll label it
your she shed.
Yeah.
I love that for you.
Yeah.
You do your crafts in there?
Yeah.
Oh, your crafts. Hey, I did want to tell you though, Nikki, you got to sign up. Trader Joe's class action settlement. I don't even think you need proof, but you get like a minimum of like $102.
Really?
They probably have wronged you and just Google TJ's settlement and you bona fide shop at TJ or Trader Joe's.
Yes.
So you get on that class action.
I did see this. I thought in the fine print you had to have some sort of receipt.
No, I don't think you have to have any proof, but even like your credit card, like you use your credit card there. Like, I mean, I think you.
Yeah, but it goes back I think it's from 2017.
I mean, just get in where you fit in, man. Just see what happens. Just let it ride.
Get in where you fit in?
Yeah.
I like that.
I should look into that.
Yeah, you should, because you were probably honestly affected by it. So.
Yeah.
What is the class action suit?
I have heard about
my wife
it.
swears we had a chicken that made her sick from there. So it could be like some frozen chicken thing or something that made her sick for sure. Is that what it is? I'm gonna get my C
hold
note.
on. So
put it with the rest of the
So
C
they
notes she gave me
agreed to a
yesterday.
7.4 million class action settlement to resolve claims that they violated federal law. By printing too much credit card information on customer receipts. So if you used a credit or debit card between March 5th, 2019 and July 19th of 2019, then you are eligible.
March and July of 2019. Okay.
In the before times.
In the before
times,
that was
yeah.
when, things were normal.
Things were great. For,
Wow.
Yeah, it
Okay.
was in
I'll have to look back. I'll have to look back on that. That's a good one.
So I guess the receipts displayed the first 6 and last 4 digits of credit and debit cards. Bitch, that's a whole number.
Wasn't COVID in 2019?
No, it's 2020, March of 2020.
Oh,
That's the historical date of, when everything fell apart. Yeah,
Day
2019.
that will live in infamy.
Yeah, day that will live in infamy.
Yeah.
But anyway, there you go, Nikki. You're welcome. I get 20% of your settlement.
Oh, is that how this works?
That's how that works. Because I brought it to your
Can I pay in Chick-fil-A?
attention. Yes, I'm still waiting.
Okay.
Yay.
I'm going to work on that.
Yeah, you keep saying that.
I wouldn't believe him. He's been working on this
What
for
day
about a
would you
year.
like it on?
Oh, no. Now we're going to get a specific
Any day that I'm here.
Yeah.
Any day that I'm here, I won't.
Yeah, any day.
So, I'm here all the time. So
I'm going to work on it.
Yay!
I'm going to call the peeps. I'm going to figure it out for you.
I'm going to work
so
on
excited.
it. That's an excellent idea. Let me look into it.
Do you prefer just the nuggies or do you want the little sandwiches?
I want the little sandwiches,
Yeah.
please, and the little hash brown.
So all the sauces.
Yeah. Oh yeah.
All the-
Yeah. Thank you. I mean, look, like you're living large between your trades and your gambling
I know. If I didn't
and your
pay him out
offshore
already,
accounts.
if I didn't pay him out already, I would have taken it out of that.
I mean, that was
I
a
would have
rookie
expected
move.
it.
Yeah.
I would have expected nothing
Yeah,
less.
that's your
For sure. For sure.
Yeah.
Wah, wah.
Right.
Hey,
I feel like, well, excuse me one second. This is the second day I let you go on with this. I feel like I'm obligated that I should tip you for taking my money and doing absolutely nothing extra, but just saying, yeah, you're a third of it, Dad. Like, I mean, you got a random number. Like, you didn't pick the teams. Like, listen, when you pick the teams,
ooh,
say,
the shade.
you said, Dad, I got a guy who wants to get. You want to go in for a third? I said, yeah. I owe you.
These ungrateful boomers.
Find your own pool. Find your own pool. You should go drop the money off. Pick the money up.
I can't do that. I'm too valuable. You were saying, Banana?
We got a great show for you today. It's a terrific
And
Tuesday.
it's the combination of all the things. Okay, it's the bets. It's the this. Hey, text me. Can you put $100 on this one?
My peeps are saying COVID started in 2019, but go ahead. Doesn't matter to me.
In December, like the first like instances of it, but like when the shutdown started, are you really arguing with me about when this happened?
No, I'm sorry.
Like, are you talking? But you're talking about like. Are you talking about when when we first knew? Like, yes, it was called COVID-19 because it was the year, but like when we were shut down, it was March.
I'm getting flashbacks of when I was in high school.
Oh, no.
Well, it was March of 2020. But like, if you're gonna be loud and wrong and you can't handle the consequences,
it is 2019. It started in 2019.
But I was asking, what is your point of clarification of like when it was?
You said the before times. I was just making.
I meant before the shutdown. I meant before we.
So you said I was the right spider.
Okay.
All right.
All right. I love this. I love this for you.
Short the Dow.
Do it. Anyway.
Dip day. We get a dip.
Dow's the only thing that's up. I tried looking to see what it was. It didn't look like too much. I don't know what it is. Apple was up small, but I don't know what else is.
We got a great show for you today. It is a lot of great content headed your way at the top of the 8 o'clock hour. We have an options jive, probability of a stock to retrace back. That is a grammatical nightmare.
I want to talk to them. Yeah.
Play on words, yes. Mm-hmm. Well, we've had a good variety of titles. We've had titles that like are play on words. We've had titles that like are very, very interesting. This one, it's a little tougher.
This is a word salad.
A word salad, but it's a good one.
Like I wrote it.
You could call it probability of retracement.
Sure, that would be easy.
And short and pretty sweet too.
But probability of a stock to retrace back to before how it had been.
Before time.
Yeah.
That's what we should have said.
I can make the change.
Yeah, no, it's okay. What is this study about?
So we're going to kind of dispel the thought of like mean reversion in stock price, which we know like it isn't quantifiable.
Okay.
At least in the short term. And then we're going to look at positions like option positions. If you're selling a delta neutral strangle, what's the probability that you get kind of range bound movement? So it's a good one.
Okay.
A good one. Yeah.
And then at 8:40, we have Let Me Explain. We got Chris Vecchio in the house. What are you going to talk about with Chris? Well, Fed starts their meeting today.
Only God knows what is coming out of his mouth. We have an interesting market for him. You got oil at 100. Market's down, tiny little haircut.
Off all-time highs.
Yeah. Gold and silver getting whacked. He's probably not going to be happy about that. I'm not happy about that. So it should be a little bit of everything.
Okay, we'll have a very in-depth conversation with Mr. Vecchio. Then at 9 o'clock for market measures, why IV drops, how fast and what's next. I'm sorry, when IV drops, how fast and what's next.
The word salad, it is a good one. We're talking about IVR changes from like really high points to kind of the middle and then kind of how it takes a while for it to get back down to like more quote unquote normal levels. But quantifying kind of spike volatility, how long it takes to come back to kind of a neutral range. And then we have some really, really good charts of VIX post-COVID, like the last 5 years, and pre-COVID.
Oh, interesting.
And it's going to be an interesting look to just kind of quantify the market that we've been in for the last, handful of years here. It's cool.
And then we have live from the...
Yes.
Thank you.
We have live from the trade desk at around 9:20. Quentin in the house Q counting down all the top trending tickers over at Tasty Trade. And Glenn G Money on the Tasty FX side of business. And then, of course, because it is a terrific Tuesday at 10 o'clock, you got Liz and Jenny live from the SIBO. It's always electric when the ladies are live. And it's extra electric because the ladies are closing it down.
Yeah, ooh.
Yeah, ringing the closing bell today.
I saw Flip ring the closing bell like 2 or 3 days ago. He's an old trader from the floor, still down there. He's a broker and stuff like that. So Flip is still around. So be careful if you guys are going to Sirius. Flip will probably be there. Just let you know.
What am I supposed to do with that information?
I know. Well, you're going to be at Sirius. You be careful. You'll see Flip. You'll know who he is.
Okay. Is it just FLP or
FLP.
Okay.
Yep.
Right,
You'll know. You'll know.
That is our run of show for today. Do you want your daily dose? You have a choice. Him is my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Our
This
leading story.
just in.
Top story. Just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is April the 28th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
Yeah, you've got some. I'm going to name some that you might be interested in because you got positions in them.
Yeah.
Hood, BE, SoFi, if you care about that. Spot from yesterday. I know you'll talk about it, down 50. General Motors up. Bookings, ENPH, Starbucks, Visa.
Oh,
The big ones really come tomorrow. I mean, tomorrow after the
Sure.
close.
Yeah. Seagate,
Seagate
Visa.
Technologies, thank you.
Teradyne, another one of the chippies. SoFi tomorrow morning.
I mentioned
he
that.
said SoFi.
Car.
This is the week.
This is the week. Big week.
Well, we are just a couple days away from my favorite meme. It's gonna be May. No, but Bank of America does not recommend selling in May. While October does have the lowest average 6-month return, it is back end loaded to the August-October period, wrote strategists from the firm. And maybe the adage should be sell in August and buy Halloween.
Oh, please
That
stop.
doesn't even rhyme. I'm just saying, look. I'm just putting this. We're 2 days from May. It's a common thing, selling May, but like things have gotten, wonky. Things are weird in the markets, but we're still at all-time highs.
I don't know if I
So-
don't know how I like the suits telling you to buy at all-time highs into May. Like ignore the old adage.
Yeah,
We're at all-time highs. You need
Right.
them right
Oh,
now. Get your extra cash, Grandma.
So
If
when
we go
the
down, the
S&P
headline will be, remember what we told you.
When the S&P 500 returns 5% or greater in April, it averages a 2.58% return in May. This April, the S&P is up by 9%. So do with that what you will.
You got down 50 today by the dip?
Probably.
Probably
I mean,
is right.
volatility is only up 50 cents here.
That's the weird thing. It's held in there throughout all of this up move, but
Yeah, but
it
it's
is
not
weird.
I
With oil
still
over
think-
100.
I don't think you get a huge move today. I just think tomorrow is such a huge event that I just don't think anything is going to materialize right now.
So we go sideways till tomorrow?
Yeah,
Oh, what a tight doors.
yeah, I think we'll be around here.
Inside
We have-
day?
We're already down 50. So
Right.
it's a good-
Yesterday's
Okay.
expected move was closer to 25, 27 handles, something like that.
I wouldn't be
50.
shocked to see us down like 25 on the day, just like a nothing small little down move into tomorrow because you have FOMC of all the big earnings stocks coming up.
Right.
But I would like more than that. I hope we get more than that.
Well, billionaire Ray Dalio says you should have up to 15% of your money in gold because of uncertainty around the Iran war. The world is changing quickly with more transactions taking place away from the dollar system. Is he right?
Well, he's 2% wrong today. So gold is down 2%, silver's down 2 3/4.
He put them on sale for you. Say thank you.
So I appreciate it, Mr. Ray Dalio. I'm long gold, so I guess I'm like on that side. But
how do you decide your allocation?
That's a great question. I mean, this isn't like I'm not a long-term investor here, so mine is more from a trading perspective.
Sure, but it's a percentage of your net lick, though.
Yeah. So it's always small. I mean, a percent or two. I mean, we have a leverage account, so you have added leverage here. So it's a relatively small position.
It's a normal size position, like
normal size. Like it's not like I'm over allocating, but to the point of like the uncertainty and the Iran war and all that stuff, the move in gold has not reflected what he's saying here to this point. I mean, like you've had
Ray is pissed at whoever printed this. He said you have to wait until tomorrow, not today, when it's down 2% already. But we'll see.
But you've had everything. You've had massive inflation. You have total uncertainty in currencies and rates and all sorts of geopolitical events, wars. I mean, all the things that would point to why you would own gold. I don't think there's another.
Yeah, it is back to December where it rallied from here another 1,000 handles higher than this, going into January and February. Now we're back down in December, old highs.
But it's down 20% from the highs.
Yes.
I mean, so like that's. Yes. But like, what more do you think could influence an upward move in gold than like geopolitical?
Sure.
Yeah, you've got the perfect storm.
Yeah, it's
you would
everything.
think it would be higher than where it is.
Yeah.
What about silver?
Silver doing the same. Silver seems to be a little bit more volatile than gold. I bet if you overlaid the chart.
There you go. I'm following Mr. Dalio.
Oh.
Hey.
I'm adding to it, which is not good because it rallied like 20 handles. In the last like 15 minutes.
Mm-hmm. Don't worry, it's back down.
Yeah.
Yep.
Silver down $2, 73.53.
Oh, okay.
Yes.
Oil giant Shell has said that they have agreed to buy Canada's ARC Resources in a deal valued at $16.4 billion. The transaction is expected to boost Shell's long-term oil and gas production. ARC Resources is a company focused on the Montney Shale Basin in the Canadian province of British Columbia and Alberta. Let's talk about oil, because I know you're not trading Shell.
Little known fact, first job, Shell Answer Man.
I don't know what that is.
Yeah, what is that?
That's the gas station attendant. They used to be called the Shell Answer Man. You would pull up, and I would pump your gas for you, and I can't believe.
Don't they still do that in Jersey? Isn't that like
Jersey's the only place that does do it?
Yeah.
I think that by law you have to have a gas station attendant, or a Shell Answer Man if you work for Shell.
Yeah.
If you were Amoco, you were just a gas station attendant, but at Shell, you were the Shell Answer Man.
Wow.
Okay, cool story, Grandpa. What's going on in crude oil? USO, how's your USO?
All right, Grandpa, it's time for your nap.
Yeah, let's get you that insure.
Yeah.
I haven't had that yet. I'm thinking about it though.
It's got protein, vitamins, minerals. I don't know. USO, somebody help me.
USO. It's been a great trade. It'll be a great morning for us. We've been doing a lot of these call ratio type crab trades, just selling upside units against long calls out in June. So you have like kind of a upside ratio spread, but with a time component here. Playing into that short-term volatility in May is 83% versus June at 67%. I expect that to kind of widen out even further today with this pop in oil here, with oil trading at 100. We have upside butterflies in CL. We've been kind of trading for this pop in oil, so it should be a good session here. Diagonal spreads in XOM as well. That's been another one where people have been like, I don't want to buy oil, but like, what do I get into? Those stocks have moved pretty decently from the highs. I took one of them off yesterday. I have another one for today, so I'll probably take some off there too.
Very nice.
And it'd be interesting to see what OVX is on the opening. You would expect it to go much higher than where it closed, around 73. That's the volatility. It's not a tradable product, but it's the volatility on oil. You can see the IV rank may change. You also can see what the volatility of all the options are.
I think you get 80, maybe.
Think what?
I think you get 80.
Oh,
I think
that'd be 10 vol handles higher, which is significant.
Yeah.
I think you should get that if oil goes higher.
Yeah.
It'd be interesting.
But I think the spike oil volatility, I think that's kind of done with. Like, I don't think oil volatility is getting back to 120. I don't think oil itself is getting back to 120. I think like we've kind of digested it in this rate. Are you a little scared now?
It's been bid for this cycle.
The last 2 weeks, despite the market just going straight up.
Yes. Yeah. It's been bid for the last 4 or 5 days. I think you get a print again in there. Who knows?
Okay.
We're entering a new era in the realm of prediction markets. Both Kalshi and Polymarket are now planning perpetual crypto futures, one of the biggest and riskiest areas in crypto trading, largely restricted in the U.S. until now. The CFTC said early this year that it is working to bring the U.S. true perpetual derivatives. Other studies have come out saying that it's really only 3% of prediction market users that are driving the gains. There was some thought that maybe, prediction markets are the wisdom of the crowd, and it's like all these people that are making the markets, but it's really only 3% of the accounts that are actually moving the markets. But what are your thoughts on perpetual crypto?
1.5% of that 3% knows what's going to happen anyway.
Right.
Yeah, it's inside
Right.
information.
Really have 1.5% of the people.
Yeah, I think that'll widen out a little bit, but that's still like, the same thing as in financial markets, right? Like what? 90% of stocks are owned by the top 20% or whatever the number is.
Top 1%.
Yeah.
Whatever. I mean,
I
like it's
know.
always like that. It's always
Sure.
top heavy. Like,
Sure.
It's just, the wealth is concentrated. So it's, I don't know if I take too much from that, but
What about crypto?
the perps are crazy. The leverage aspect to it is nuts. I think it's a little dangerous. I mean,
So
when
you think it's dangerous? Like that's eye-opening to me.
yes.
Wow, okay.
I don't think we need to get much past like 2 or 3x.
Sure.
Like when you're getting into these 5 and 10x, like
They're
perps,
10x.
I believe so.
Okay, I don't know how they work.
I think you can almost like make it however you want.
Whatever you want. Oh, okay.
Because it's all
It's all made up. It's all predictive anyway.
Sure.
Well, it's all cash secured. So like if you have $1,000,
you won't for
and-
very long.
no, you won't. You won't go very far. That $1,000 loss on a 1x is $1,000. On a 10x product is $100.
Oh, okay.
So
Yeah.
like it just multiplies. Like it just moves where your out is.
Gotcha.
And so, yeah. The point being, I think it's a little much, but it's still hard to trade these products. And
Sure.
so, until like exchanges and regulatory bodies make it a little bit easier, you're going to have this stuff because it's the only way to really do it.
What Coin and Hood set to report their earnings after the bell. They're in the crypto space. So let's check in on what Bitcoin's doing and what you might do in Hood for earnings.
Bitcoin after going up to almost 80,000, 76.5, down 600 today. It sold off a little bit yesterday afternoon. Hood, on the other hand, is trading around 82, down about $2 or so. It has earnings after the market closes today. Expected move almost $8. So still room to go. $8 would be just about a 10% move in Hood, which is relatively high for an earnings trade, right?
Yeah. Did Bitcoin get 80K yesterday? No, it was like 500 short.
Yeah.
So close.
So close.
So
But yet so
close.
far.
Yeah. We did print 80K on 420. That could have been top tick.
Pershing Square is going to start trading today under the symbol PS. The Pershing Square IPO is the largest ever for a closed-end fund. Bill Ackman, the billionaire hedge fund manager, is expected to raise $5 billion. Over 85% of orders from institutional investors, $2.8 billion from cornerstone investors. The listing follows a previous IPO withdrawal in 2024 due to weak demand. So are you going to PS today?
Hell is coming.
Yeah.
The most classic soundbite of all time. That was when
And then,
Bill-
so I guess there's two symbols. So there's
said
going to be PS and then
remember.
PSUS. That's for Pershing Square USA. So that's
He
won't
called
be
into the
purchased.
show, so I got to give him some respect. But
Yeah.
what's this? Who the hell?
No,
are they?
he called in. I think it was like the literal bottom tick of COVID, and said, "Hell is coming."
Oh, yes.
And then we ripped
Yes.
100% from that point.
Yes.
It was unbelievable. It was just a classic. But he called in on CNBC, and it was like, hell is coming. Like, like get your gold and your guns and your ammo, like, and then
It's a party now.
Early, like by 6 or 7 years.
yeah, it was
Yeah.
a little quick.
All right. Well, so be on the lookout for that today. Do with that what you will. Hey, Qualcomm stock is up 7%. This was yesterday on a report that it is partnering with OpenAI to develop smartphone processing chips. Qualcomm shares did rise on the news.
144 this morning, down around 6. Easy come, easy go. Back
Yeah, because now there's more news about OpenAI, like dissolving some stuff, and so AMD is down pretty big this morning on that news.
Yeah,
on some of the other chip stocks.
The move in Qualcomm yesterday felt like it was finally the FOMO being realized, because a lot of these chip stocks have gone just straight parabolic. Qualcomm had some good news, obviously, pre-market. The stock was up $20 and ended the day down 5.
So the big
that's the usual kind of way.
So the big headline this morning, the breaking story, is a Wall Street Journal report. OpenAI missed internal revenue targets at the end of 2025, and that's what's sending a lot of their companion stocks lower.
Yeah, and then there was, yesterday the news was that OpenAI was going to make a phone. That was why Qualcomm was like up 20.
Right. So OpenAI is shaking up their partnership with Microsoft, and they're capping their rev share payments.
Yeah.
And so that news then came out this morning, and then we're getting more because again, they're a private company, so they don't have to disclose their
But all the moves, like when you look at Qualcomm, TSM was up $15 pre-market. It ended the day up like 1.
Yeah.
NVIDIA was the one where everybody kind of rushed into, and that was what bid the whole market up. I actually saw a stat that NVIDIA's move kept the market higher.
Probably.
Like the net
It's like 8 or 10% now of like the...
It's what our global economy is based on.
Yeah.
I mean, it's a 3% move on a $5 trillion company. So, you're talking about...
It has an effect.
It does have an effect.
What are you doing in Microsoft?
Microsoft's down this morning, down around 6, but even the S&Ps are down, 50 something.
Sure.
Nasdaq's down 300 and change.
I've net long delta in Microsoft.
Okay.
NVIDIA, on the other hand, is down around 7 or 8 or so to 216. From 216 to 209.
Yeah.
Laura, I'm going to a story I skipped here. Sorry for the discombobulation. But Intel is doing $6.5 billion bond sale, and that signals investor hope in turnaround. Intel is that girl. Not sure if that's true this morning. But they've been suffering from credit rating downgrades in recent years as profits deteriorated. But on Monday, bond investors signaled that they're buying into the company's turnaround story. What are you doing in Intel?
Government portfolio down around $3.50. Got a scoopy.
I know yesterday I was talking with Jamal. I was like, you know what? What can you remember any of the other names? And I'm thinking you've got, the metals company. And
MP.
And then I thought about MP. No, the other one is actually called the metals.
Oh, the metals company.
Yeah,
okay.
I think it's TMQ or TM.
Oh.
Is it TMC? Yeah, TMC, the metals company.
Okay.
It's at like $5, so you can't really do anything there. And then MP, and I was like, okay, I gotta get ahead of the curve.
Sure.
Get some long delta in MP, so I did that. In Intel, I have some short delta here. It's down $3. It's a good start.
Got to buy it on sale. Well, again, I pulled this headline yesterday, so not sure what is happening. But Micron and SanDisk continue to rally as demand for memory expected to persist. Melius Research said in a report that the demand for memory will remain strong through the end of the decade. They raised their rating on Micron to buy, noting it could gain another 41% over the next year. Be so for real, my guy. What are you doing in MU and SanDisk?
Don't have a position. FOMO.
MU has not had a downtick until this morning, down 21. Now, that doesn't give you the whole story. I mean, it started, it finished March about a month ago at $324. It closed at $524, up $200, down this morning about $20.
Yeah.
I'm not interested.
It's a tough one. I mean, these stocks are moving $40. You got to kind of just take a shot there.
Yeah.
Bat, I know you did a trade in Tesla yesterday for options.
I did.
Today, but it's kind of a wonky or unfortunate timing for you. But Tesla CEO Elon Musk registered over 300 million shares of Tesla tied to his 2018 compensation plan, according to SEC filings, and then that sent the shares like all over the place.
Yeah.
His cost basis is only like $23, so it's a great deal for him. But the shares were part of a 2018 pay plan that had been struck down by the Delaware Chancery Court.
Sounds very official.
Yes. But what's Tesla doing this morning?
Tesla was down around 12, 13 bucks when I put on my trade, which was leaning a little bit bullish, but it was one that I bought one call, so two closer calls. So it needs a slower move higher, not a fast move higher. So it was up around $2 or $3 on the day. Caught the move higher.
Yeah.
Didn't make any money on my trade though, because I had sold some extra premium. Now with the stock down around $5, it should be Fat City.
Nice.
We'll see.
Good job,
We'll see how it
you.
goes. Yeah. You lose a little bit more buying power. I showed how you can buy another option, like make it a crab trade, your classic crab trade. Gave you a little shout out there. Make it a classic crab trade, which would use significantly less buying power. I am a big dog. I opted not to do that, but that's neither here nor there.
Pinky up for me, Lord.
Okay.
The king.
Yeah, the king.
Hey, Spotify, fresh off of their earnings, announced yesterday that they're teaming up with Peloton to launch Global Fitness Content Hub, right? They're partnering with Peloton to launch a fitness category with more than 1,400 classes available for Spotify premium users globally. This is Spotify's first push into wellness as it looks to boost engagement and unlock new monetization between music, podcasts, and audiobooks.
Peloton, that's a shock to hear that as a partnership.
Right, in this modern year of 2026.
And I can't believe it's still a $2 billion company. Is it even a thing? Can you even get them anymore?
On Facebook Marketplace.
Yeah. Is anybody buying
The recurring billing aspect of the whole thing.
Oh, you just forget about
Yeah,
it. They just
that sucks.
ding you for $30 a month or $29.90.
$5.30. Well, you got to you got to see your workout person so that you can, work out with them.
Yeah.
$5.30 hanging in there, I guess. I mean, it got as low as $4.
Spotify is another tough one to trade though, too, because the market's
down
not
50.
Yeah, but it's probably right about the expected move. I mean, this is
Yes.
Yeah, it had about a $50 expected move. It's like right there. Just looking at the money May 1st straddle, but it's one where you got $2 or $3 wide bid ask spreads. Most people are going to want to do this to find risk, so your spreads are going to be, $1 at $12. They're just impossible to trade here.
Yep.
This is crazy. Flying air taxis took one step closer to being a reality above the skies of New York City. Joby Aviation, Joby, you ain't got no alibi. They completed the first ever point-to-point eVTOL, electric vertical takeoff and landing demo flight in New York City, signaling a turning point for urban air mobility. They are flying between JFK and Manhattan's existing heliport network. Uber's Blade operates out of there. But Bat, would you fly on this?
You've asked me this before. I ain't get my tuchus.
But you said the same thing about a self-driving car, and then
You're
you
100% correct, and I'm allowed to change my mind after I do it.
But I'm just saying, would you rather just sit in traffic?
Traffic is horrific.
It's a nightmare in New York.
It is a nightmare.
So,
do we have any idea what the cost is going to be?
I do not, but the Joby stock rose 3% yesterday on the news. But an Uber Blade, it's come down. It's like maybe $200, which if you've ever paid for an Uber to LaGuardia, you're like, okay, that's fair.
Is Uber Blade like a helicopter?
Yeah.
Oh, really?
Yeah. Or no, maybe I'm conflating it. So Blade is a company. I think maybe Blade is a separate company from
that
Uber.
Does this.
But they might have a partnership. I don't know. But Blade is a company, and you can today book a helicopter.
At $200 per seat. That's seems like it's enough. I mean, it's cheap enough to risk my life.
Right.
I think it's cheap enough to risk my life. It was $2,000.
Sure, not to go to the airport. Right. Yeah.
And $200. It's cheap enough to risk.
Right, because I took an Uber. Like when my parents and I went to New York City, I think our Uber was like $105, $110. Like
It competes.
there were three of us, but
it's in the ballpark.
Yeah.
Joby, can you trade it?
It takes 7 minutes, they say, instead of
that's amazing.
an hour.
Yeah.
Yeah, you get your whole life back.
if you make it.
Like it's nice.
Right.
Joby, can you trade it? No.
I mean, you could buy it or you could sell it. I don't know if I would trade the option.
It's at 926 right now.
Yeah.
Okay.
It is up a little bit.
So maybe you get in on the ground.
What do you think? Don't look.
Right.
Don't look. What do you think it's worth? Like
as a company, as a market cap?
Oh, these are like silly right now. I'll say 5 billion.
10? I don't know.
9. Very good. Very
9.
good. Yeah. Right.
I was
We're
like,
just talking about Peloton being worth what? 2 billion?
Sure.
Yeah.
I was like, take a made-up number and double it.
They probably got
flying.
4 of these things.
This is flying. So
No, but they got 4 of them probably.
Yeah.
I don't know how
Yeah.
many they got. I mean.
Yeah. But I would treat these like the space stocks because like they live and die. Like if there's a single accident, heaven forbid, then like that price is gonna right.
Yeah.
But if they could keep succeeding like they are, then the price just goes up. So
Shark just wrote me. He said for $100 he'll drive you and provide lunch at Randazzo's.
Oh, that's a
great
deal.
$100. That's a good one.
not bad.
You know,
Not
Now,
bad.
if you drive with Shark, though, he goes back and forth over the bridge a couple of times because he gets lost.
Okay,
So it'll
so
take
it's
a little
like-
bit longer. It'll take like 90 minutes instead of 60
so
minutes.
Shark, I want to go to
Couple wrong
L&B
answers.
Spumoni Gardens instead.
You could do that too.
And
You could do-
I want to stop at Junior's for a cheesecake. Thank you.
Ooh, Junior's a little bit out of the way.
You're out of the way. Nikki, I pulled this for you. This is Banana Pants. A casual sports bettor turned a $30 parlay into $1.98 million. Girl, what? It was at the Florida's Hard Rock Casino. And basically, he did a 6-leg parlay on various MLB players to hit home runs, and the parlay cashed. So it was Jazz Chisholm for the Yankees, shown here, Nick Kurtz for the Athletics, Riley Green for the Tigers, Kobe Mayo for the Orioles, Jesus Sanchez for the Blue Jays, and Bryce Harper for the Phillies.
Power to the people. I love it. $30, just let it ride. Let's do it.
But this is why you're going to have the public lose,
Yeah,
This wasn't a prediction market. This was just at a good old casino.
Yeah.
This is in Florida.
No, this is awesome.
Yeah, who goes a pull for him? But
I mean, sports books make all their money on the parlays, so
They
this
do.
Even though they lost this one, they won.
It was one of the
that's my
largest
point.
parlay
And
payouts
this headline's
at
just
this
gonna fuel
casino.
the flame.
Yeah. So
I did hit a Riley Green home run bat one time. I don't.
we're
I have
talking
no.
about you now.
I have no idea who he is, but we were in the golf league with my boys, and I was asking, one of my baseball guys. We were watching the game. I was like, "Who's going to hit a home run?" He says Riley Green, and we got it.
wow.
That was good, but it was like plus 150. It was like not good odds.
Good job.
Yeah.
I'm just calling this video teamwork makes the dream work. If you think you know where this is going, you have no idea. Watch this.
Oh man, there's no TP. Nate, can you pass some TP?
Oh, that's good.
Doug.
They're obviously a demo crew, but I did not.
That's cute.
That's pretty good.
That's cute.
Yeah,
That's
you
good.
always got to keep extra within reaching distance.
It's
Because I thought like a dog was gonna come in, with like toilet paper,
Oh, yeah,
just
that'd be
be like,
good.
like
Like a jerk.
I didn't.
like a
I didn't
service
have the
dog.
heavy machinery coming.
Right, yeah,
Not
like the
at all.
Kool-Aid
Not
man.
at
Like
all.
I did not see that coming.
Risking life and limb. Good job. We're not going to risk life and limb on this show. We're going to take a quick 90-second break and come back. We got more Tasty Live. We'll take a look back at yesterday. We got more to come. This is Tasty Live. Thank you.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nicky, we are back, son. You know what I means. We got more Tasty Live, a little bit of a look back at yesterday. Well, we got our first movement today, which we'll talk about after this segment and get to confirm and send. But right now, let's take a look at April 27th, index performance. You ready?
What are you feeling right now? How do you feel?
On the market?
Yeah.
I think you probably get one knee jerk back because that'll, you scare the children. Yeah, I mean, I've been putting on my first couple of bearish trades as of not like huge, a little bit early in the Russell. That's why I sold extra units in Nvidia. I wanted to be. It was down $10, $11. The market was rallying everywhere. I was just trying to pay a little something going into the move, but I didn't want to lean too long with a regular diagonal.
Yeah.
So I don't know.
I've been thinking the same way of like putting on long delta trades, so to speak, that have very little downside risk.
Right.
You'll participate if we grind higher.
Right.
But if we have a little bit of a
tail risk to the downside,
it won't, not even a tail risk, like a couple percent move to the downside, you'll be fine. Maybe even make a little bit.
You
of
can
money
react
you're
to
selling
with,
the extra
with
unit.
I've asked you numerous times on the show. How do you sit? And I go. I even said to you yesterday, how do you like you had 3 pages of positions and now you're down to half of that right now? I said it to you yesterday. So
yeah.
I mean, I don't know. You try to put trades onto. It's been very. We haven't moved
so
anywhere.
Orderly.
Yeah, we're in the middle of this most recent
of the last 5 days.
Yeah, right, exactly. The last week or so, a little bit more. We're right there. 5 to 8 trading days. We're right in the middle of it. We ain't low end. We ain't high end. Yeah. We're right there. 71.60 or so on ES is right in the middle. Maybe the higher end of the middle.
I would like this to continue a little bit because I think it's more bullish for the mega cap stocks that are reporting earnings after the close tomorrow.
Yes.
If they start with a little bit of weakness, like yesterday and into this last couple weeks where I've been leaning bullish, but not to this extent. It felt like you were getting everything to highs again. Like when Google reported earnings, when it was at 240 or 250 last time, blowout earnings and the stock opened down like $15. It rallied all the way back to basically unchanged on the day, but it was getting to that point in the market where it felt like we've had such an amazing rally that we've priced everything to perfection right here, and that there's just no possible way to kind of like move things higher. If you get a little bit of a pullback and we start at a lower point, it gives you a little bit of fear to kind of play into into earnings, like, oh, it is, we're finally going to get the downside move or whatever, and then you get the facer.
I actually think it's fairly interesting that we closed at all-time highs, and you got oil trading over 100 last night, trade up to 100, almost 102, and we're giving back yesterday.
Yeah.
I mean, that's all. I mean, so far. I mean, to me, that seems like it's a very resilient market, and we're probably, if we do go lower on, it's going to be on something that nobody sees at a left field kind of thing. I don't know.
Well, it seems like this move in oil. I didn't see like any attacks or anything last night. Did we do something?
No, but I mean, the headlines mean absolutely nothing for present price. I mean, it's all background noise. Anyway, let's look at yesterday. We can get to today.
Let's take a look at yesterday, give you an idea of what was happening in the markets there. So across the board, it was a very, very tight range. I think we had intraday maybe a 20-point range on the SPOOs.
Yeah, it was tight. It was boring.
It was boring.
Yeah.
Like I think including the overnight session, it ended up being like 32 or 35 points. But from the open, it was like a 20-point range with nothing happening. You had, pockets of the semiconductors going bigly to the upside, NVIDIA specifically. And then you had some like AMD was down. You had AMAT, which was down, ASML. Taiwan Semiconductor had a big reversal. It was a very mixed day for the semis, which have been kind of leading the charge to the upside. The mega cap stocks were kind of mixed as well. So it was just a very choppy, almost holiday type trading. I think we did less than 1 million contracts on the E-minis, because when Jamal and I got on, it was like 800,000 with an hour to go. Like nothing.
I guess the headline on the oil spike up, now you can figure that oil's probably made its highs for the day and is over, is the UAE, United Arab Emirates, leave OPEC to pursue new strategies. I guess that's what came out.
Okay.
So oil probably made its high for the day today, 101.80.
So then that's got to be good for a bounce then. I mean, your volatility is telling you that this is nothing.
That's correct. And volatility never lies. Fools you sometimes, but it never lies.
Next one, please, for the Mag 7. So NVIDIA, that was the story of the day, getting to new all-time highs. It's up $30 or $40 since the low here. Google was strong as well. You had a red to green move in Tesla. Meta has been kind of choppy around 675. Microsoft as well, around 425-ish. Amazon and Apple a little bit weaker. Apple was kind of the biggest mover of the group on the downside there.
Yep. Good job. I mean,
you add them all together and it's basically a scratch. It's like 0.5%.
Yeah, right. There you go. And that's your movement. And that was your boring day yesterday. Great.
In terms of sectors, you had metal and mining stocks move, and financials were relatively strong. Tech and semiconductors were holding their own, but you can see across the board, it was a pretty much nothing day here. Indicative of what the indices did, they basically went nowhere. So you kind of see a pretty flat day here.
The IV change in materials, I don't know what stocks that would be, but that's a huge move lower in volatility. Maybe that's why volatility was so, I don't know, non-player yesterday. I don't know.
Yeah, I don't know.
Yeah.
Could be a bad mark too. That's a big number.
Yeah. Utility volatility going higher. I don't know. Bonds haven't really moved. Well, I guess they're 113. I guess they have moved a point, so maybe that's there. Okay, next one, please.
Biggest movers to the upside. It's the story of the memory stocks, some of the kind of tertiary tech semiconductor names. So you got SanDisk in there, Micron. Those are the two big ones. NVIDIA as well. You got some of the Momo stocks like EchoStar. You have some of the healthcare names in there. A very mixed bag here. Seems like a momentum move for most of these stocks, as has been the case for the last couple weeks here. On the downside, it's kind of the same. Downside, not really our favorite stocks to trade, but you have some of the other tech names like your GLW, which had earnings this morning, I believe. Corning
Glass, GLW? GLW, I mean?
Yeah. So that's down 18 here.
You are right.
Coherent, which just got added to the S&P 500, SMCI, which was on the gainers list the day prior. Now on the other side, Teradyne, is a stock that's up like 500% in the last couple, in the last year.
And AMD's been up 1,000%.
AMD, I mean, the chip names are just flying in both directions here. You're seeing more of it reflected. Right?
AMD 317 down about, I'm going to round down for those that are getting
Thank you. I need it down.
Yeah, it's down 20. It's really down 18, but it's down 20.
Okay.
Yeah. Earnings May 5th.
Good. It's a good start.
Ivy rank is through the roof in there.
When we look at the heat map, you're going to see a very, very mixed day. I mean, this is an inconclusive as it gets here. Big names, NVIDIA obviously was the leader. Google was strong as well. Everything else kind of flat to small moves in either direction here. Energy really not moving. Healthcare names were kind of mixed there. You have financials up tiny. You talk about Citigroup up like 50 cents every day. That's the sort of stuff you're seeing there. So
yeah, Citigroup does not go down, and I have a little bit of short delta in there. It's actually up this morning about 80 cents.
There you go.
Go figure. Even the S&P's just rallied actually about 10 handles or so. We're going to talk about that and a lot more right after these messages. Finally got a little bit of a moving market this morning. We'll see what's going on. We'll be back in 90 seconds to talk all about it. 90 seconds, TT Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
First thing about tastytrade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Nicky, Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go to you, viewer emails, and more importantly, let's take a look at what's going on in the market here. Even the
Excuse me?
Even the S&Ps down 37. They were just down about 20 handles lower than that just a moment ago. NASDAQ down 290 or so. You can see a nice movement of around 80 handles on the even the S&Ps top to bottom last night, but they made new all-time highs and now sold off a little bit from there. Rallied back quite nicely, buying the dip again. Dow has been strong all day. It was on the lows that I saw it on the show, down up around 50. Now this is around the highs, although it was $50 higher than this last night. Russell down 13 and the NASDAQ down the most 1%, while everything else is down 0.5%, except the Dow that's higher. Volatility in by 35 cents. You even made a point. Volatility seems like hasn't moved much into this move. I would agree with you. Volatility's been pretty steady as of late. Bonds are down 10 to 113.12, but they're 10 handles off of their highs, 10 handles off of their lows, 10 handles off of their highs, down 10. A lot of 10s in there. But you remember we were talking about they were around 114 as a mean here. They're at the low end of the most recent move. Ivy rank of 20, starting to percolate a little bit, not a lot there. Bitcoin 76.7 after trading almost up to 80,000 about 24 to 48 hours ago. It's now about $3,000 lower than that.
I added one more micro silver. Those are very small. Bought one, and I sold a call spread in CL. My CL position is all over the place, but I've basically been legging into these upside butterflies. We've done the selling a put spread to buy a call spread as a Super Bowl. They've worked. I have an extra unit that I could sell on the upside. I just sold a $5 wide spread, which is $5,000 for 51 cents, but it's part of a butterfly. So like I'm legging into these butterflies into this up move. And I've legged out of some of the call spreads too. So I've
But you're legging into it from an offensive point of view.
Yes, it's not this position. The position I have.
You're building a little manster instead of taking the profits is what you're doing. You're trying to catch lightning in a bottle.
Yes, my home run lotto ticket is somewhere between 100 and 105. And there's a lot there. That would be a very good spot for me.
Very good.
Higher than that, and I start to miss out on some of it. Lower, and it's nothing.
Awesome.
We're right there.
Let's take a look at oil, gold, and silver right now. Oil up $3.50 to just under 100, got up to 101 and change, down to 96. It's up 3.5%. You can see here, oil has been bullish the last couple of days, been on a big run. I think this is probably the blow-off high, at least for the short period of time. That's my call on there. If it goes higher, I will look to sell a little bit of oil, maybe even for option trades today. We'll see how that goes. Gold down 93 to 4,600. It's about 35 handles off its lows, still down 2%. Silver's down a little bit more on a percentage basis, almost 2 in the order percent versus 2%. Silver 73.50 or so. You just bought some silver, adding to it right around here, maybe 10 cents higher. Net gas is down small. Net gas, you can see here, has not really caught itself a bid. Earnings tonight, you got Hood, BE, SoFi. Those are ones that you have stocks, you have positions in, Bookings, ENPH, Starbucks, Visa. Spotify down 50 for earnings last night. GM was up 3.5. Let's see what it's doing right now. I guess they now it's up maybe $1, maybe 50 cents.
Did it have earnings? It didn't have earnings.
It
did
have earnings
today before the market opened.
GM had earnings. They cashed their their tariff check maybe or something.
Oh, nice.
But sales were down 10%. Stock was up 3.5%. Stock was up $3.5. It's come down basically unchanged, up 50 cents.
Hey.
Confirm and send Tuesday, April 28th. I closed my GM bullish trade yesterday. Small winner.
How does
it went do it? Too far, too fast. Do you ever use services? They're talking about financial services here, son, okay? that tell you what the price of an option is relative to its theoretical value using things like historical volatility? Do you think those types of services offer any value?
I mean, I think it's cool to use like unusual whales or spot gamma. We've had them on the show too. Like those are interesting things to look at. I mean, I'm doing a 3-hour show, so I'm not using them right now. But yeah, if whatever helps you make a decision on a trade, I think is positive. Like if it helps you, build an assumption and you're comfortable with it and it works for you, who am I to say don't do it?
I agree with you 100%.
It's not my forte. Like I'm watching markets all day, and maybe it's confirmation bias of what I'm thinking.
Yeah, anything that gets you to click the button, you have an assumption, you did all your research, whatever that may mean, whether you looked at the strategy and you figure that this is the best strategy for what you think the directional market of that stock is going to go higher, lower, or neutral, and you have some sort of service. I don't pay a lot for it. I don't think it's worth a lot, but sure, go right ahead. Who cares? I mean, markets are one penny wide. I don't know what kind of value you're going to find, but
yeah, you can buy and sell it.
Sure,
same price.
Sure. Go ahead. Next one, please.
Feels like a lot more stocks are gapping higher or lower on Mondays. So you're getting big moves on Mondays. I would agree with that. Do you believe gaps are eventually filled? If so, would you use options to trade that or the underlying?
I mean,
you believe in the gap fill?
I mean, it's subjective. I mean, over an infinite period of time, 100%. Yeah. It'll be filled. Not 100%, 95%.
Well, the downside gaps, those are my favorite ones when they're like, we just filled this gap. And it's like, well, the stock dropped 30%. Unless you think the stock's going away, it has to fill the gap at some point.
That's my point. That's why I said 100%.
If the stock goes back up, it fills the gap.
Yeah, we've talked about in a shorter period of time, that 45-day time frame, which is the world that we live in. When a stock seems to gap up or gap down, it goes sideways for a period of time, usually that month-ish that we would put on position. So if volatility is high, maybe you want to do something. If you're leaning a little bit bullish, maybe it's a put spread. If you're leaning a little bit bearish, maybe it's a naked call spread or something that takes advantage of that sideways market. Maybe it's both sides, iron condor or a strangle. I mean, it's up to you. So for me, I live in a 45-day time frame. If you're asking me in 45 days, does it fill the gap? I don't think so. Maybe more like 60-40 against. But over a longer period of time, I'd say sure.
I enjoy the SPY gappers. The people that look at SPY and they're like, there's a gap in SPY. And I'm thinking to myself, the futures are trading.
Yes.
At a time. There's no gap there.
Yeah, right. Exactly. Yes. The futures are always trading. Good point.
Next one, please.
Mm-hmm.
Can you please explain the difference between IV rank and IV percentile, and which one should I be using?
I mean, I use IV rank. A lot of people use IV percentile. A lot of people look at both. So take it with a grain of salt. IV rank, a lot slower moving than IV percentile. IV percentile is going to move a lot faster. It's more just the percentage of where the implied volatility is, as opposed to the ranking of it from 0 to 100 intraday. Another one that says, hey, I like IVX 5-day change to look at what volatility is doing.
I look at just implied volatility.
Yeah, I mean,
IV rank is great.
Do something.
Yeah,
is my point. Don't just, hey, it looks high, hey, it looks low. Have some math behind it and run with it.
I think it's good to just, in general, understand implied volatility because it's the basis of everything you're doing with your options. And so IV rank just quantifies, and IV percentile quantifies how high or low current volatility is, and that's really the point here.
Yep.
They're not going to be hugely different. Not like you see a stock that has a 10 IV percentile and 100 rank. It's 100 versus 95.
Sure.
It's the same. They're the same. They're high.
Yep.
I'm telling you the same thing.
They certainly are.
Last one.
Yes. How can I, as a retail trader, use AI to help improve my trading? Go.
It's a great question. I mean, I think for research purposes, for data purposes, there are things you can do with AI, from correlations to biggest mover, sectors. If you're saying to yourself, I see a lot of people talking about memory stocks. Can you give me a list of 20 of the highest market cap memory stocks, it'll pump you out a list real quick. So that's the way I'm using it. I mean, I use it in various ways from like a research data perspective, but I think, that's kind of where it is. I don't ask AI what stocks I should buy today. I think that's not what it's going to do. But if you have an idea, it can certainly help you execute on ideas, or at least give you information to feed into whatever your idea is.
I was on the fence with AI not too long ago, because I think AI is relatively new, at least from my world. I know those who have been using it for years have kind of loved its usefulness. I think AI is going to have a big play on what moves on in the rest of trading to come. I think there's a lot of mechanical aspects that you could put in with AI.
It's a tool.
It's a tool, right?
Hugely powerful tool.
Yeah. And I think it's only going to get better, but we'll see. And then when everybody's looking at the same thing, it'll become less powerful. We'll take a quick 90-second break and come back. We got more Tasty Live with an option jive. Immediately found these messages from our sponsors. We'll be back in 90 seconds with Tasty Live. We don't have any sponsors. Or maybe the SIBO.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's option jive. Nicky, we are back, son, and it is time for an option jive as oil prints 100 again, up $4, 130 and change, and even the S&P is down 42. Volatility up 45 cents, is about 15 cents off its highs, but only up 2 1/4. Kind of a muted move. We'll see.
Very muted.
We'll see.
Ball's been sticky.
Yes, gold still down 100. That's a little over 2% move. Silver down 3 1/3% now.
Oh.
Bigger move, lower in silver.
Ouchie.
Ouchie wawa. Go.
But I'm on the side of Ray Dalio. I mean, great minds think alike.
You're including you and him together?
Yes.
All right. Good job out of you.
Probability of a stock to retrace back. We're talking about price. We're talking about positions here. Should be a good one. So it's obviously challenging to predict the direction of stocks within a particular time frame. At any given moment, though, the movement of a price can be random. So when we talk about price action over a data set, it's generally random. And from a market perspective, you have a slight skew to the upside. That's why the market is higher over any really period of time, is that you have an upwards drift to it. So the couple stocks that we're looking at here kind of set into a couple different boxes here. We're going to call the upward movement, the upward trend as NVIDIA, the downward trend as NVIDIA, as Rivian. I think we're having some
technical problems with the slides
here. And then we're bucketing these into three. So we're looking at upward trending stocks like an NVIDIA. We'll say a downward trending stock like Rivian. And then we'll say XLRE, which is our real estate ETF, as our kind of channel trading. You know, it's kind of in the middle of the range. So despite the recent growth in the market, there remains a chance of price correction or volatility that's always present. Traders who seek a neutral position without a specific direction in mind may be curious about the probability for a stock to retrace to a certain tight range or its original price. It goes to kind of the question of that we're getting on Confirm in Send is like, are gaps filled?
Fills, yes.
That's like kind of what we're talking about.
Do something about that.
Yeah. Is there some sort of tradability to a retracement in price? I would say there isn't, but there is in options because you're not just trading price. To gain an understanding of this, we conducted an analysis of SPY for each 45-day cycle and recorded the probability of the underlying price returning to its initial price point on a daily basis. And what you'll see here, which is not a shock to anybody, that as expected, the probability of a stock returning to its original price decreases quickly as the time passes. So if you have a $3 move today in a stock, it has a much higher probability of being back at its price tomorrow.
Yeah.
10 days from now or 20 days from now or 50 days from now, there is no significance to it being back at its price. There's no there's no quantifiable thing. Like it's obvious that, one day the stock goes up, the next day the stock goes down and you're back at the same price. That's fine. I can say that. You can use that as a reason to trade a stock price. Stock's up today, I'm betting it's going to be down tomorrow. It's not better than a 50-50 shot is what the point is I'm trying to make here. But as time passes, the reversion of price is inconclusive. There's not there's nothing you can kind of glean from this.
Yep.
Short term, sometimes you have, stock goes up 10, next day it's down 10, and it goes nowhere. That's more likely than the stock going up $10 today and then over 10 days going, sideways and then back down 10 days. That's $10. That's much more unlikely.
Perfect. I agree.
So on average, prices revert back to the original trading value twice within a period of 45 days. And we're talking about SPY here. So SPY, essentially what it's saying is that, within a 45-day window, you should, if you're just starting at point A, you should expect to have point A, be touched once or twice throughout that duration. And that just goes with choppiness on a 40-day window. However, the probability doubles if the positions are managed at 21 days. So when you're rolling positions, you're getting back to like a new mean. You're recentering that position. And so you're making it much more likely when you're rolling that a position kind of reverts back to where your range is. It goes to the point of like, if something goes too far in one direction and you roll it 21 days, you're putting yourself in a better position for that stock to come back to where you originally put your trade on.
Sure, and I know you're talking about SPY.
SPY is what I mean.
SPY here, which is a lot 500 different stocks, a lot smaller moves. You go to an AMD, it's had 10 gaps in the last 30 days. I mean, if you consider a gap, that space where it doesn't fill, it hasn't filled any of those. So, I mean, everything's subject to change. But if you're looking at an ETF with 500 different stocks, yeah, you're much more inclined to fill the gap than anything else, just because it's the probabilistic move.
And you have much more two-sided action.
Yes.
Like stocks are binary in that they're momentum driven, there's news, there's earnings, there's CEO changes, there's product changes, there's stock offerings, there's all sorts of things that kind of can move stocks in a binary nature, whereas something like an ETF like SPY, you expect to see much more range bound price movement.
Correct.
Which is what this is kind of telling you.
Correct. And that's why the volatility is typically lower in an SPY than it would be in an AMD or some other NVIDIA or whatever else you're looking at.
So reverting to the exact initial price point may seem too good to be true for neutral traders. What about tight swing ranges in between two strikes? So when we trade neutral strategies, you're playing for this kind of choppy sideways, back and forth sort of trade. Based on our observations, the typical difference between strike prices and the underlying price for a 45-day one standard deviation strangle is approximately 4% on the upside to 12% on the downside. So this is telling you that obviously there's put skew. Your calls are going to be way closer to at the money. So what we're going to examine is the likelihood of the underlying price remaining within 1, 2, or 3% of the stock price at 21 days to expiration on these positions. So basically, what is the probability of the price remaining in between your two strikes throughout? And what would you guess this to be? So you're doing a one standard deviation strangle. What's the probability that it, and let's just call it 4% on either side. What's the probability that it stays within 3% on either side? This should be
70 or more?
No, the one standard deviation is.
Oh, 6. Yeah, so that's what you said, one standard deviation, isn't it?
Yeah. One standard deviation is going to be 70.
I'm going a little bit higher than this.
What's inside slightly?
Oh, what's inside slightly?
Yeah, one standard deviation.
And I would think that it's going to be even higher than that, right? I mean, am I thinking from the other side?
No, like the straddle. Basically, what we're quantifying here is that what's the probability that the stock stays in the straddle range?
80% of the time? I mean, I don't know. More?
We're gonna see here.
Okay, go ahead.
You're right there. You're right there.
Okay.
So closing positions at 21 days has a significantly higher chance of the stock.
Okay, 68%. I mean, when I said 70.
Yeah.
I mean, I was just giving it a little bit more room.
You're perfect.
Okay.
I was going for the straddle of like 50-50. Like, like it is exactly what it is.
Yeah.
So the one standard deviation, it ends up being 68%. The two.
I didn't think it would be on the exact number. I thought that volatility would be a little bit exaggerated. That's why I went to 70%.
Yeah. You got it.
Mm-hmm. I tried.
So the probabilities play out here. The probability increases though when you roll and manage trades at 21 days because you're recentering that position. You're moving that position further out in time, giving yourself that extra time as well on that trade.
And I remember somebody else who be mad at me when I was off by 2%. Go ahead. Really morphing into some real piece of work. Takeaways. Go ahead.
No, I wasn't mad. I was going for the straddle. I wanted the straddle price.
Gotcha.
50.
Gotcha.
Managing positions at 21 days has twice the chance of a stock price returning to its initial price point compared to holding to expiration. What this tells you is that adding time allows you to capture more of that two-sided price movement in SPY specifically. Exiting a position before expiration increases the probability of the stock remaining within a narrow range, which is beneficial for premium sellers.
Boom.
Even
the S&P is down 38, NASDAQ down 280. That's a 1% move. Everything else is down 0.5%. The Dow is the only outlier, up 114. Volatility hasn't moved, up 45 cents. Bonds have sold off a little bit, 113.10, down 12 ticks. I mean, they've sold off a little bit from the last time I quoted them is what I mean. Oil's under 100, up $3.40. Gold is down just about 100 at 45.80. That's a 2% move. Silver down 3.5%. Has not caught itself a bid or anything else like that. We'll take a quick 90-second break. We'll come back. We got the opening bell next, the moment you've been waiting for. We'll be back in 90 seconds.
Turn on the machine.
Turn those machines back on.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son, and we got about 2 minutes before the market opens. Even the S&P is sitting down 38, NASDAQ down 295, Russell down 14, Dow, the Bucker up 100. Volatility hanging in there, up 40 cents at 20.45. What's the chance we sit for the rest of the day?
That's kind of what I was thinking. I thought if we ended the day down 25 to 30, it's like a nothing day going into tomorrow. Like I don't think the market's going to decide on anything until tomorrow. You know, you're not getting like a decisive
some more earnings coming out on Wednesday.
Yeah, maybe you get a little bit of extra vol pumped in, but I don't think there's a big move.
You got Amazon coming out on the 29th. Today's the 28th, the 29th after the close.
Amazon, Meta, Google. Apple is on Thursday.
I think Microsoft
is tomorrow. I mean, it's the whole market.
Yeah, it's the whole market. So why go anywhere before then? God, I don't know.
I think it's going to be another grind of a day. I mean, maybe we get a little bit of downside.
Yeah. Well, keep an eye on volatility. See what that does. If it rallies, maybe we get a little bit more movement to the downside. If it sells off, maybe we don't get that movement. Bonds are down 11.
I would like to have it stay down. Like,
you would like the market to stay down.
The buying the dip has just been too easy. It's been too. It's
Since April
been a lot
Fools,
of
I'm going to
math.
call this the April Fools rally.
Yeah.
Really.
Seriously.
Since right there, that's kind of where we made the lows.
Yeah.
Interesting market indeed. We're going to get your opening bell in just a second. As even the S&Ps print about as high as I've seen them, down 34.
I think it sets up a little bit better into the big tech earnings if there's a little bit of fear. Like I think that helps.
It sets up to a little bit of fear that we go higher. Is that what you're saying?
fear as in like volatility gets a little bit higher, markets are a little bit lower. I think it's good if there's fear in the market in general into those earnings because it allows you to kind of blow off that fear. When everything's at all-time highs and it's moving $8, $10, $15, $20 a day, I don't think that's good for these earnings.
I agree.
You know, it opens up more downside.
The earnings
than
are
upside.
typically bullish, right? I mean, but I think if you get past
Do you want bullish things at all-time highs, or do you want bullish?
We're 48 hours away for some good two-sided action, is what you're saying.
Maybe. I hope so.
Oil sitting there right at 199.70. Gold down 100. Silver down 250. Nat gas hasn't moved down almost 2 cents. Let's take a look at what's going on in the rest of the market here. I'll click on net change and go from low to high here. Spot down 54. That had earnings this morning. SanDisk down 51. That's a decent sized move, almost 4.5% move in SanDisk. Has earnings on the 30th. MU down $24. SMH down $20. And I've been leaning.
Huge move. I mean, that thing is moving like crazy.
It is moving like crazy. Oh, there's your gap fill.
Oh,
there you go. There you go. See that? See, I just talked about that. AMD down 17. I think that's got to help most people. TSM down 18. BE, which has earnings after the market closes today, down $12, a 5% move to 222. Doesn't tell you the whole story here. As you can see, it has done nothing but rally. What'd you do?
I closed out the other XOM diagonal that I had. Stock's up $3 and change, so I took a couple bucks out of that. It was good trade. Just trying to continue taking stuff off the table,
which you've been doing for quite some time now, right?
Mm-hmm.
I mean, that's been the modus operandi of what's going on here.
Yeah.
Volatility up 45 cents, about 15 cents off of its highs. Even the S&Ps down 40. Let's see what's keeping us higher, because the downside looked pretty good. I mean, it looked ominous. On the upside, a little bit more muted. Costco up $8.5. Lilly doing the same. USO, you would imagine, up with oil up about 3.5%, as oil is up around 3.5%. CRM up $4. ExxonMobil and a lot of the other oil-related stocks. Oh, ServiceNow, look at that, rearing its head, 92.
Wow.
Up 2.25. Apple
Coming for the pigs.
Apple's trying to save the market here, up $2 after being weak yesterday. Think about that. Weak yesterday, strong today. What gives?
What gives is right.
Mm-hmm. What gives? Give me some more. What's going on?
Oh, my AMD position is just such a mess. I mean, I'm getting back a lot today, but it's still a mess.
AMD?
Yeah.
I could see
The
that.
$15 down move is just a small reprieve.
I understand. I understand.
It's
I
like,
really do.
You know, you're looking at your positions and you're like, shoot, this is not enough.
I get it.
But it's something.
I get it. You wanted something, you got it.
Yeah. I think I got to do something here.
A little bit more in the market. Even the S&P is down 37. A limited amount of trades from you so far. I don't blame you.
I'm working on it.
I know.
I'm just trying to figure out how I'm going to.
Go ahead. What'd you do there? Tesla down $2. Not enough for my position. It's about a scratch right now. It was down around 30 cents yesterday. It's about a scratch right now. NVIDIA down $6 and change. I had a little bit of short delta in there. Still a little bit away. I'm basically scratch after NVIDIA had its big move higher. Nike up 40 cents. You go, big dog.
Woo!
Citigroup up $1.20. That stock never goes lower. Amazon down by around $3.50. I got a little bit of short delta in there. Not a ton. That's all I got, son. Even the S&P's down 35. The dip does seem like it's being bought, although volatility hasn't moved.
Okay.
Right?
Yes.
Taking a look across the board here at what's going on. I think all eyes. I get more emails about oil right now as it percolates. What do you think about oil?
I think 100 is probably our spot. Yeah. I mean, I don't think volatility is going to have the explosion that it did.
We'll take a look at oil volatility in just a quick second. Trying to look across the board here at the rest of my positions to see what's going on here. Not the glory down move that I was thinking about, at least on the opening here. I thought if we made lows, we would make them on the opening. Volatility hasn't moved. Let's see, OVX CGI.
So I rolled my entire. So I had
volatility in oil hasn't moved.
No, it hasn't moved. I just don't think it. I don't think oil really is that big of a deal anymore. I mean, I just think
seriously?
It's been the what?
I said, oh, come on. Seriously? You don't think it's that big of a deal anymore?
What do you mean? You do?
Well, I mean, I think it has a bearing on the market. I don't.
For sure.
Okay.
I mean, I just think that we've priced.
I think the move is over to the upside. I think I said the high, I think, is in for the day.
Yeah, but is there a big difference between 95 oil and 100 oil? It's still high. It's the same level of high.
Yeah. Yeah. Well, from a trading point of view, it's $5,000. Yeah.
Yeah. No.
Yeah. Yeah. Sure. Dow is only up 100. Even the S&Ps are down 34. I mentioned that because even the S&Ps have rallied. Nasdaq's rallied also. It's only down 1%. It's down 1.5%. Let's see how the market.
I took off my CRM. We had a call diagonal there. I think that was from like a fast market or something like that. So I took a couple bucks out of that. I closed my. So I adjusted my entire AMD position. So I had put diagonal spreads. I sold extra puts in May. I took the whole position and I had a deep in the money call that was basically short stock. I took the whole.
I don't think you're alone with this. I got the emails about AMD with people.
100%. And I got some money back with the move today on the deep in the money calls. The puts didn't move all that much. I had put diagonal spreads that gave me a couple bucks back. Now is decision time. I took the position. I rolled to June. I rolled up the call.
So that was your decision, right? You took it, from May to June?
From May to June.
Yeah, you hung in there.
I hung in there. I waited for this.
Yeah, all right.
I mean, I wish it was $40 to the downside.
Instead of $15.
Instead of 15, but it was down yesterday too. I mean, it's come off $30 or $40 from the highs.
You had not a similar position, much smaller one, but you had a similar thing yesterday where the stock was rallying. It sold off a little bit. You took it off. You took like a $2 loser or something like that, as opposed to rolling it. This year
in AMAT.
Okay, in AMAT. This you're choosing to roll. I mean, it's a subjective thing.
Yeah, but I sold two puts further out of the money, like the 270 strike. 270. I rolled the call up and out because I wanted to sell some extrinsic value. So I sold the 300 strike call. I rolled it up and out, which is about a 66 delta call. I sold two of the 270 puts against it. So I rolled to a net 20 delta short position. I just flattened the delta a little bit, playing the vol. Hopefully we chop around here. You have earnings coming up, which is spooky. But
spooky scary.
Yeah. I got to a much more manageable position and freed up a ton of capital doing that. Because you're rolling to a less deep in the money option, taking off some units, you're taking off the
becomes less stock like, which is really what you were sitting with.
Yes.
Yeah, I agree.
I had a big wide put diagonal spread, like that was worth a lot, that was holding buying power because it's capital on the table.
And another thing is, when people get stuck in like an AMD, you don't have to make the money back in AMD.
Or right now.
Right.
You're not going to get it right now.
Yep.
Like that was as good of a move as you could reasonably expect
over the last 2 days. Right?
Yeah.
Yeah.
Just looking at other stuff.
Gold still down 100. Silver catching a little bit of a bid. It's down 3%. It was down 3.5%. Even the S&Ps down 31. They were down 10 handles lower than that a moment ago.
Buy this dip, aren't they?
They certainly are. Seems like it right now. Volatility is only up 35 cents. So volatility pointing the way that it seems like much to do about nothing.
So my pseudo long, no risk downside trades like this 1/3 ratio that I did in Dell. I did a $1.50 credit. I just bought it back at a penny credit. I made like $150 on a downside move on it just because your long option is closer at the money. I mean, I was selling a lot of upside risk. So, I certainly had a lot of risk on. But again, just kind of lightening up the positions here.
Good job. Good job. All right. You ready to take
I've been scalping out of upside calls in USO. I think I'm going to sell a couple more too.
USO. Yeah, you bought a call spread, right, to help your butterfly?
I did. I've done diagonals. I'm doing like these crab trades, but I'm basically one long option to two shorts in May. Far out of the money. My long options are right at the money. 125, 130, 135, 140. I'm just doing them as USO has risen. I'm selling 2 to 3 units, 170, 165-ish. Tail upside risk. So your risk on the position as a whole is probably around like USO 200. But I'm scalping these calls because I've sold them at $2. I bought them back at 125, 150-ish, and I'm just kind of scalping around that long option that's further out in June because I like USO here. If you think oil is staying somewhat bid for a period of time, it's going to stay elevated. USO is going to stay elevated. Agreed.
I knew Apple was up in the Dow. I didn't know what else was up in the Dow, so I took a look. Goldman Sachs was just up $5, up $4, because the Dow's the only one that's up today. Coke is up $4. Amgen, Travelers up around $4. CRM up a couple of bucks and change. And the downside, you really got Caterpillar and NVIDIA. NVIDIA down 4.5%. Amazon, which comes out with earnings tomorrow after the close, with Microsoft up both a little bit lower too. A little bit of a tug of war in the Dow, but obviously the way it's weighted, Goldman Sachs is a big part of that.
Yeah, they're going to buy this dip. I mean, we're going to be
even the S&P down 26.
We're going to be flat
so far. You are correct. Oh, please, baby cheeses, no. Let's take a quick 90-second break and come back with our own baby cheeses. That's right. I'm talking about Mr. Chris Vecchio coming in. Let me explain with Chris. We'll be back in 90 seconds. Let's Tasty Live.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right. What comes up next? My man, Mr. Chris Becchio, how are you? Let me explain.
What's up, brother?
Explain to me. Pew, 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 pew.
The clown music you were threatening to bring me in with.
No, Chris.
No, don't be like that. Don't be like that. Don't go away mad. Just go away. What do you got? Okay. What do you got for us? What do you got for us?
This market reversal this morning is pretty interesting. Semiconductors, $10 off the low in the last 15 minutes in SMH. Micron's ripping, Intel's ripping, but maybe for good reason, right? This is a slow market to start this week with earnings really the bellwether of it all tomorrow and Thursday. Amazon, Microsoft, we just name them all. Mm-hmm. It's not the Fed meeting that matters the most for what it's worth. When you look at the S&P 500's pricing in the market right now, the expected move through the end of the day tomorrow, 4 p.m. Eastern close, compared to the volatility that's priced in through Thursday's close, it's clear that we care more about the earnings after hours than we do for the Fed tomorrow. But the earnings season has been pretty good so far, and I think it's getting a little misread if you only look at the index level right now. We can go over to FactSet and their weekly report, which is showing that there's exceptional breadth in the beats right now. 80% of companies are coming in higher above their EPS and revenue estimates right now, and the magnitude of the beats is running well above the historical averages. So it's not just mega cap tech names that are producing the strong earnings results so far, even though that these are the companies holding up the market and driving the rally in recent sessions. Double digits earning growth for the sixth straight quarter. You can't shake a stick at that. 15% blended earnings growth rate, mind you. We started off the quarter around 12%. So things are just getting better as time moves on here. I find it really fascinating that the S&P 500 is kind of re-anchored to its fundamentals, which are getting stronger. So you have earnings acting as a bit of a floor right now, whereas volatility is a transmission mechanism only in the short term to produce these little bit of pullbacks right now, especially as the Iran war looks like it's faded as a particular problem here. Mm-hmm. I'm curious, Tony, though, right now, given this earnings backdrop where it's strong growth, strong beats, how do you place that in the grand scheme of things of a macro backdrop that seemingly has faded, but oil is at 100 today, so it clearly hasn't gone away? Do you keep whistling past the graveyard as a stock trader?
Yeah, I don't know. That we've been talking about this all morning. That seems to be the question. I mean, every dip has been bought in the equity market since the beginning of April for the last month or so. We got earnings coming in a couple of days. I mean, if we're down 40 handles today, we're down 30 right now in the E-mini S&P.
It's nothing.
It's nothing.
Nothing. It's one day.
And I probably think that that's where we go. If we rally from here and we get the earnings coming out in, basically the rest of the Mag 7 stocks, the bulk of them coming out, and those are good, that's probably your blow off top for the short period of time. Mm-hmm. So I'm trying to write it all up here. Yeah. I mean, oil at 100, trading all the way up to 102 and have little effect on equity volatility and little effect on the market. is a little
oil volatility
weird to me.
is down right now.
Right. I said that.
Okay, Tony, it is weird.
Yeah.
It is weird, right? Can we admit that? Like, this is something seems a little off. And when you look at what's going on with gold still falling and oil rallying, you kind of wonder, like, are stock traders not getting the picture, or have earnings just been that good that they've raised the floor on the stock market so much that we can just absorb these body blows? And why on earth are you going to get out of stocks if the market's giving you tens of hundreds of billions of dollars and upside revenue surprises?
Yeah, but we had that huge V bottom move already. I mean, I thought today we would get a rally a little bit. I didn't think we would go to down 30, I guess
it's exactly where we thought.
Far enough. Yeah, I didn't think we would go much more than this. Yeah. And I think we'd see some weakness in the market. I'm looking at volatility. It hasn't moved that much. It's only up 30 cents. I'm a little perplexed. Like, I'm a little bit bullish on gold. I'm a little bit bullish on silver as my son has nibbled on there a little bit. I think we could use a little two-sided action here. The only problem is volatility is just staying sideways. It hasn't shown me anything one way or the other. So I think we're a day or two early on any down move. I like oil. I think the highs are in for the day, for sure, meaning subject to change, but that's the way I would play it. I'm going to play that for option trades today. Get a little bearish on oil. I don't know. I think the market needs a breather here, at least for a short period of time. I don't think it's going anywhere the downside, but I'm more of a seller than a buyer.
We have a great market measure coming up where we look at volatility, and the VIX average over the last 5 years is significantly higher than what our average is over the period of time, over the period of time prior to the COVID new world that we have here.
Right.
And sitting at 20, or about the VIX at 1850 right now, the volatility futures at 20, we are at like the lower range of volatility. Like, this volatility doesn't get much lower than this, or hasn't in the last 5 years. And so it spooks me a little bit that every day it's buy the dip. It seems, after watching what transpired all of April, where nobody wanted to buy the dip, and then all of a sudden everybody wants to buy the dip, that's usually
it gets crowded.
That usually is when the crowded trade comes in. And we were looking at, like you mentioned, semiconductors. We talked about it this morning. Like, Qualcomm up $20 pre-market yesterday, TSM up $15, $20, blasting to new highs. And at the end of the day, TSM was basically unchanged. Qualcomm was down $5.
Right.
That's usually like the spot where it's like you get everybody that's late to the party, and now they're down 3 or 4%. If it's not bullish moving forward, those are weak hands, it feels like. Like that's where you see a little bit of risk, or that's where I see risk. People that are now buying NVIDIA at 215 because we're going to 240, all of a sudden we're back at 200, and are they going to hold that bag? I don't know. That's the question. And that's, one day of price action.
It is one day of price action.
It feels like we're kind of all on the same page in terms of this being an environment where surface level it looks easy, but as we're making our way through the calendar, it's becoming a little bit more difficult. I'm curious, Nick, with these macro headlines creating these spikes in volatility, even with this backdrop of strong earnings, do you find that premium selling is still attractive, or because of this macro overlay and how it kind of feels like, what are we doing up here given what's happening elsewhere in the market? Is there right now in the very short term, ahead of the Fed tomorrow, ahead of earnings, to stay structurally short vol?
I think I'm as light as I've been in quite some time.
I was going to say, with positions.
I'm as light as I've been. And the stuff that I'm putting on is FOMO-y upside, like I did in Dell, the 1/3 call ratio spread, where if the stock goes up another 2, 3, 4%, I'll make a couple bucks. If it goes down 4%, I might make, $1 or something like that. But my downside risk is very limited. I'm selling upside kind of tail risk. I'm doing that in USO. I'm doing that in pretty much all these stocks that have just gone straight back to all-time highs. NVIDIA, Amazon. I did this into earnings, like a 1/2 crab trade like type position where you're selling units and upside volatility, but kind of hedged via longer duration long options. Like that's how I'm setting up here. I don't like the idea of selling the tail risk short vol on either side right now. Like I need something, you got to be somewhat directional, but I'm not like full boat directional here. It's got to be a little bit. And that's where my positions are. I mean, I'm probably 20% of the allocation I was a month ago. It's small.
Tony, I'm assuming
I'm in the same position. I'm light on positions, at a little bit of short delta on everything I've done on option trades today. Not a ton, kind of omnidirectional. I'm not really benefiting from this move lower this morning. I'm short a little bit of NVIDIA, but I'm short at a little bit lower prices at down $5 right
Which is another problem because like it was the same thing with AMD where it's like you're short it and the move today is great, but it's like it gives you 1 day back.
Right. It's not enough. Yeah. It's not enough. Citigroup, I'm short. It's up today. So paying the price there. I know it's tough.
Yeah.
It's tough being a pimp.
Thanks. Okay.
Thank you, Chris, for allowing him that.
Even the S&P down 40.
Just kind of rounding out this volatility conversation right now. Maybe I'm getting a different sense than you guys. Are you seeing anything in the volatility surface that tells you the market is pricing earnings stability differently than macro risk, or are you seeing anything to suggest that the Iran war is completely out of the equation? Because it feels like the market has totally eliminated that as even a catalyst beyond the occasional Truth Social post.
It's certainly muted, right? I mean, the moves are muted by every post that gets put out there now. I mean, I don't know about directional. I mean, volatility finally is up 50 cents right now. I mean, the S&P is down 40.
It's still in contango, though.
It's still in contango, but at least it's moved 10 cents. It was contracting by 10 cents. Yeah. So maybe you get a little bit more movement to the downside. Yeah. I don't know.
I think volatility has stayed a little bit elevated as well, just because I think the Iran stuff from a market perspective has pretty much been baked in and is done with. I think there's still that one tail, boots on the ground, long-term war, something like that where you have that tail sort of event hanging over the market. But, lobbing a couple bombs over there and oil staying high, I think that's kind of been priced into the market. Like, I think the market is just saying, what, oil's high, but it doesn't matter because we have these AI names, we have the tech earnings, the money printer, we're fine. I think that's kind of where we are. Am I crazy?
It's really,
yeah.
I don't think so. I mean, Tony, I was running the numbers over the weekend. S&P 500 earnings probably impacted by the war directly by around 0.2%. The knock-on effect because of higher energy prices could impact NASDAQ earnings by maybe up to 1%. So let's just we'll call it 1.5% total impact on margins. Okay. Over the past year, tech stocks have seen their net profit margins go up from 25% to north of 29% from Q1 25 to Q1 26. So even if you factor in the higher energy costs right now, the way that these companies are growing, they're still having positive net margin growth, net profit margin growth, no matter what.
Yeah.
So I mean, like that, there is a reality here where if you get through the war and the impact is short term, dare I say transitory in nature, the revenue numbers and the earnings figures are just so dang good that it's going to be tough for a lot of institutional investors who got out of the market in late March and have been chasing for the better part of the past month to stay on the sidelines. You can't miss the rally and not be long if it's a bull market.
Yeah, I feel like there's a lot of can't miss moves right now.
Last time we spoke was 2 weeks ago, and that was 200 points ago in stocks, and we were talking about the psychology of having to chase.
Yeah.
So I mean, there is evidence that it's there. Even as volumes die down, people are picking up the pieces because they were not there. We were not there for the duration of most of the move in April.
I don't know if I call myself we, but that's fair.
Well, I have to be honest. I'm a we. You're not a we.
Well,
you're a they. You were telling me people like you were like, Chris, just get long. Stop thinking. Get long. Don't do macro. Macro's bad. Don't get long.
I mean, the worst thing you can do sometimes is think too much.
Yeah.
I mean, I always say trade what's in front of you, and right now volatility is not upticking. So who cares?
That is so noteworthy all week long. And Tony, I know that you read my morning note religiously.
I do.
But, I keep the VIX note for the past several days has been VIX is opening higher, but it's staying below 20 on this gap. It's noteworthy. And still, even today, you're not getting through that psychologically significant, 20 handle VIX. That's meaningful, especially as we get into the earnings the next few days. And, Nick, I know that you're remiss. This might be Powell's last Fed meeting.
It's very sad. It's very sad.
And meanwhile, Dow is unchanged, up 5. Maybe you want to cover those. I mean, you sold them when they were up like 100 or 80, 70, something like that. That's about as low as the Dow has been all day. Volatility up 40 cents.
I'll put an order in. Maybe if we see them go red here. Do you think there's anything that could happen with these Mag 7 earnings that is not bullish?
Oh, man, this bull talk is really starting.
I know. That's what I'm saying. That's what I'm saying. But, is it anything other than just the prices that we're seeing on these assets, which are basically at all-time highs? What could move the stocks lower? Because I continue to think it's buy the rumor, sell the news, because we're back at highs. That's why I would rather see a decent down move today where stuff is not at all-time highs, where you could make a case, I'm buying it a little bit cheaper than where it was at all-time highs. Right now, everything's basically at all-time highs. What's the downside risk on these stocks, Chris, if you think there is any?
Sure. So last week when we were getting these, over the past few weeks when we were getting these tech earnings, one thing that has stood out to me relative to past quarters has been the market rewarding companies that have been building out enough AI infrastructure to meet what's been clear, very rapid growing demand. But then there was this report that came out overnight from the Wall Street Journal talking about how OpenAI is having a little bit of an internal panic because they're missing their revenue figures, they're missing their user growth numbers, and they're concerned that given the amount of money that they've basically promised to pay back to investors, that they're not going to be able to reach these targets. And so all of a sudden, we're maybe going into tomorrow's mega cap tech earnings with a new lens. It's, what if you're a company that's building out your infrastructure too much? We go back to that mindset from the last quarter. It's like, that's a really big CapEx number. Sucks for you. And that hasn't been the case so far. But OpenAI this news may be providing a new lens where it's like, okay, Microsoft, you're making all this money and you're planning to spend all this money more, but you're spending far too much relative to how much you've made on your investments thus far. And so, nice bounce you have there. Let's go back to the lows. Let's put Oracle back into the blender, yada, yada, yada. I mean, that to me is the risk, that there's been a slight narrative shift because of this OpenAI news. And you go back to, what have you done for me lately? You're spending far too much of our money and you don't have anything to prove to it that you're monetizing demand in the manner that we thought you would.
You think it's going to matter as a group or per stock? Like
idiosyncratic.
Okay.
Right. The Google, there's two flywheels here. You have Google,
Amazon
with their
now.
System.
Amazon's in that group.
Google, Amazon, Broadcom with the TPUs, and then you have your Oracles, your NVIDIA, your Microsoft. Those are on the OpenAI side of the flywheel, with your GPUs, right? So the GPU conversation is completely different. You also on the Google side, right? They're not taking outside money in to fund these projects. They're just making buku bucks and then recycling the money, the revenues back into R&D. Whereas OpenAI, Oracle, they're getting outside money to help, and therefore, if you don't, what happens? Debt covenants kick in. Not a good thing. So personally, if Microsoft, to me, it has the highest volatility in the board. I know that's where a lot of people are looking. I know that's where Jamal's been looking, given the bounce that we've had in recent days. But that also seems like it's the most vulnerable of the names given tomorrow. And then, Apple to me is the funniest one. How many times throughout the past year have we heard Apple's not doing enough for AI? Stock is down while everything else rallies. AI's overcooked. And guess what? Apple didn't waste the money. Hey,
right.
Apple's up all in. So a few things could be changing here the next few days. Let's not ignore it.
Yeah, the narrative switches very, very quickly.
It does switch very, very quickly, and probably too quick for most.
Yeah. So overall, after this week, What is Monday and into next week for you, Chris? Is it a buy the rumor, sell the news, or is it a buy now because you're going to be buying higher next week?
It's a good question. I mean, right now, in terms of on position, I suppose my opinion doesn't matter. I would benefit a little bit from a smaller pullback here. I'm sitting short of 7,200, 7,250 call spread as part of a short iron condor trade that I've had on for a few weeks. And so a little bit of a step back would do me a favor. 7,100, hell, go to 6,800 back to the midpoint of the range. Wouldn't bother me. But right now, seeing the fact that this market has been so resilient, another squeeze higher in the short term, you say blow off, a move up to 7,300 or so wouldn't shock me. And then right now we're in the throes of the year where people say sell in May and go away, which I'd like to remind people is a horrible rumor spread by not nice people to try to get you to sell your stocks to them. Well, because over the past decade, July has been up 100% of the time, averaging a gain of more than 3% for the S&P 500. So it's not sell in May and go away. It's buy through July.
Well, Mr. Vecchio, you must have missed Daily Dose this morning because Veneta came on.
He echoed that.
The suits are actually telling you now to buy in May and sell in September, and then go away for Halloween. That's the new one.
That doesn't rhyme.
It doesn't rhyme.
It doesn't rhyme. It's not as good. I think Vecchio did a much better job.
Yeah, I agree.
Buy through July. Buy through July.
Buy through July. I like that. Buy through July.
Yeah.
Awesome.
All right.
Awesome.
Yeah, Oracle's still down 2.7%, and yet it's up at it was at 160 a little while ago, and now over the course of this is up to 168. So it's that kind of market resiliency.
Yeah.
Awesome. Well, even the S&P are resilient too. They're down 33. NASDAQ down 220 and change. Dow completely unchanged. It did turn red for a second. But
I know. I had a working order there. I didn't get hit.
Did not hear a ding from you. You do not listen to your father. We're going to take a quick 90-second break. I'm going to give him a little something, and we'll be back in 90 seconds. Chris, great job out of you. I think better job out of the market right now, holding up there. Very resilient. Yeah, a little surprising. Not too surprising, but surprising just the same. If we sit here all day long, which is what I think is going to happen, is going to be horrible because another day like yesterday, just the opposite, a little boring day. Do not want to see it. Volatility up by 30 cents. We'll be back in 90 seconds. You listen to Tasty Live. I can't believe we're waiting for your earnings, Chris. I call them your earnings because I know they mean more to you than they do me. We're waiting for your earnings. We'll be back in 90 seconds. Tasty Live, which are tomorrow, which are yours. Good job at you.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right. What comes up next?
We got a market measure.
That's right, we do. Even the S&P is down 32, 31 here.
And volatility basically at the lows of the session.
Yeah, it's moved about 10 cents all day, top to bottom, 20.35 here. NASDAQ down 225. Dow up 15. That's been the leader in the clubhouse. NASDAQ really is the one that was down 1.5%, now down almost 0.75%. That's your move there. Oil flirting with the 100, sitting right there. Gold down 111 to 45 or so. That's all I got.
Very nice. I know it's.
I feel anticlimactic.
I feel unfulfilled.
Yes, I feel unfulfilled. I feel like I didn't get all I can eat.
Yeah. Like I was hoping there was going to be a lot more to do today, and there just
Me too.
isn't. You don't have the pop and vol. You don't have the big move in the market, and some of these stocks, looked like they were going to have a big move. They bought the dip very quickly. They're kind of just like, in a meh spot. It's just I'm with you here. I'm with you here.
Yep.
I mean, I'm working some orders to close some stuff that's working. That's right on the dance floor, and I'm just continuing to. The new positions are 1 to every 3 closes.
You're right.
You know what I mean? Like
you're right. No, you're right.
I'm whittling down from 100 positions to 30.
You're 100%
because
correct.
just by that dynamic.
Yep.
It stinks.
100% correct.
It stinks.
It does. All right. Go.
All right. I think I might have it.
Citigroup unchanged. Close all watertight doors.
As foretold. You've been trading that to the upside, no?
Yeah, but right now, it's like flesh wounds,
It's nothing.
The positions are like flesh wounds. They're smaller positions with a little bit of downside, stent to them. Tesla's up $1.60 now. Tesla was down earlier. Palantir was down a lot more, down 70 cents.
Oh, I just got full to see this. Another one, like I did a diagonal spread in IBM. I took $100 out of it. I mean, it's just like
it's
a little nothing, like a little tasty morsel.
Right. Yep. I got it.
All right. Market measure.
I'm ready.
When Ivy drops, how fast and what's next? There's there's 2 really cool charts I think you're going to enjoy. VIX charts. We're going to talk about IVR in the first part, but VIX meat is really the good stuff here. That's the ribeye.
Where we made
the Wagyu steak of this
ribeye, Wagyu.
The Japanese A5.
Perfect.
That was one of my favorite things with Anton and Julia out in Vegas. I had to call in the big guns. I was like, "Hey Tom, they got Wagyu at this place. Can we put this on?
Can I do this?
Card?
Can I do this? Yeah. Did he let you?
He said, "You guys have been good. You can do it."
you get a steak.
It was more like, "Oh, you're with Anton and Julia, my 2 favorites. Sure,
that's right. Number 1.
Feed them whatever they want.
Right.
Yeah, you minced meat.
Nah. What's that?
Oh, there's my Dow.
Oh, good job out of you. Dow actually just sold off, down 25. Volatility in by 25 cents. Even the S&Ps haven't moved down 30.
But that's the sort of market we're in. I'm just putting orders in. If they come, they get hit, they're out, and we just closed 2 trades. I have no opening trades. There's my, 3-1.
I got it. That was a good scalp, though.
After a sharp spike in implied volatility across all assets in March of 2026, most of it dried up over the following week. So we've had a nice little rally back. Volatility has certainly contracted Here's a look at just the IVRs and the IVR situation that we've been dealing with here. We also, something that you have to consider is just the duration, right? So IVR is on a 1-year time frame. This time last year, April, was the tariff tantrums too. You had a lot of crazy whippiness there. So IVR numbers are losing some of the higher bounds here. So you have to keep that in mind. Volatility numbers are going to move, IVR volatility numbers are going to move very, very significantly over the coming weeks here.
You certainly would think so, right?
Yes. I should have held my Dow.
I cost you. Yeah, down at 80 now, catching up to the rest of the market almost. Even the S&P's down 35.
Yeah. We missed the NASDAQ part of it, though. We should have bought the NASDAQ.
Yeah.
Sold Dow, bought NASDAQ there.
Dow NASDAQ is not a very good pairs trade. You look at them as two independent
in the last week or so, the Dow is the only one that's not at new highs. And it's true. It's pretty significantly off new highs, 2-3%.
That's 30 stocks. Yeah, I get it. Yep.
So historically, once a typical IV deflation starts, how long did it take for IVR to decline from 90% to 50% and then to 30% to eventually less than 10%? What do you think the kind of time swing between those 2 points? So when we get IVRs that spike to 90, how quickly do they normally get to 50 in terms of days?
In days? Under 2 weeks.
You're right on. Now, from the 50 to 30, a much longer
month.
Yeah.
Almost.
And then from 30 to 10.
Oh, man. 8 weeks. I'm going to go double. 2 weeks, month, 2 months.
You are right on the money.
Oh, look at me.
So the study we're going to
first thing I got right today.
No, you're always right.
Yeah, just ask me.
So the study we're looking at, SPY, studied 6 periods of IV contraction following the market sell-offs in 2002, 08 and 09, 2011, 2015, the beginning of 2018 and 2020. We computed the average number of, and the reason we don't have the most recent ones, and even in tariff tantrum, is because there's not a ton of time. You're talking about a year within the last year. We computed the average number of days it took for IVR to decline from 90% to 50%, so a 90 IV rank to a 50 IV rank, from the first print under 50 to a 30 print, so from when it gets under 50 to 30, and then from 30 to when it gets a print under 10 IVR. And we computed the speed of the IVR decline using average percentage per day in each category. You're right on the money.
Wow.
So when we look at the data here,
act like you've been there before, Bet.
Amazing. How does Daddy do it? How does Daddy do it? It's incredible. So it only took 12 days on average for IVR to drop from 90 to 50. Perfect. You are at 2 weeks. That's it.
You're going to give me the win?
Oh yeah. I'm going to give you the win on all of them. Oh. But it took over 3 times as long to drop from 50 to 30. It's about 40 days, 39 days. So you're right there. You said a month.
I said a month, yeah.
And over 10x as long to drop from 30 to 10. It took about 130 days. So, 3-4 months to get back to 10. Usually from the spike, within a couple months, you're back to kind of the lower volatility, which tells you the story of why we're always targeting, when volatility gets high, you got to kind of take advantage of it, because in the next couple months, the 1, 2, 3 cycles that you're able to trade in that duration are going to pay you 3 or 4x what you're looking at in quote unquote normal time. So you have to kind of jump on that opportunity when it does present itself.
Yeah, I don't know what else to say. Easier written up than in practical application, because you do feel like you're entering the fire as the house just starts to be on fire. And there's nobody to save but yourself, so why are you going in there, kind of thing.
100%.
Yeah.
Good way to phrase it. Mm-hmm. So IVR deflated nearly 17 times faster on a daily basis when it dropped from 90 to 50 compared to its daily deflation from 30 to 10. What this tells you is again, you got to run into the fire sometimes, because if you don't, it moves much, much quicker than when you get to like kind of mid volatility going back to low. That sort of stays in a period for quite some time. When it gets very, very high, it's only there for a little bit of time. Here for a good time, not a long time. Type sort of thing.
One of the best sayings ever.
Yeah.
I'm here for a good time, not a long time. Yep.
That's what this is. Mm-hmm. The larger the IV spikes too, so the higher the volatility gets, the faster it contracts. It takes roughly 19 times longer for IV to contract from 20 when it spikes above 20 than when it spikes to 70. So lower IV levels are also much more common. What this tells you is like the extreme spike moves a lot quicker than the short-term blip. You get the 18 to 20 VIX move. That takes a lot longer for it to get back down to 18 usually. Then when you get the 18 to 40 VIX, it usually comes back to 18 or 20 much quicker. And here, so you have the average number of trading days before a 20% contraction in volatility. So you're talking about from 20 to 16, it usually takes about 75 days. When you're 60 going back to 48, it usually takes, 20-ish days, 24
I was
days.
just showing you volatility mean reverting a lot faster than price
From highs.
low. Yeah, from highs. Yeah,
From
right,
highs.
right. When it's low, it seems to cluster around
a
those
wider
lows.
range.
Yeah.
And then the other interesting part is the percentage of time that IV is above each of these thresholds. So when you look at this stat, getting a 30 print on the VIX is 3% of the time. There's only a handful of those each year, if that.
Right.
Even a VIX of over, 24, 25, which we'll see in our next couple slides is our average the last 5 years, just to give you how great of an environment trading has been the last 5 years. But even over 25 is only 9% of the time. It's not a lot of time. Most of the time, you're sitting in a 20 to 16 VIX.
Yeah.
I mean, it's just a huge number of the time.
Mm-hmm.
And then
And
below
volatility
that, below that,
2023 up 18 cents right now.
with the markets at lows, they're going to buy this dip. It's sick. Sickening. You sickos.
Right now, it's just oil, I think, is stopping the market from going higher, trading it
Yeah.
right at 100.
For sure. What do you think gives up? Think market
Well, I
gives
said
up
I
or
think
oil
the
gives up?
top is in oil, the high is in for oil for the day at 102. So, I mean, I want to lean a little bit short oil. I'm waiting for my option trades today, but I think oil gives it up before the market, which is unusual because the market is near its highs. I would usually be a little bit bearish in the market, but I think earnings coming up, I think you've still got another, 24 or 48 hours, but I'm not looking to be long the market here.
Yeah.
If you're doing anything, you want to be a little bit omnidirectional. Like if you want to lean with long delta, it's a 1/2 put ratio spread here. It's a diagonal spread if you're a lot more directionally long, meaning you really think we're going to get that pop up on earnings. If you're just trying to put money to work, I think you want to have a long option versus short option. Just that if we do go down, you can take off that long option and kind of lean into the lower move if you get it. And if we rally, you get paid. You don't get paid as much. That's the way I'm looking at it.
With you.
I want to participate. I mean, I just had Chris in here telling me that, 100% of the time we go 100% of the time higher.
July, 100%. That's
July, but it's May. Amazing. I mean, July could be a world away, but go ahead.
I just sold, so to that point, I did a 1/3 call ratio in SMH.
Okay.
I'm short 2 extra units. Into this move, I sold 2.
I don't hate it. I just hate the markets in SMH.
Yes. They're okay. I mean, it's swinging around 10% a day.
Yep.
I sold the 450 puts in May.
Yep. Okay.
So I'm flat into that move. Right. So these 2 charts are really cool. You're going to like this one. So since COVID, the average VIX is 25. The last 5 years, the average is 25.
I wouldn't have thought that. I would have thought it was lower. I would have thought it was like 21.
Yeah, but that's still so high relative to
I know. I know.
You're
For the
talking
last
about
5 years, you had those big spike ups. That's why.
VIX has only been lower than 25, 12% of the time.
I would not have thought that either.
It's been just high vol the whole time. And you can see from the distribution, I mean, we've had quite the skew to the upside. It's an awesome chart. And when you look at that, the prior to COVID, on this next slide here, the average VIX was 16 before COVID. VIX had been lower than that 54% of the time. So what the two distributions are showing you, and you can see this on the tail has been much, much fatter COVID to now. And so you've had this much wider distribution, which has skewed upward, obviously, because volatility skews upward. When you look at pre-COVID, it was really tight. Like it was right here. It was like you got some moves to 30 or 40, but they were few and far between. Right. It all stayed, 10, which is unbelievable, but that we did have 10 volatility, and I remember trading it. But it was 10 to 20 basically forever for that whole period of time, with like a couple little spots where you got some spikes in volatility. COVID, it was, most of the time was between 15 and 25, but you had a lot of occurrences that were tail type of occurrences that flipped that moved the distribution way further out on the tail. Does that mean that the last 5 years were an event of sorts? Do we get that credit now? I guess so. Do the youngins get that credit?
I guess so.
Surviving through it.
Yeah, I guess so. Yeah. You've earned your bones.
Okay.
Okay.
I thank you.
You're welcome.
Waiting for that.
You're welcome.
It's like when your father says he's proud of you.
Yeah. You know what? I have said that to you throughout your life, and I say it to your brother too, and I've said it to your sisters. Yeah, I say that. But you know what? I want you to be proud of you. You don't have to do anything for me. I want you to be proud of you. I want you to be able to walk into that room like you got the balls of a Bengal tiger, and you don't care about nothing. You walk in there, you're right about a lot of things.
Bengal tigers have like big balls? Is that like a thing?
I don't know. My father used to say that, so I just took it from him.
I like that.
Yeah.
I like that.
Yeah.
All right. Bengal tiger energy in here.
There you go. That's right. Do it for you.
Surprised I didn't get an over.
You're right. I'm already proud of you.
Appreciate that. So the VIX was inflated by an average of 32% across the various percentile bands. And so what you're looking at here is the VIX value at each of the bands, right? So this kind of quantifies what you should expect from volatility. So the max prior to 2020 was 81. The max since 2020 was 83. So we've had equal spikes. But when you look at where the median volatility is in the upper, the median and the lower 25th percentile, you'll see it's significantly higher post 2020. So look at the numbers of like the 25th percentile. So meaning 75% of occurrences are higher than this. Past since 2020 is 19. So the VIX at 19, 75% of the occurrences of the VIX have occurred above that. Whereas prior to 2020, that number was 13. 13 was 75% of the occurrences were higher than that. I mean, that's insane.
That is insane.
I mean, when you're looking at the lows, like the low print, 15. Over the last 5 years, we had 9.
Yeah.
Prior to that.
Yeah.
Could you imagine a 9 VIX?
I've lived through. I traded through it.
I know, but
hated it.
Now, moving forward, do you ever think we'll see 9 again?
I'm going to say no because I probably won't live through it, but no.
I don't think so either. I think that was just that was unbelievable. But this kind of gives you a little bit of feather in your cap if you've traded through this experience. These numbers are incredible. The median being 24, unbelievable. This is just an example of how high volatility has been through this period of time. Really incredible. Great stuff from the team.
Great stuff from the team. Agree.
So in the past deflationary period, SPY implied volatility rank IVR dropped quickly from 90 to 50. You get these spikes in volatility. It pretty quickly comes back. Averaging a 3.3% daily decline. But once IVR falls below 50 into the teens, the pace of decline slows significantly. So it tells you volatility spikes, it comes down real quick usually, and then it clusters in a range. Major events like COVID or the recent 20% market drop tend to inflate implied volatility for extended periods of time. So you have to keep in mind that, any metric that you're using to quantify volatility, range of volatility, is going to be influenced by tail type events. That's kind of what you're seeing now with, IV ranks kind of coming in pretty significantly as the tariff tantrum kind of rolls off the table, even though we had this recent volatility event. When implied volatility is low, it tends to rise more sharply than it falls. You, of course, got to keep your trade size small, frequent to manage risk when vol is low, and be ready to increase size when volatility starts rising again. I am in that bucket.
I am in that bucket too.
I am waiting for volatility to rise again. I just want to see an average VIX 24. That's our new average.
You're right. And VIX, if you're looking at VIX, is closer to 18.5. If you're looking at volatility futures, it's 20.25, up 20 cents. Remember last time we were down here with even the S&P's down 40, it was about 20 cents higher than that. NASDAQ down 270, 280 right now, a little over 1%. Russell's the weakest of the group, down 33, about 1.25%. And the Dow just went down 40. It was actually up just a moment ago. Look at volatility, only up 15 cents. Bonds 113.10. Oil hanging out right at $100. Bitcoin weak to 76 and change. We're going to have Q and Glenn come in here in a moment. Ethereum down 21. Now actually catching a rally relative to Bitcoin. Prior to that, Ethereum was higher. Silver back down 3 1/3%. Gold still down 2 1/4%. $108 for gold. $2.50 for silver. Interesting market across the board here. This is the Dow Jones, which has been strong all day, but you got Caterpillar down 16. And on the upside, you got UNH. Goldman Sachs, which was your leader in the clubhouse, is now down $8 in the Dow. That's what's moving the Dow a little bit lower. Goldman Sachs traded all the way up to 945. It's 930 right now. If I go to my high option volume list here, and then we'll go over what Nick is trading just a moment ago. MU down 24. SMH down 15. It's about $6 off its highs, about $5 off its lows. ARM down 15. AVGO down 14. Big list here of stock to the downside. Doesn't seem to mean anything. CAR, which had earnings, has earnings tomorrow morning, up $10 to $197. Doesn't tell you the whole story there. It was $800 Friday or something like that.
Unbelievable.
Apple up $4. That's what's saving the market. It was up $2 higher than that just a moment ago. Big move there. IBM, you've traded up 3 and change. Microsoft has earnings come. Microsoft had earnings. Microsoft has earnings, right? Yeah, it has earnings coming on the 29th. We're going to take a quick.
No, I just.
Go ahead, go over what you're doing. I'm so sorry.
So I closed out of some, I don't know, this move in volatility. I should say non-move in volatility.
Yeah, the non-move in volatility. I agree with you there.
Makes me think that we're going to have some sort of bounce today. And so I'm closing out some of my E-mini and Russell short position. I already closed the Dow position. Small percent, like 25 or 30% of my short E-mini and NASDAQ position, or E-mini and Russell position. I bought very small the NASDAQ. I'm hoping I can catch a little bit of an up move to hit the NASDAQ, add some more in the ES Russell.
Beautiful. On that note, we're going to take a quick 90-second break. We're going to come back with my man Q and Glenn immediately following these messages. Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son. Even the S&P is selling off a little bit here. It just moved about 10 handles. They're about 10 handles off of their lows of 71.47. They're 71.57 right now, down 48. Volatility's up 26 cents. Last time I was here, it was up a little over 40 cents. So volatility not confirming yet, although NASDAQ down 350. That's about 1.25%. NASDAQ's been moving back and forth here, about a half a percentage point. Back and forth has been open. Russell's the weakest, down 36. Bonds are down 13. Oil sitting right at $100, where I've quoted every time so far today. And gold a little bit lower, down 115. But you know what? Well, that means nothing when we got this man in the house. My man Q, what's up?
Fellas, how's it going?
How are you?
I'm doing very well.
Good.
How are you?
How quickly we changed from short weather to back to long pant weather here in Chicago.
Not just long pants, but long socks, a jacket. I mean, the walk to work this morning, there was rain and stuff. Not super fun. I mean, it better not be like this in May. Better not be like
April showers bring May flowers.
Yeah, you'll get
It'll be all good.
You'll
get one snowstorm in May, and then it'll be over.
It's the random snowstorm.
Snowstorm. It won't stick. It'll immediately be gone. You'll just see the flakes, realize that Mother Nature is the winner, the boss, and then you'll go about your summer. You'll be all good.
Yeah, hopefully. And then we're good for a couple of months.
Mother's Day, May 10th.
Yeah. Good for a couple of months, and then pain all throughout the winter.
No doubt.
Pure pain.
Well, you brought the share of pain in the market the most here. You mean S&P's down 50. That's the first time we've seen them down 50, really, since we've been on the show.
Lows of the day. And volatility expanding tells me I'm wrong within
nickel
5 minutes.
Hasn't really moved that much. Gold over 100, silver, oil over 100.
Yeah.
All right.
You got some things.
How does it feel on the trade desk? When you walked in here, we've had up day after up day after up day.
Mm-hmm.
You got one small down day. Let's just call it a percentage move. As a matter of fact, the Dow's not down anything. It's unchanged pretty much. Russell and the NASDAQ are down around 1.33%. Even the S&Ps are down 0.75%. We've had a monumental rally off of the April 1st lows, April Fool rally, I'm calling it.
Okay.
Yeah, see what I did there?
I like it.
What's the first day down move like this? I bet there's not a lot of panic on the desk.
Yeah, no, pretty quiet. And then, after, how much percent are we up? Like 10, 15% from the lows, something like that. Yeah. One down day isn't, killing anybody most of the time typically. And so, Yeah, not too much panic, not a super busy day. Because when there's like a bunch of up moves and there's one slight down move correcting that, it actually can sometimes help people neutralize their deltas.
Yeah, especially if you've been getting a little bit of short delta somewhere, you want to roll up, still maintain your short delta, keep it.
The move we had.
Or if you started out neutral delta, became short delta after the rip up. Right. This sort of helps that. A lot of the premium and those short calls, can get vaporized on a day like today.
Yeah.
And so, that can sometimes help out a lot of the more neutral customers.
All right. Beautiful. All right, let's get to your list, my friend. And we can bring in my man, Glenn.
Alrighty, top 20 symbols going through the system and their IVR. At number 1, NVIDIA with a 54, Tesla 12, AMD 80, Micron 84, GLD 35, SLV 33, Netflix 32, Microsoft 102, Intel 89, Apple 63, MOD 86, Oracle 56, SOXL 93, Amazon 56, USO 48, Taiwan Semi 88, Coke 60, Robinhood 69, SMH 76, and Meta 79. Lots of those names on the top 20 have earnings coming up later this week. So maybe that'll break, we were talking about it yesterday, not a super exciting market, but at least we've got some earnings coming up, some higher volatility. Microsoft still in the hundreds with their volatility, which is pretty surprising for, a symbol like that to see a sustained move in IVR. And so could be very tradable for earnings for sure.
Could be an interesting market to come.
Yeah.
Yeah.
Totally agree with you. Yeah. All right. Good job. Good job out of you.
7150.
Yeah.
Right in the middle of where we've been for the last week, kind of the first 200 point range we've had since March was last week. Right in the middle of that is 7150.
Yeah, if you throw out the low, we're around 7,100 and the high is around 7,200. If you throw out the high, which was made last night, we're 71, 72, and we're 71.50. Yeah, you're right there.
Yeah.
Anyway, you're right there, and you need to be out there. So I'm gonna let you go. That's right, my man. Shuffling in here. You walk like I walk now, and you're too young for that. Glenn, my man, what's up?
We're doing well. How are you guys?
Good. We're doing good. Doing good. No complaints.
Man, I woke up today, thought it was Thursday. It's not.
How do you do that?
How does that happen?
I had a lot of dreams. A lot happened.
Did you take one of those mushroom gummies that my wife tries to feed me from time to time when she...
What are those?
Mushroom gummies? No, not like the mushrooms like that.
Like lion.
Over-the-counter mushroom. Yeah, mushrooms, lion.
I was going to say like portobello, but there's no portobello in there.
I like portobello.
I do too.
Yeah.
Melatonin.
Shiitake are my favorite, though. I like them in Chinese food. Yeah, I do.
You should go to H Mart. H Mart. I did like a little mushroom dish. I got a variety of them. Because they have all the funky ones.
A fungi dish.
Fungi.
You know where I went the other weekend, even further south, 88 Marketplace. You ever been there?
Is that the one off the expressway?
Yes, right off 18th.
Yeah.
And they have a sushi
I thought you were
restaurant.
talking Jungbu.
They have a
That's the other one. The other way. That's north. He's going south.
Yeah, south. Chinatown.
Okay.
Yeah.
They have a sushi restaurant in like the food court, 312 Fish Market. Delectable and reasonably priced.
Yes. You get outside the.
Yeah, man, it's a trap here.
Yeah,
it's horrible.
Captive audience of the Loop. You do a little bit better.
Yeah, it's like OPEC. Well, the West Loop.
Yeah, gouging us.
Yeah. Need to get out.
Yeah.
Need to get out more, son.
Speaking of getting out, the indoor kid got out. How was the wedding?
Fantastic.
Yes. Did you stay under control?
I stayed under control, though the red wine was flowing.
Ooh.
It was like bottomless red wine.
Bottomless red wine.
Felt like I was at Chili's.
Great. I love it.
The restaurant.
But your cup didn't have a lid on it, so you knew you weren't at Chili's, right? Is that what happened?
Exactly right.
But the lid is so you can take it to go.
Exactly.
Oh, is that what it is?
Yes.
Is that what it's got it?
Yes.
Restaurant Le Bouchon.
Yes.
In Wicker, French.
Yeah.
Fantastic. Unbelievable. dare I say.
It's a great
Very
spot.
nice.
Had a trout dish that was like a
Trout?
kind of like a beef Wellington. It was in a puff pastry
Wow.
and a steak frites.
You are one bougie SOB. Did you go with the tomato?
No, they had mussels. I had probably 30 mussels.
Wow.
I was taking them from other tables. Like,
Yeah,
you gonna finish that?
Yeah. You gonna finish those ones?
With my tiny little fork.
Is that yours? With your tiny little fork? Very nice. Very
It was
nice.
splendid. Frank looked great. Beautiful brown linen suit.
Ooh.
A knit green tie, emerald.
Oh, that's spicy. That's
Oh,
good.
yeah.
I like that.
So, yeah, it was very nice.
This is for his wedding, right?
Yep.
Yeah.
Awesome. Awesome. We got to get him back on the show.
I know. I heard rumblings that he was going to maybe make a guest appearance.
He's very
He
busy.
was going to maybe make it.
Very,
The
very
indoor
busy.
kid gets outdoors.
You think he's not in meetings from 7 to 10, back to back to back to back? Then
Ooh, death by meeting.
exactly, he's slammed.
Yeah.
Ugh.
We'll get him on, though. We'll get him.
You know what?
I hope so.
The meetings, you should elect one person to make the decisions, and then that person makes the decision. And if it doesn't work out, we fire them.
Yeah,
How
like
you get a
it's
raise?
like a guillottine.
Yeah.
Yeah, you like yeah.
Now, if you were that one person that knew you would get fired, you'd bring someone else into the meeting,
Well,
and that's how we get from one.
You're going to make all the decisions this month. We got some tough ones.
Yeah.
Why don't you just come sit in on this? Yeah, but we've got an exciting week shaping up here.
Japanese yen held rates steady last night.
Man,
Yeah, what does that mean? That means
Is that why we're dipping today? Are we got a carry trade going on?
I mean, that is the most surprising thing on my board today.
that the yen is down once again.
Once again,
Let me tell you, it happens just about every day.
I mean, I'm going to put the yen up here. It does nothing but go down. As a matter of fact, if it has an uptick for more than 2 days, you should whack it with everything that you have.
Yeah.
yeah. So I mean, we had a pretty big down move, a bid for the yen. I'm looking at dollar yen, so down move being positive for the yen. On the initial meeting, we had more dissenters than participants voting to hold rates. Those dissenters saying hike right meow,
Right now.
hike meow. But
But the new prime minister,
sure,
she wants cut them all, cut all the rates.
yeah, but markets are pricing it. They're still in the ultra low territory, so things slightly less consequential. Hopefully not. The Bank of Japan hoping that the economic conditions are growing enough to support even a raise to interest rates. But that move higher for the yen lasted an hour tops before not only retracing all of its gains, but making new lows for the yen pre-market this morning. And this is really interesting to me because what it tells me is we're seeing across the board a bid for the dollar this morning. And it tells me that, the risk sentiment factor really not out of the woods here as we see a huge rise in crude oil today. But heading into what we'd expect from the day before an FOMC decision and a slew of other interest rate decisions. We've got Bank of Canada tomorrow. We've got the European Central Bank and the Bank of England on Thursday. Heading into this, you'd expect volatility to come in and would have expected that Bank of Japan meeting to promote a little bit more elasticity in a bid for the Japanese yen, but the developments overnight as it pertains to Iran and the Strait of Hormuz that is shuttering these equity markets, bidding up crude oil markets, taking precedent here in these dollar markets still, which is pretty interesting. We'll see if that is the case for the rest of the week, dampening my fire a little bit of what I expected these central bank meetings to yield. A lot of excitement because across the board, all central banks this week expected to hold where we are. And that makes it fun because then the figureheads' words matter a little bit more, what they are going to do. I've got a quick graphic for you here.
Beautiful.
I
love it when you come prepared like this. This is beautiful.
Every once in a while I come prepared, but this just gives you a good sense of what we're expecting for 2026 at present moment. We've got the Federal Reserve priced maybe a cut, maybe not. we've got
from what I'm seeing, it doesn't look like we have a cut until December of next year.
Yeah. So
like right now, it's every probability is between, when you get even further out into the middle of next year, it's like 60-40 at best.
Yeah, which is remarkably different than where we started the year.
And it looks like it's moved just today. So I'm looking at like right now, the December, like end of year, this December, it's moved from 26% probability of 25 basis point cut down to a 17% probability. Man. So they've even taken off like some of the end of the year projections here.
Yeah, I mean, you're seeing the move in bonds today, more notable than recent days, I'd say.
Yeah.
From when I'm looking at it, a tick up in yields corresponding right there to those short-term interest rates. So, yeah, no decision up or down really expected for the U.S. Federal Reserve this year, but that is a contrast to virtually every other central bank among the G7. We've got European Central Bank and Bank of England both pricing in around 2 hikes this year, 2 hikes of 25 basis points. The Bank of Australia already hiked twice. They're expected to do so 2 more times. And that Bank of Japan that just signaled it should be ready for a hike in June, also pricing in a likelihood of a second one after that. So will this matter this week? Increasingly looking like maybe not, with risk sentiment taking hold, at least for today. But perhaps
you're talking like equity wise.
Exactly right. So
like you're saying that
dollar's getting a safe haven bid that's outweighing, at least this Bank of Japan move in a vacuum. And so we'll see what this means for other central banks. Even though we don't have a central bank decision from the Bank of Australia this week, we do have tonight their quarterly CPI reading. So their inflation gauge, which will be inclusive of the recent uptick, might spell some volatility and influence that outlook here. And everything else will be subject to primarily, just the rhetoric of these central bank figureheads. And I'm keeping a close eye on the Bank of England is now pricing in less than the European Central Bank. But that move, they've moved from 1 hike this year back to 2 in the last week or so. So those are more sensitive than the others have been, pretty flatlined since the start of April. So those are the ones that I think could be interesting. Those pairs affected would be euro dollar, pound dollar, and the cross euro pound, all of note this week, and not on the board, but interesting from a price action perspective this week is that dollar Swiss franc, which on a greater than expected move to the dollar upside today, places that right at 0.79.
I'm at a scratch.
Why is
Take it while you can.
Oh, look at that.
Why is that
Run like a thief in the night.
Look at that. I'm right there.
Yeah, and if you zoom into this chart a little bit, just looking at year to date, just scroll in, you'll see why I think this 79-cent level is particularly interesting, only because we've spent really little time here, just a few days of chop before going in either direction, huge moves all the way up to 80 or huge shakedown to 78. And even so, you're seeing similar clusters around those extremes as well. So this time in no man's land, we haven't spent a ton of time. This market's been picking a direction and stalling really around those, I guess, psychologically important round numbers. Not much, data-wise in terms of hard numbers, but anecdotally, I think that looks interesting from a chart perspective if we pick a direction here. And that Swiss National Bank, not necessarily playing the global rise and fall, those bank rates ultra low, and the Swiss National Bank worried about the strength of their currency if it gets back to those highs for the Swiss franc that we hit earlier this month even. So hopefully the week shapes up and will be interesting. But yeah, as we're talking, dollar yen back at its pre-market highs, nearing 160 really. Hasn't breached there since end of March, but we're right back up at that range. Could be an interesting trade for
Won't
someone
touch it,
favoring.
sorry.
Yep. Mean
Dollar
reversion,
yen,
but
no go. Done. I'm done.
About time you wisened up. Yeah.
Done with it.
He wants to get you in there.
I know. I won't take the bait. I won't take his exit.
Beelzebub.
Trying to exit liquidity me.
there's an argument for why this market isn't as interesting right now as it can be, because this is historically, when it moves, it can move a ton, and maybe some room to just jump on that train, not want to be the first. And so got some event risk out of the way, but that has not meant.
What's the JWoww? JWoww. You remember JWoww from Jersey Shore?
Yeah, sure.
JPowell. What's his feel for tomorrow? What are you feeling? Nothing, more of the same, uncertain, transitory. Not. Is it going to move anything? You think? You think you get any much of a move?
I don't think you will see anything in the written language that'll move anything, but we have seen him in recent meetings be more willing to answer maybe more charged questions. And I think he'll certainly be served a ton of them with the DOJ case dropping, with Warsh's confirmation maybe also happening tomorrow, at least the first part of it through the Senate committee, and as well as his decision for his May 15th deadline. That I think markets will have a chance to interpret at tomorrow's meeting. I think there's a chance that he stays on the board, even if he isn't the chair. I think he gets a little bit more immunity that way from a personal perspective.
Okay. Is he allowed to?
Absolutely, yeah. So
because they dropped the charges.
Yeah, I mean, regardless.
Can't have a criminal on the board.
No, I don't think.
Yeah.
Maybe he can. But no, he's allowed
Criminals
to.
everywhere.
I think there's kind of a
charge, not convicted.
Yeah.
Big difference.
Alleged.
But there's a precedent for, once you're done with your chair term, to just leave the board altogether. But his term on the board itself can be extended into 2028. I think there's a chance he wants to see through the allegations against his colleague Fed Cook and stay on the board so that he might not be prosecuted as a independent citizen. And, a smooth transition of power.
Yes.
That's what we love to see in this.
That's what we all want, I'm assuming, right?
Exactly right.
Yeah, sure. Good job out of you.
Yeah.
I got to let you go because
All right.
I got Liz and Jenny next.
Live, and it's always electric when the ladies are live.
Even the S&P's just made a low or flirted with making their lows again. NASDAQ flirted with making its lows, about 40 handles off of that right now. Volatility hasn't moved up 20 cents. Dow down 27, basically unchanged. We'll see how this market behaves. We'll take a quick 90-second break and come back. Oil sitting at 99.72.
Nibble some more NASDAQ.
Say again?
Or nibble.
Here's your opportunity again.
I think so.
Before you miss it.
Yeah.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with
Liz and Jenny.
Liz and Jenny live.
Peace.
Please cut.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Everybody, and welcome to the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Deerking, and it's a red Tuesday with markets down, although we're having a slight rally. Spoons are only down 43.
Only down 43, that's good. It's right as you were coming in, they started to percolate a little bit.
I know, that's why I was going to say spoons are only down 43, but I wanted to double check when I heard the noise behind me.
Just in case there was a little bit of a pop.
Yes, or a drop.
So we've got, okay, if you can see behind us where it says SIBO, Tasty Live, SIBO floor. Jenny and I are ringing the closing bell today, so tune in if you can. I'm very excited.
Oh, yes. We will not be on last call today because we will be here at the SIBO, way back there, standing by the bell. Our biggest worry today is how many times we're going to ring it.
Okay, because we know all these people. We've been trading with all these people for, years and years and years and years. So we don't want to get booed. You have to be ringing it loud enough and strong enough times, but not too many.
I know Liz is going to get up there and just really ring that bell.
No, I want you to ring it where I'm like 1, 2, 3, 4, 5.
I would love,
and I'm going to get the crowd going like this.
We're gonna get the crowd wild. What I heard recently, and I hear these are TikTok videos on this. There's something about that song, "Ring My Bell."
You can ring my bell, ring my bell.
There's something about that song that something with the frequency of that song that brings like. I hear they don't even play it in a casino. If they're playing it in a casino, everyone starts winning.
Really?
Yes. So look it up. Look up "Ring My Bell" TikTok. There's something about that song.
So you should just go like this.
Matthew, when we ring the bell, can we get that song in the background? You can ring my bell. Ring my bell. So.
Okay, perfect. Just checking. I don't know if it's ever been done before, but there's going to be live music here. Not live music, but just over the system.
Today might be the most entertaining bell ringing ever.
With these two fools. It's true, It's true. Okay, so today it is a crazy market. Spoons are only down 45 right now. Do you want to jump in the platform, Jenny?
Sure, let's jump in the platform. Spoons are down 45. I wasn't here yesterday. Liz, what did I miss? When we say
a nothing burger yesterday. I mean, when I say you missed nothing, it was like while you were sleeping. You fell asleep, you woke up, nothing. You missed nothing.
Well, do you know when I actually woke up from anesthesia? I woke up and I was dreaming about, I woke up and I said, oh my gosh, I was having a good dream. I want to go back to sleep. I can't believe I'm up already. And the doctors, the nurses, all asked me what I was dreaming about. And I said I was dreaming about trading and making trades, winning positions.
What did you dream about? Hopefully it was a Microsoft earnings trade. Hopefully it was.
Oh, I think there's a Microsoft earnings trade coming today.
There is. Do you want to jump into that first? So it is, I'm taking a look at the time. It is now 10:03.
Sure. Let's do it. This will be our YouTube trade of the day. We're going to do an earnings trade. And last week, we're in earnings season. we're in the heart of earnings.
This week is the heart of earnings season. You've got I think 7 of the 10
big ones.
Big ones.
The big
dogs.
ones. Big earnings this week. Microsoft is one of the big ones. Last week, let's jump into the slide here. Last week, the week of 4/13, we had 49% winners, 51% losers. And that was the week of the 13th, week of the 20th, 51% winners, 49% losers as far as what these stocks do after earnings. So it's a coin flip. Honestly, it's a coin flip.
It's absolutely a coin flip. And take a look at this. I mean, you're 50, 51, 49 on both weeks. I mean, you just kind of can go either ways. Now, there was 500 companies last week. I think we've got way more this week.
I don't know. Yeah, I feel like I missed a lot being off yesterday. I don't know what's going on this week.
One day, and there was no earnings last week. You missed Coca-Cola, which has popped up.
I barely knew there was a Fed meeting tomorrow. So it's a coin flip. We've been doing a lot of diagonals, which we put on. You can do them bullish or bearish. We've been putting on bullish diagonals, and our recourse if they lose is then after the stock is down, sell a put or put spread. So we're going to do another diagonal, and we can see right here, we're not saying we know Microsoft is going up, but we're putting on a bullish diagonal, and it's a coin flip, 50-50 chance. Who knows?
Yeah, but we also have a directional assumption in our minds. We are both in our own accounts bullish Microsoft. So let's go to the next slide. Let's show all the earnings that are out this week.
Yeah. So here, today we have Starbucks, Robinhood, Seagate, Visa, Enphase Energy, T-Mobile, AbbVie, and SoFi. So there are a lot today, and we may put bullish diagonals on in many of these. When we put on these diagonals, it's usually, risking a third to make 2/3. So we have a lot of profit potential with these diagonals.
We do, and we'll look into that. But we're focusing on Microsoft today because this is going to come up later, probably around 3 o'clock, so somebody could do a Microsoft trade. That's tomorrow. So you can see that Microsoft comes out tomorrow, which is Wednesday after the bell.
Right.
So that's why we're focusing really on Microsoft right now, and we're gonna put a bullish trade in. We looked at a couple other bullish trades and decided on a diagonal.
Right. So
there's so many drinks that keep going by us. I don't know why they're super thirsty over there.
So you're right. I was looking at today's Tuesday. I was looking at Tuesday's earnings, but we're actually going to do a Wednesday earnings trade today because this piece will air later, and then I'll give everyone on YouTube tomorrow a chance to see it.
Yeah, but it's not about. And what we're trying to do here is listen to. We are 2 former floor traders. Jenny and I have been trading for close to 60 years together, and we don't want anybody just copying our trades. We just want to show you our thought process behind what we actually have in our accounts. Right? So we both have a bullish diagonal in Microsoft in our account right now.
We both do.
And so we might as well, we're going to talk through our thought process. It doesn't have to be for everybody, but this is what we do.
Okay, an earnings diagonal, you can put it on in any earnings, for any company for earnings. We just go to the short-term weekly. So here I'm going to go to the 3-day, and I'm going to sell a call at the expected move. This Tasty Trade platform makes it very easy. We've got this brown bar, takes us right to the expected move for this week's cycle. So pretty much the earnings expected move.
It is the earnings expected move, and you can see that right there. The expected move for this cycle, which is 3 days left, which is expiring on Friday, May 1st, is $28.35.
And Liz is getting that, the top right corner where it says 28.38. That's this week's expected move. If you move up the brown bar, looking at the calls, those out-of-the-money calls, right around 4.55, that would be the expected move to the upside. If Microsoft were to have good earnings and run up, that's what the options are pricing the expected move is.
And that brown bar is a visual representation of the number that's in the parentheses. You kids have it all these days where there's no math for you. You don't even have to figure it out. It's a $28.50 expected move. You go up to the top of that brown bar, bada bing, bada boom, it's $28.50 higher.
I'm going to sell that call. I'm going to sell that 455 call. It's about $550, so about $550 we're taking in. And then I'm going to go to next week's cycle, or not even next week's cycle. This isn't even a week out. It's just a few days out.
It's a few days. It's Mondays. Wait, right?
No, 6 days. No, it's Fridays.
It's
Fridays. So maybe we want to go to the 8-day. Maybe we want to go to Mondays.
We'll price them out. Price them out.
So if I go to the 6-day and buy the at the money, and if I want to keep math simple, if I buy the 425 and sell the 455, that's $30 wide. So I've got a $30 wide spread that I'm paying $10 for. And that's what how these earnings diagonals usually price. You're paying about 1/3 the width. So we have a $30 wide spread, we're paying $1,000 for.
That's what we look for when we're pricing them. If we're paying 50% for an earnings diagonal, a lot of times we won't. If it's a durational diagonal, you're going to pay more than 1/3.
So this is just a very short term. We're selling tomorrow and getting long Fridays. If I wanted to move the long out to Monday, the price will go up from $1,000 to $1,100. Not bad.
It's not. And you get another.
And then you get the weekend through, you get another day, you get a little extra time. And what you get is a little extra. What I want to keep in mind is this 3-day vol is 97. That's going to come in, get sucked out right after earnings come out. Then you have 70 in the 6-day, which we would have been buying, or 63 in the 8-day, or 59 in the 10-day. So we want to buy a lower vol so that option doesn't get crushed in premium as much as the shorter term.
Now, that being said, you'll notice as you go farther out in time, meaning the 3-day, the 6-day, the 8-day, the 10-day, the vol keeps getting lower and lower and lower and lower, but the price of this diagonal will get higher and higher and higher because there is more days.
So it went up by less than $1 from going from Friday to Monday. If I move it out again, $11.62, 60 cents. If I move it out again, $11.77. So it's not going up that much, and that's because, even though I'm going further out in time with that long, but that's because the vol in that cycle, now I'm in the 13-day, the vol in that cycle is only 52. So the further we go out with our long, the less premium will come out of that after the earnings announcement.
Out of the long. The short is in the shortest term cycle with 3 days. So this is an earnings diagonal, meaning we're selling the near term, buying the farther out term. You can see how Jenny and I kind of walked through a couple different scenarios on where the long should be. I kind of like the 13-day.
Right. I like looking at that side and looking at the implied volatility and seeing 97, 70, 63, 59, 52. And I like buying the 52 rather than, I don't want to buy that 70.
Well,
that
so there is a give and take. Sometimes it's significantly cheaper if you have very little days in between. This was one of those where we opened them up surprisingly, and it was an extra 60 cents, $1.50, things like that from going into that duration. I like this trade.
So if we buy the 13-day, we're buying a 52 vol. We're selling the 3-day, selling the 97 vol. We're paying $11.85. This is, if Microsoft doesn't move, all the premium's going to come out of that 3-day, and there won't be too much coming out of that 13-day.
A little bit will come out, but not too much. You still have some recourse, and then you have things you can sell against it in those cycles.
Right, and if Microsoft goes down, well, we're risking $1,185. If Microsoft goes up and moves up to its expected move, this trade, this spread can be worth $30 or $3,000. So there's about $2,700 in profit potential here.
I don't mind it.
Yeah.
I don't mind it. Let's do it. So we're going to press the button on this. This will be our Microsoft earnings trade. We are going to look at it tomorrow. If Microsoft, by some odd reason, pops up today,
maybe we'll get out early.
Maybe we'll get out early.
So we're buying the 425 in the 13-day, selling the 455 in the 3-day. That's the calls. This trade, if we have it incorrectly, we're buying the longer term, selling the shorter term. Whatever we pay is the buying power. So if we're paying $11.85, that's what the buying power is, $11.85, $1,185. It's a hefty amount to risk on one earnings trade, but in the words of TFM, you got to risk it to get the biscuit.
You got to risk it to get the biscuit. I like it.
All right, so that's our Microsoft earnings trade. And that'll be tomorrow after the bell, but we wanted to get this out because this is going out to the YouTube world.
It's going out to YouTube so everybody can see it'll be out later today. All right. Now, we do have a lot of earnings on deck for today as well.
And we're filled. We're filled in at Microsoft.
Beautiful.
We do.
I do want to bring one thing to your attention. I closed our Starbucks trade yesterday, which we could have held through earnings, but I had to do something to push it through.
Was it a calendar?
You can take a look at what it was. I think we had... you can take a look, pop it out. I just know
short put?
We were just profitable. It was 3 legs. I don't remember what it was.
Oh, 93, 92.
Combo with an extra call.
Oh, it's a reverse shade lizard.
So reverse jade lizard, we got out of it. So and Starbucks has earnings, so we can take a look at it with a fresh set of eyes.
Okay. Let's go back and look at that earnings list. So Starbucks, Robinhood, Seagate, Visa, Enphase Energy, T-Mobile, AbbVie, and SoFi. Of this, SoFi, I have a position in SoFi. Starbucks, we can take a look. We just took off one. We might want to put on a new one. Robinhood. We both have positions in Robinhood. I don't know. Seagate, what's that, STX?
I think so, yeah.
Or is that Constellation Brands?
I don't know. We have a platform. We can take a look at it.
All right. What's STX? Seagate.
Yeah.
That's $573. I'm going to veto that.
Well, there's a lot of stuff on deck right now for earnings. And there is still, so we're in an environment right now. Can you take a look? I know we're going to go into earnings, but we're in an environment right now. Now, this week, I do care about the earnings. That is my son's ringer.
Oh,
This
only
week-
certain people break through. Only certain people break through the silencer.
Yeah, that was my 19-year-old just broke through. I'll figure out what he wants later. But see, so there's only certain things where yesterday I was with TP and the
He
earnings
had a
that
big
were on
interview.
deck.
He was in a big interview.
TP?
Your son.
Oh no, that's at 5 o'clock today. But yesterday, TP and I looked at it and I said the handful of earnings, and actually go to the earnings that were yesterday, because we both kind of said there's so much volatility everywhere else. Spotify was huge, but Coke, UPS, GM, I'm not dying to get into that. I have positions in Hood, I have positions in Microsoft, I have positions in Alphabet and Amazon and all those things. So when I have a position in them, I'm really looking at them. Other than that, I'm not dying to get into earnings if the volatility is still high.
Did you see Spotify down $66, down 13%?
I did see that.
Did you hear about their partnership with Peloton?
No.
Yeah, there's going to be some kind of a deal with Peloton. Like, if you have a Spotify membership, you can do. It's like this. I heard the Bats talking about it this morning.
Oh.
I don't know, or I heard Vanetta. It was in Vanetta's news.
No, I work out every day, but my Peloton is a clothes rack.
Is it?
Yes, I like my tonal so much better.
That's what Nikki was asking, if you can even buy those anymore. Now,
Tonals or Pelotons?
Pelotons.
I still have it's a clothes. Like I said, it harbors my towel. Sometimes I put something else in there.
I still have mine. I still have my membership.
Do you?
Yeah.
I don't think we do. I mean, maybe my husband uses it, but I'm not a biker. I'm an anti-cardio person.
All right. So let's take a look. What do we want to do first? Hood.
Let's take a look at Robinhood.
Robinhood, $82 down to $1.70. We put on here's the thing. Today we can put on earnings and they'll be off tomorrow morning. We have the Fed announcement tomorrow afternoon.
Correct.
2 o'clock.
That's why that Microsoft.
It's kind of a weird one.
It's kind of a weird one. We typically don't do that. We just did it for our market mover segment.
You would hear us say, hey, if you're going to, on Wednesday, if there's the Fed announcement, you would hear us say, if you're going to put on an earnings trade, I'd wait until after that Fed announcement.
Well, the other thing too, Jenny, is a lot of times, if we're directional, it's fine, because I still want to be bullish Microsoft. That's another reason why we did it. But a lot of times with those directional trades, you'll do that. Microsoft had a 102 IVR, but I don't want to sell premium in it. I don't want to sell premium before a Fed announcement. The risk reward scenario isn't there. We have a lot of profit potential for a defined risk strategy for that, meaning I don't mind doing it before the move because it was directional.
Well, I was looking at put spreads in Microsoft earlier, and okay, here we could risk $1,000 on a put spread, or $2,000 on a put spread, and we both said we'd rather risk $1,000 on that diagonal because there's a lot more profit potential.
Yeah. We were looking at a put spread. You're right.
Okay, so in Robinhood, should we just go back to Diagonal City?
Diagonal City, USA.
Diagonal City. So
we got to see if it sets up. But yes, I do like it. Let's go through that same process.
And it's different. You see, in Robinhood, we have 3-day, 10-day. In Microsoft, we have 3-day, 6-day, 8-day. There are a lot more options in Microsoft. Here, we've just got weekly. So in Robinhood, which makes it easier. That was throwing me off, all those extra.
But I kind of let's do that thing where we price it out, how much more it's going to be if we go farther out in time.
And you can look at the side. 124 implied volatility, 89, then 83, then 79. So I think maybe let's look at buying the 17-day. So if we buy the at the money in the 17-day, buy the 82. And then you go to the 3-day.
The 3-day option will stay. You want to make sure you're getting
sell the 90s. We've got $8.
What's the price?
$4.50.
So that's high. So
Yeah,
we were talking about this. Microsoft was kind of unique because we were only paying a third of the width of the strikes.
I know.
You usually are around 50%. We want to pay less than 50% typically. So from that point, you're going to have to take it in.
So if we go to the 10-day,
because that 3-day stays.
82 is $5, and the 3-day.
The 3-day stays.
82.90. Here is an $8 for $3.60.
So you notice as we took the days away, it's getting less and less of the width. Yes, and that's exactly what we should see.
So I'm fine with risking $3.60 in Robinhood.
I am too. I like Robinhood.
Okay. All right, then I'm going to push this out. Now, these are bullish trades, and if we risk $300 in Robinhood and $1,000 in Microsoft and $300 here and $300 there, that's maybe $2,000 we could lose if all of these trades are down on earnings. If they're all down. But we saw last week and the week before, it's 50-50. Half are down, half are up.
So, and that's not a bad way. I know this was maybe a year or so ago where we were doing diagonals in all of them because they kind of came out in the wash, right? So if you keep your risk reward scenario good, where we don't want to pay for a diagonal, let's say you've got an $8 wide and you're paying $6 for it, because then your risk asking $6 and you can only make 2. But in these scenarios, if you win in Microsoft and lose in Hood, we might net out our diagonals.
That's why I think, okay, so if earnings have been 50-50, half are up, half are down, and if we do this
you
bullish
can't try
diagonal,
to pick your direction. You can't try to say, I think this one's up or this
I'm going
one's
to put
down.
on bullish in this and bearish in this. But I almost think we need to, like if we did 1 in Microsoft for $1,000, we almost need to do 3 in Hood. For or 2 in Hood. You almost, if we're going to play that way, where 50% of the earnings are up, 50% are down, we're going to put bullish diagonals in every earnings, and because we're risking 1 to make, we're risking.
No, I understand your concept
I think that you have to do it that way.
We can't spend $6,000 today.
But for the show account, no, we trade in 1 lot.
Agreed.
But that's what I'm going to do. I'm going to equal the buying power on my diagonals. The smaller ones scale up to equal the bigger ones. So if I did the Microsoft for 1,100 or 1,200, I'm going to do 3 hoods to equal that 1,200.
Yeah, or even a 2 to get you close enough to it. Yeah. I get it. I understand where you're coming from.
That's the only way it'll work out because let's say Hood is up and something else is up and SoFi is up and we make
but
Microsoft's down. We're gonna lose way more in Microsoft than we make in the others. That's why it needs to be equal.
Yeah, agreed. Okay, so you shipped Hood, right?
Well, I don't even know if I have it in yet. Oh yeah, I'm working it.
Okay, so Hood is working.
That's working.
What's next on the list? SoFi. We also are taking live tweets. Put the hashtag LIZJNY. We will go over that.
I don't know if I missed anything yesterday.
My Genie Blink worked. Like I said, it was a very non-event day. So we can get out of this and go back to earnings. I'll let you know when tweets come in.
Okay. And then I did share, because we've been gone, Friday I did have Dan Pazzarelli on.
Oh, yeah. It's in there somewhere. Scroll to it.
I did share that. I did share that video. Oh, yeah. So if you didn't watch this, he's great. Dan's great. We used to trade together in the Ford pit long ago. And he reveals his top 3 stocks for option investors. I'm going to reveal them on the show today.
Whoa. Book read. I'm just kidding. No, it's a great book. He's got a lot of great stuff in there.
That's funny. And then Frank, that was 23 hours ago. Would you trade? How would you trade Hood, straddle or strangle?
And we just did a diagonal.
Yeah,
I have to be honest, and this is full disclosure, I've got some zebras in my IRA for Hood, baby small, and I'm also going to have the diagonal in, which is bullish. So shame on me, but that's where I'm at with it.
That's mine.
So instead of the straddle or the strangle,
I'm
I
going to
want
move this
that.
diagonal up to 370.
Yeah, go for it.
Okay, then we're filled. That wasn't bad. Mid-market was 373. I went to 370. Filled.
Yeah, great.
Okay, so SoFi. Do we have SoFi? No.
I don't think so.
No. Look at SMH. Finally coming down $19. Now, if you look at the chart, it looks like nothing because SMH has been sky high. But at least we're getting a down move because we have this reverse Jade Lizard. Oh, and we rolled up the puts. We had the reverse Jade Lizard in SMH. We rolled up the puts.
We can't lose
to the downside.
To the downside.
We can't lose to the downside.
We should put a GTC in for that. Did we put that in the?
We did write down our total credit that we've collected. We've collected $638 in total credit, and the trade is pricing $1035 right now. So
let's put a GTC in for $5.
Okay. Yeah, we've got $638 in total credit.
Right? We might as well.
Yeah, sure. Close position for $5.
I mean, it's not there. We're not anywhere close, but it's just in there.
GTC. Okay. Now, Starbucks and SoFi. T-Mobile, I don't know. And did I hear someone mention Bloom Energy? It's not on the list, but did you see Bloom Energy?
It's down $13. Did they have earnings and I missed it?
Earnings 28th today.
Today, is it after the close or did they already have
after the close?
Are you sure? Because they're down a lot.
This says after the close. Let me pop out the news.
Did they release early? I love Bloom Energy.
Bloom Energy, no.
That's my little stock they could.
No, so they didn't. So it's down $13 right now.
Good ear, Jenny Andrews. Thanks for letting me know that. I need to
earnings
positions.
Yeah, I think that might have been it too. I might have gone to sleep and thought,
Energy.
What earnings am I missing? So then I woke
Bloom
up.
Energy.
Oh.
No, you didn't miss anything really yesterday. I mean, TB and I had a fabulous show, but you didn't miss anything yesterday.
All right. Do you know what the nurses? I don't think of myself as a funny person because I grew up in a household with like a very funny person. So the nurses all told me I was so funny.
Is this before or after you lost your marbles on them?
After.
They're just trying to be nice.
I was making jokes left and right.
They're just trying to be nice after. Jenny almost got kicked out of her colonoscopy before it happened.
Well, then I was making jokes left and right, and the nurses all said, "You are very funny." But I don't think I would find myself funny. You're the clever one on the show.
No, I'm just sarcastic.
All right, if you think I'm funny, wait till Liz comes in for her colonoscopy.
I'll send her to the same set.
So what do you want to do in Bloom Energy?
I'm long Bloom Energy.
I know.
Long and long and long. I have ratcheted up zebras, so I'm just holding on to it. I'm holding on to it with their Wing in the Prayer program, and this is for me that it goes up because I've ratcheted it up, and that's where I'm at.
I mean, Bloom Energy is expensive, and we're small fries. The 217 calendar is $400.
And it's basically the at the monies.
Yeah, it's basically the at the money.
So that's saying, we say this all the time, if you are doing an at the money calendar for earnings, it's very similar to selling a strangle because if it doesn't move.
Right, yeah. It's similar to selling a strangle or straddle if it doesn't move, or buying a butterfly at the, what do you think, $4 on a Bloom Energy butterfly? Calendar.
It's very challenging for me because number one, it's Bloom Energy, number two, it's 217, but I want to make more money.
But I think here's the thing in Bloom Energy, the diagonal is going to be too expensive for us.
Yeah.
I think it's going to be way more than the
How much is
Microsoft.
I think it's going to be way more than Microsoft.
Okay, so I'm gonna price out the diagonal.
And selling puts and like selling a strangle in there is so expensive.
So if I go the expected move, it's going to be $1,600.
Yeah, we
got to do the $400 calendar.
Yeah.
Hey, 217, when has that ever steered us wrong? I mean, 217 has always been pretty good to us.
It's always been good to us. It's Liz upside down on a calculator for those of you just joining us.
217.
For those of you new to the Liz and Jenny program, I am about to be 50. And when I had a calculator or a pager, I would just type in 217. I wouldn't even give my number because I was like, you need to know my phone number. I would just type in 217 to the pager. And then
they would know it was Liz. They know
call
it was Liz. All right, so
that's how nerdy I was. Right, Jeff?
I'm getting questions about my procedure yesterday. Clean bill of health. 10 years. We got 10 years till my next one.
10 years, but the nurses want her back in sooner for a new set.
Jokes,
for a new set.
Okay, I'm paying $410 for the 217.
No,
3-day, 10-day.
What you're saying there is that you're saying the Bloom Energy is not going to move too far outside of its expected move.
Which is probably wrong. It's probably going to go like wild.
I think it's going to go wild in one direction or the other.
I think it's going to go wild in one direction or the other too.
Yeah, I'm hoping to the upside, but I'm locked and loaded with zebras that are already
So maybe we
registered.
pass. Maybe we just pass on Bloom Energy.
We could do an after earnings trade in Bloom Energy.
Yeah, let's just pass on because $400 is a lot
for
on
a
earnings calendar in Bloom Energy.
Yes, because the reason we're saying, okay, I just need to clarify this. We're saying we just spent $1,000 in Microsoft, but $400 is a lot on a calendar because even if it doesn't move, you're not going to make that much money.
Yeah. Okay, SoFi. $18. SoFi's had a run. Oh, I mean, I feel like this was a little run. You know, from 14 to 18, it was. But
it's not down.
SoFi, I know we talk about vol and we talk about vol collapse, but I think when you look at the expected move, $1.50, $1.90, 217, I almost think in SoFi, if you want to trade it, and when I say you, I mean me, I've got to go all the way out to the 51 day with something like a Jade Lizard.
And that's
which
fine.
is a long-term trade.
Yeah, but you're using the so talking through all these scenarios, you're using the inflated earnings vol to put on a long-term trade, and that's.
I mean,
that's
what do
great.
you think in SoFi, Liz?
Let's see if I don't know if I have a SoFi position, and we don't have a SoFi position, but it's been pretty good to us.
You know, even the 17 day. What we can sell the 17 puts in the 17 day for 60 cents, which isn't.
How much capital are you putting up for that?
$200.
That's not bad.
Yeah, if you think about return on capital, and this takes me back to my program with Dan Pazzarelli. And
you still have to reveal the stocks.
That's going to be the last. People have to stay tuned to the very end. You're going to get that at the very end of the show.
Jenny, I'm on the edge of my seat.
So when you talk about the wheel, and that's what we discussed in the special I did with Dan Pazzarelli. When you sell a put to think, okay, if I take this stock, fine. and you're constantly reducing your cost basis. Then if you take the stock, then you start selling calls against it.
Yep.
The 60 cents.
Using $200 is not bad.
No,
I mean, it's not a sexy way to trade. So that's what I was going to say. Is this isn't going to entice the kids like the fraternity party I just got back from.
60. Like they want more than 60 cents.
They want unlimited profit potential. So they're looking for the exact opposite. But this is slow and steady. This is what pays the bills. This is slow and steady. I don't mind having
this
the
is what pays the bills. Like TP's $10 wide SPX put spreads for 25 cents.
That's right. But it is. It's kind of it's the same concept, right? You're not making a lot of money, but if you do it over and over again, you're getting it.
All right, so I'm going to put in a 60-cent offer for the 17 puts in the 17-day.
But I would almost argue there's a difference between trading and investing, and I think the Wheel of Fortune is investing in a smart way for yourself.
Right.
Trading is really fun, but it's different than investing. Trading is different than investing.
Yeah, absolutely.
In my opinion.
And for an investor, starting with the wheel, starting with selling puts, and then turning it into, and honestly, having that discussion with Dan, he gets aggressive. He'll get aggressive, and he'll sell at the money put, or very close to it, or even slightly in the money. He will sell aggressive puts.
I don't mind an at the money put.
But I don't know. A SoFi. We've been in SoFi at much lower prices. I actually do want to give ourselves a little bit of room in SoFi.
Okay.
That's why I'm going with the 17. 59 cents on the 17.
I like it.
'Cause I don't know. I don't know if I trust it.
It's fine. It's the same thing. So we talk about this all the time, and TP and I went on it yesterday. If you close this, I would be selling that. And I didn't know it was SoFi. I would look at that chart. I'd be like, sure, I don't care how aggressive you get.
Yeah, that's true.
I wouldn't even overthink it.
That's true. Okay, so that's in. Which we didn't look at the diagonal, but you're not getting it. You're getting 30 cents. If you go to the weekly and the expected move, you're getting 30 cents. So that's why I didn't even look at the diagonal.
Right. I would rather the room to be wrong in that one.
Yeah.
Okay. Is it time? Oh, it's only 30 minutes through. I want the 3 stocks.
Well,
because I'd like to do a Wheel of Fortune in them.
Okay, we will. Hang on. I just want to make sure we got to everything. SoFi, AbbVie, ABBV, AbbVie, $199. I don't hate puts in AbbVie.
I don't hate puts in AbbVie either.
There is an AbbVie. I drive past it every time I go to like a north side dance competition. I drive past the giant AbbVie sign.
Is it by O'Hare?
It's a little bit past.
I drove by it yesterday or Sunday.
It's further. Like if I'm driving up by Great America, Kenosha, if I'm going further north, I drive past the AbbVie building, and then I always think I need to sell puts in AbbVie.
Let's do it.
Let's see how far we can get. All right, 95 rank. 95 rank. If we go to the 3-day, you can sell the 185 puts for $95.
Okay, we're in the 3-day. I'm following along.
It's using a lot of buying power. $2,500 in buying power.
That's a lot of buying power.
That's a lot of buying power.
When we're talking about expense, we're talking about what we can make versus what we're putting up to do it.
If you go to the 17-day and you sell the 180 put for $130, that's using $2,000. It's a little bit better.
It's a little bit better, but that's still a lot of money for, I guess it's...
I'm going to look at a diagonal. I'm going to look at the diagonal. If I sell the 207 in the 3-day and I go to the 10-day and buy the 200, $360 for a 750 wide, or $5 for a $10 wide. No, they don't. Nothing looks great. I thought there might be something in AbbVie, but I don't.
I don't mind selling puts. I do like the 94 rank. I think $2,000 in this stock is a little bit aggressive for us.
Honestly,
especially
if I like not on the show, if I have extra buying power on the side and I'm looking for something to do with some capital, I'd go all the way to June and probably sell those 170 puts for $170, $165. You're getting $170 using $1,700. It's a 10% return. That's way out in June. But I don't know that we want $1,700 tied up in AbbVie.
I don't. Only for the purpose of the show account, I don't think so.
All the way out to June.
All the way out to June.
Yeah. Okay. So did we get through everything else? Oh, and we didn't go to Starbucks.
We can relook at Starbucks, and then we're all on the edge of our seats, Jenny.
I'm going to keep you waiting until the SBUX. Starbucks. I don't know. That's why I did a reverse Jade Lizard, because Starbucks around 100. I
wasn't going to keep that in through earnings, though.
No. Well, that was a reverse Jade Lizard.
I know. I don't like short calls.
Oh, yeah. Maybe we wait.
Although it is Starbucks, and you know I like to short Starbucks.
I feel like Starbucks could go down. Maybe we do a downside ratio spread. If we do a downside ratio spread just for even, where if we buy the 96, sell the 93, our break even's 90. We take in a very small credit, 36 cents.
So you're taking 36 cents in. This is actually a down move.
It's a bearish trade.
Because it's such a small credit, it's a bearish trade. I like this.
But then we'd have to get long
like
Starbucks at 90.
I'm fine with that. Let's see it on the chart. Not that we don't know anything with charting.
At 90. So, but I'm not sure because I don't know about you, but we have so many new coffee places popping up around us.
I've never been a fan of Starbucks. Ever.
But like we have now the 7 Brew, and we're getting a Dutch Brothers, and we're getting all these new coffee shops around us that they're taking away some of the Starbucks business.
Yeah.
We're getting sparkles or sprinkles. Have you ever heard of that?
No, but anything's gonna be better than Starbucks.
I don't know. I don't know. So,
but I don't mind a downside play. But this could look. But look at that. Look at the big moves down.
I know. I've seen it move big on earnings. Yeah.
So put a pin in that too. Put a pin in that.
Okay.
And tell us the stocks, darn it.
All right. One of them, which I didn't get, they're in this video. So again, if you want to see a longer video on Dan Pizzarelli's stock picks for 2026 for the wheel, go ahead and watch that YouTube piece. I shared it on Twitter, but I'll give you his 3 picks because we could put him in to keep an eye on them.
Yes, I would like to.
One is TMC, the metals company. Okay.
Oh, it's a metals company? TMC?
Yeah, the metals company.
TMC.
Oh, it's
dynamite.
Oh my gosh, don't make me think about football season starting.
Oh yeah.
I might be right back at all the games.
I'm out. I have a week and a half left, and I'm done with high school.
Yeah.
Done city.
Week and a half till graduation.
Don't expect to see me a lot. I'll be traveling.
And my daughter's going into her senior year and maybe going back to the dance team, which means I'll be at every football game.
Yep.
And that TNT brought back all the memories because I think the only songs they have to play at the football games are by AC/DC.
I like it.
Is that what they play at your stadium?
No.
We play AC/DC every game.
Welcome to the Jungle?
Like they only have, no, that's Guns N' Roses.
Guns N' Roses isn't Welcome to the Jungle, is it?
Yeah, I think so.
I'm looking it up.
I think so. Okay, so TMC, the metals company. I'm pretty sure they've got one CD in the
Guns N' Roses. You're right.
One CD in the press box, and that's an old AC/DC.
It's awesome.
All right, earnings or no earnings. Selling puts at a $5 stock. Let's talk about how long will it take for us to own this for free. If TMC stays around $5 and I just go the 17-day and get
how much?
So in May, it's 45 cents. So $45 in May on a $5 product. All I have to do is get 50 cents 10 times and my cost basis is 0.
Correct, which would take you, about a year to do.
Yeah.
Yes, which isn't that bad. And the return on capital here is pretty good. So he's looking for something completely different than what we're looking to. And this is, kind of the Wheel of Fortune, right? So the Wheel of Fortune is, we kind of said this, you start with a naked put. If you get put the stock, then you sell the call against it. Now we know, because we're traders, that you'll probably just keep rolling that put.
You can keep rolling the put. You can keep rolling the put,
they're all the same thing. You can use the synthetic version of it. But you're getting a decent return in, how many days is that, 17?
17 day. This is the 17-day. Now, if I went to June, if I went all the way to June with the 51-day, and maybe we should, that's $73. So $73 using 223. So maybe I should go to June, and maybe that makes sense because we're almost at that 21-day rolling mark.
We are, yes.
So maybe I just go to June. Sell the 5 put in June for 73 cents. Now, if I can get 73 cents, you do that 6 or 7 times, your cost basis is down to 0. And then I know we had a viewer who had this system where, let's say she sold a put for 73 cents and she kept that whole 73 cents, $73. Then she would actually take that $73 and buy $73 worth of the stock.
Which isn't a bad play.
No, it's not, because then whatever stock you have, your cost basis is 0.
Yeah.
So then she would sell another put for $73, and if she kept that whole $73, then she'd buy $73 of the stock again. And knowing that her cost basis is 0 on all of her stock, if she takes her profits from her puts and buys that much in shares, I don't hate that.
I don't hate it either.
No,
No, we haven't talked about that in a while. It's not bad.
All right, I'm gonna put in an offer here. I'm just gonna hit the bid. The market is 2 cents, 1 penny wide. 71 at 72. I'm going to hit the bid. Sell a put for 71. And the reason this was one of his stocks because you can get, and he calls it, gosh, I should go back and watch the video. He's got a term that he uses on how he figures out, like, how much.
Whether it's worth it or not?
Right, whether it's worth
how much return on capital you want. Well, this is, because you can see it's only $300 and you're getting 73. That's a pretty good return.
Well, he looks at everything as if it's cash secured.
Oh, so then low price products are probably his bread and butter.
I mean, here, his other pick, TEM. TEM, $50. If I'm just going to stick with June. If I go to June and TEM, $50.
Just sell the right on when it's.
You're getting $540. Now, it's using $2,000. That's a lot higher buying power.
It's a lot higher buying power, but you want to call apples to apples, it's almost the same thing.
Yeah, so $500 on a $50 stock or 50 cents on a $5 stock. It's the same
thing.
It's the same thing. Gosh, I wish I could remember the term. Something with an S.
Semantics?
No. Keep going.
I like it.
I hesitate to even see what's going on behind us right now.
Oh, because they're just laughing. We like to catch them in the act.
There's a lot of shenanigans going on. A lot of shenanigans.
There's going to be shenanigans during the bell too. Okay, but that's a good point. I do think that when you look at them from that perspective, it's the same. The return on capital is ultimately the same. So if you were going to do, what was the other one? TMC, if you did a multiple of TMC, you might want to get it to the exact point. He probably does keep it symmetrical.
Yeah, and you look, you're getting 50% of the stock price.
Yeah.
I mean, not 50%, 10%. You're getting 10% of the stock price. So if you get 10% of the stock price, you don't have to do that too many times, 10 times to have your cost basis be zero.
No, I like it.
Okay. All right, so I'm going to sell. I know that's using $2,222, but
press that button, Jenny Andrews.
I'm going to send it. I want to keep an eye on these.
We'll keep an eye on it, and I think we're okay in buying power.
Well, I don't even know. I just sent it and didn't pay attention.
I'll take a look.
Okay, and then
we're in good shape.
Other one, OKTA, which OKTA, that was a hot stock at some point in time.
Yeah, we've been into and out of OKTA.
OKTA, $76. If we stick with the June, and I'm just sticking with June because as far as our tasting mechanics, 45 days out.
Yeah, for sure.
We're getting close. Now, this one's not quite as much. If you look at that at the money, it's $6 on a $75 product. So not as percentage-wise, it's not quite as high.
But it's still a decent return on capital.
Yeah. Yeah. Here, the weird thing is, TEM was $50. We sold a put for $5 that used over $2,000. Here, OKTA is $75. That puts $600, and it's only using $1,300 in buying power.
I like that better.
But do you think we should give ourselves a little room?
So that's just it. I know he's being aggressive with it because he's trying to toe that line. He's trying to get as much extrinsic value as you possibly can.
Yeah. Look if I move it to the 70, our buying power dropped to $886.
I would sell the 70 because...
Now, he never looked at a chart, but I'm going to. Selling that 70 put for about $4 or so.
But when you're doing the Wheel of Fortune, you almost don't care. So let's talk about how you can get hurt. If the Wheel of Fortune is a bullish strategy, short puts are bullish, covered calls are bullish. You will not make money if the stock goes down, but you will lose less than if you just own the stock.
And honestly, I asked him, he's done the research on these companies. They're companies that he likes and he wants to own. So he doesn't mind if he gets put the stock and has to hold the stock or
for a while.
Yeah, they didn't, it was, we just trade things based on vol and we're not doing any research. We feel like the market and the news is priced in but he's doing some research and these are stocks he picked that he wants.
Okay. I like it.
The 70.
And I love hearing how, I just like talking to other traders and whatever they're doing. It's fascinating to me because everybody's doing something different and it's working for a lot of people.
So I put in a $465 offer here to sell that 70 put. We'll see what happens.
Okay.
There's not a lot of open interest here in June. Well, I'm out to June.
Yeah, you are pretty far out. Okay, can we take a look at some other things too? There was some huge call buying today, and what was it, NVIDIA?
And NVIDIA, and yesterday
was Intel.
So NVIDIA's down $7, but again, it had a massive tear.
Yeah.
While I was sleeping. Look at that move.
While you were sleeping.
Yeah.
That's a great movie, by the way. For those of you who haven't seen While You Were Sleeping,
I should watch it with Lily.
Yeah, it's a great movie. I love it.
Okay, so lots of call buying out in May.
Oh, Florida! I just glanced at Twitter. Florida 7 is talking about While You Were Sleeping.
So I can I could pop into Twitter.
Go tap down.
While you were under light anesthesia, you can say things that you don't remember. I was told once that I had everyone in the room laughing, and I don't remember even saying anything. Yeah, who knows what I was saying?
Enter Jenny.
Hence, you're so funny.
I got my wisdom teeth pulled out when I had an injury when I was on the trading floor and had to have them like emergency taken out across the street. My husband came to pick me up, and apparently I was trying to get the people to dance with me. I kept being like, "Come on, dance with me," and I was using these as like guns.
Wait, what kind of wisdom tooth emergency on the floor?
I was in super pain all of a sudden. So then I went across the street from right around here, and they pulled my wisdom tooth immediately.
They did?
Yeah. And I was knocked out, and I came out trying to dance with the surgeon.
So funny. And here's Frank coming in with option volumes, 60 million contracts, 14% below recent average. You said it was a slow day yesterday.
I mean, when I say slow day, it was, up 10, down 10, up 10, down 10. Nothing was really happening.
Calls leading puts. As far as the most active, if I refresh this, where's my little refresh?
Where is your refresh?
I don't know. I don't see it, but I like to look more than the index. I like to look at the equities, so you can see calls in Tesla. Calls in Tesla.
There's the Nvidia calls.
Oh yeah, here's some 9,000 calls in Nvidia. That's April 29th. Another April.
So that we did hear that there's lots of call buyers in Nvidia.
220. April 220, 217, but like 9,000, that can be a spread. Or 7,000, 9,000. What else do we have? 11,000. So let's take a look at Nvidia.
Open up, just do me a favor, and now that's from the CBO's website, which is great, but open up, let's just go one day in Nvidia. I just want to show the kind of volume that's being slung around in these kind of stocks. And this is just option traders.
Look at this, 40,000 of the 210.
That's what I'm saying, these are just option traders. This is crazy.
40,000 of the 210 in the one day. Okay, if someone
67,000, I don't know how you only have 40.
And the 210 in the 3 day?
Yeah.
I'm in the 3 day.
Okay.
Sorry.
No, you're okay.
I was in the 3 day. So tomorrow, the cool thing is lots of these products have some dailies. So a lot of these options have Wednesday expirations. Tomorrow, so these one-day options are Wednesday expirations. They're cheap. 68,000 of these 210s traded. For $240, we can synthetically get long 100 shares of Nvidia that's going to ride us through the Fed announcement tomorrow.
Correct.
So if there's like a big market move, we could have some skin in the game and want to ride it up if we can for only $240.
And that's why I think it's extremely important for everybody to kind of understand options. Just to kind of grasp this, that okay, if you wanted to, then not that you have to. You don't have to be like, I think Nvidia is going up or I think this, but just having the knowledge is power. It's kind of like that commercial from when we were kids where the rainbow would go across and it says, the more you know.
The more you know. The more you know. So it is nice that we have these Wednesdays, that the Fed announcements on Wednesday, we have these Wednesday expirations. There's not a lot, you're not paying a lot of time decay. If you want to take a shot on something having a big move or another, after, not for earnings, because if it's an earnings play, you are paying a lot of premium. But something that doesn't have earnings, if you want to play it for a Fed announcement move, you can.
And that Nvidia is interesting because it doesn't have earnings until the middle of May or the end of May. May 20th is Nvidia earnings. So when you're taking a look at that, those are some heavy volumes for something that's for tomorrow.
With so many
go
calls
to the 3
trading.
day. I want to see if the 3 days move too. So yeah, that same 210, you've got 40,000.
It does. It does have a lot. So what do we have in Nvidia?
We've got something in it. Let me look.
202, 222, 200, 180. I have no idea. Oh, we did a very wide iron condor, iron fly. Like kind of an iron fly, $20,
we separated
$20.
it, yeah.
A very wide iron fly. So
is it up anything? No, it's down.
Nvidia was about what?
It was probably 201.
9 points. Yeah, 9 points lower when we put this on.
It was probably 201
when we put this on. Yeah, but we've got all these call buyers. Does that make you nervous that Nvidia is going to have a big move?
Yes.
I know.
I mean, they were paying up for the calls.
I know, paying through the
bid or through the offer.
I don't know. I'm
How
half
much of a
tempted.
loss is it?
$100. I'm half tempted to close this and put on a upside diagonal.
Call buyer.
Upside diagonal or something.
Let's do it. Only because of where we are, what we heard. Let's do it.
Okay, we're gonna cancel that order. We're gonna close this.
So we're just going to show how we're not going to go out there and buy, because I think we can still take advantage of using premium selling. So we're using our options knowledge to do something instead of just going out there and buying it.
So we closed that for a loss, but could we?
But only $100 loss.
So it wouldn't be that much to, like if I even went out to earnings, through earnings, if I went to this 24-day and I buy the at the money, that's $10.
Okay.
And then I could go short term, sell. Sell.
Oh, meaning she can sell, and then when it rolls off, you can sell again. Then you can roll off and sell again.
Right.
Yeah.
Get a dollar in the 3-day, and then a dollar, and then a dollar, and a dollar, and keep getting a dollar every few days.
Yes, that's smart options trading.
Every few days. So if I get a dollar from that 220 call in the 3-day, and if it runs up to 220, fine. We have a $10 wide. We're paying $8. We're paying close. This is a different story where we're paying close to the width of the spread.
But this isn't an earnings diagonal.
This is a diagonal where I'm hoping I can get $100 in 3 days, $100 in 6, $100 in 8, 10, and so on and so forth until we get to that call that we'll have through earnings.
This is an earning. I like it. I love having a call through earnings.
Yeah.
In NVIDIA. Now you're speaking my language. I love it.
Okay, so that's the 210, 220. We're paying $8.90 for it. But again, we're hoping that we go up to 220, but not through 220 in 3 days.
To it, not through it. And it's 3 days, keep in mind. So then we're just going to sell another call against it, then sell another call against it. So we don't mind paying close to that width. Did you get filled on it?
I did.
Good job.
I did. So we bought the 24-day 210 call, sold the 220 call in the 3-day. In NVIDIA.
So, what is Intel doing with all the buyers that were there yesterday?
Intel, what do we have here? We have the Bob on Fire, which we've never gotten rid of. And again, $615, I kind of think maybe we should take that.
I always said that. You're like, I think we should leave it.
No, I thought we should take it.
I think we should take it. I don't want to leave the Bob on Fire trades.
No,
I think you make 50%. Intel went up a lot. We didn't make full profit. I think we should take it.
No, I think we should take $600
Yes.
$600 on a trade we've had on for 5 days. I think we should take it.
Yes.
Intel's down $3 today.
I want to go into Intel and see if we can find the volume that was traded yesterday.
So 628 credit.
I think we've actually been trying to close this.
Yeah, we did. We did put in.
There we go.
Okay, so we're out of that. I know we did put in an offer to close it, and we just said we weren't going to chase it.
There we go.
So we're out of Intel.
So let's take a look at the Intel. I just want to see if we can find out where that. So once again, yesterday there was big call buyers in Intel. More calls than puts.
I don't know where. I don't know what cycle.
I don't know what cycle either, but
I don't know what cycle. So we closed out of our Bob on Fire, took a win on that. If we wanted to try to get back into Intel, one option would be in the 17-day, maybe a downside ratio spread, similar to, I can't remember what I was looking at, where we're taking a very small credit, like in the 17-day, I've got the 80-75 downside ratio spread. We're taking in a very small credit, 35 cents, but we would get into Intel at 70.
If you're doing this, do you want to take a look at a buffer in the 17-day?
Yeah, we can look at a buffer.
I want to see if it gets it to the same thing. So you'd be buying the put spread and selling the in-the-money call. I just want to see where our break even is.
So if I'm just going to move it a little bit. So if we buy the 80.72.
So that'll bring our break even to 72. Then you're going to go up and you're going to sell something.
For 269.
That's not bad.
No, now you have a little bit of space. I'm going to go to the analysis page. You've got a little bit of room where you're not going to make money.
Yeah.
Like we have a little bit of room where we'll lose, but if Intel pops up, we can make $618. This is in April and May expiration.
And the break even is moved to where your last strike is. So how much are we losing in the loss area?
So the loss area, 180.
No, I thought it was less.
Let me try to move it. Let me try to shift it. I would have to shift this up. And probably shift that down.
Yeah, that's fine. You got to give up some profit potential.
So let's go back. Now our loss is 92.
That's not bad. That's not bad.
So anywhere to this downside here, we'd lose 92. To the upside, we'd make 507. And then we'd end up getting long Intel around 72.
So the buffer trade takes advantage of call skew, which if there's call buyers,
there's call skew.
There's call skew. So this is one of the trades that does take advantage of call skew with the upside profit potential.
Today's show was, I feel bad if you're a newer trader because today's show was busy, it was active, we did a lot of trades and we did some tricky trades.
If you're a newer trader, tune into Dr. Jim. He's got a great show on YouTube.
Yeah, he does. He does. He explains everything, breaks everything down.
If you're a newer trader and then once you gain a little bit of knowledge, you come to the dark side.
Okay, so I'm going to put on this buffer. We have $500 in profit potential to the upside.
I like these in things that I want to be long and gain profit in, but if it pulls back, then we get in it at a lower price.
Sure. So this is the we are buying the 81.72 put spread in the 17-day May, and then selling the 87.5 put. This is the buffer trade.
Yeah, let's do it.
503 credit. Okay, so that's it.
I know, then we're done for the day. I want to make sure you don't have to pop in.
Let me make
Florida
sure.
7's our last tweeter as far as I can see.
And I'm going to pop out the side.
And I've got everything pushed out already.
Today, we did a lot.
We did quite a bit.
Okay, in Microsoft, we put on an early earnings diagonal.
Yep.
In Hood, we put on a diagonal. SoFi, we sold puts. TMC, we sold puts. OKTA, we sold puts. NVIDIA, we closed our Iron Fly and put on a diagonal instead. Intel, we closed our Bob on Fire trade and we put on a buffer trade.
Yeah, we did quite a bit.
We did.
And we still have, if I'm looking at this correctly, I think we're okay in buying power too. We're still
We
okay
probably
in
have
buying
like $13,000 in buying power.
yeah. 15 right now, but I don't
Okay.
think
All right. That's it. We're out of time.
All right, everybody, have a wonderful afternoon. We will be ringing this bell later at 3 o'clock. I was going to say 2:30, but
One more time because I don't think we'll get to sing later. You can ring my bell. Ring my bell. All right, everybody. We will see you. Hopefully, you can see us at 3 o'clock ringing the bell.
Remember to trade small, trade often, laugh with us, learn with us,
and watch the Liz and Jenny show.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is Thomas Tuesday.
Thomas Tuesday.
Thomas Westwater here. How you guys doing?
Doing good. Yeah. Traffic was crazy this morning. There was like a semi that just obliterated 3 cars. So I finally went past it after sitting in traffic for an hour. I was one of those people that was,
Yeah. That's why the traffic starts, because everyone slows down to look.
Rubbernecking, as they call it.
Yeah. Well, that's
was it a jackknifed semi?
It wasn't, but the semi didn't look too bad. But the cars were, they were totaled for sure.
Isn't that funny that we only apply that term to semis? Jackknife.
Yeah,
it's true. That'd be kind of wild, like driving a truck and then just watching the tail end just spin out.
Yeah, right. Yeah.
Don't like that. Don't like that. Well, I'm glad that you avoided that, and you're here safe and sound. I gotta say, the corn and wheat positions popped off this morning, and I closed both of those.
Nice.
For nice wins. These were like, I don't remember when we placed these, but these were call diagonal spreads, both of them, and then we bought back the short calls into the sell-off, and then was able to sell out of the long calls this morning in both of these products. $100 winner in wheat and like a smaller $10 win, something like that in corn. But nice trades either way.
Oh,
I'm still in my corn, still holding it. Probably should get rid of it, but I don't know. See what it does.
I mean, what's the worst that can happen?
Right.
I feel like when you ask that question, is this a Hormuz type of deal here with the big pop-offs here?
I mean, for wheat, I think it's the crop conditions are really bad. The weather is really bad, and outlook there's not really rain after. There was like a big frost across the wheat fields down south. I think a week ago or 2 weeks ago, and that crop progress report is still showing. They rate them in conditions like very good, good, fair, poor, very poor, and the very poor. It's like I think it's near a record, not a record, but pretty close to that. So the crop's looking really bad, and then oil prices are supporting corn as well. So, I mean, I think you might have a lot more upside in the grains from here. April usually, there's some seasonal strength here, but things are looking pretty bullish for them.
Yeah, for sure. Big move today. Corn is actually, wheat is leading the futures market in terms of percentage change today. Huge move. Big move there. But yeah, wheat up 3.5%, just over that. Crude oil up 3.75%. Some other energy products catching a bit as well. Corn up 1%. And then to the downside, silver and gold down 2% or more. NASDAQ down 1.3%. E-minis down 0.5%. So seeing a little turbulence here in these here markets.
Just a bit, yeah. I always talk about the alerts. That was one that I saw, was it early this morning when oil dipped below 46? Oil. I always do that. Gold dipped below 46.50. Ding, just went off like, oh, what's going on here?
Yeah. Similar noise. But yeah, down to 4,600 now, just under it. Kind of crazy move, but the VIX is not moving, which is always just very interesting to me, into a sell-off that's decent enough to warrant an upside move in the VIX. Just not seeing it right now. So we've got so much data coming out too this week. We've got, just looking at SPX, the implied move for the rest of the week is 100 points, but a lot of that is backloaded in that April 30th expiration. We've got a Fed decision tomorrow, and we've got a slew of Mag 7 stocks reporting on Wednesday, Thursday after the close. So big implied move. Almost all of that 100-point move is priced into Thursday's expiration. So craziness.
You done anything today?
Outside of the corn and wheat positions, I have not. How about you?
Same. I haven't done anything. I feel like we could and should close lower. That's partly why. So I've done nothing. I got these short delta plays that I'm just kind of holding on to. I just feel like it's going to be one of those where we end on the lowers of the day. We'll see. I don't know, that's just kind of how I feel. That's how I'm playing it. When we do, maybe I'll close up a couple of things. But for now, done nothing.
Yeah, I've had my eye on these SPX positions. I got this iron condor right at the short call strike. If we get a continuation of the sell-off, this iron condor will come in nicely. But then this 30-day butterfly picking up value today. This 2-day one's going to expire worthless, most likely, but you never know. We'll see. But this butterfly has so much heft to it that if we do get a sell-off below 7,000, closer to 6,900, 6,800, like this will be a couple $1,000 winner, and it'll offset this butterfly for sure. So we'll see what happens. But if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You can throw your trade ideas, questions along the right-hand side chat. I've got the News and Insights tab pinned to the chat there on the right. We're going to have a bunch of written earnings previews for you for the upcoming earnings announcements over the next 2 weeks. So check that out and, see if there's any trade ideas that are sparked from it. But we do have some slides.
Yeah.
Want to jump right in?
Yeah, let's do it.
Cool.
Yeah, we talked a few weeks ago about the pre-war behavior versus in the war, and now I was looking at comparing the behavior of assets from the war since the ceasefire. It's only been I think not even 3 full trading weeks since the ceasefire, but enough data to kind of see how the market's moving. So just go with the first slide, get right into it. This is during the war. We saw crude oil would usually rise into the weekend. Didn't really fall any days except Wednesday. Just a little softness there in the middle of the week. But really Thursday, Friday, you get, those big moves up. And it's because the market, anticipating something falling apart over the weekend, an escalation. You see that with equities. They do decent on Monday, and stay elevated until Thursday. And then Friday you'd get, after that big oil up move on Thursday, you'd get just equity selling on Friday going into the weekend. So those are the two I'm really looking at. 30-year note also, you get yields increasing through the week after a little bump down on Monday. Gold, there's not too much of a pattern there. Thursday would go down, Friday go up a little bit. But let's go to the second slide. This is since the ceasefire. And you kind of see a little bit of different behavior. You see the S&P 500, really doing better going into the weekend. So people are more comfortable in holding on to risk. You'd see oil prices now up at the beginning of the week and through the week, but then selling off on Friday. So the narrative has kind of changed that we're expecting, good news throughout the weekend. So, traders selling that oil, not wanting to have that upside risk in case negotiations, go well or anything like this. Gold kind of still an ambiguous pattern. 30-year note acting a little different as well. No clear pattern really, except selling during the week, then a little bump on Monday and into the weekend as well. Expecting good news perhaps. Trading this, I don't know if it's informing me as much as it was during the war period, but I think, if you be cognizant of, you get some oil selling on Friday, especially with prices up here more and more. It's interesting because the oil market now, there's so much conflict in the analysis. And really trying to estimate demand side impacts is extremely hard. Estimating supply side a little easier because you have more math behind it. How many barrels are displaced from the Strait of Hormuz. It looks like tankers, the U.S. blockade is now stopping some Iranian ships, but it looks like they've gotten a few through by staying very close, hugging the coast of Pakistan. I'm not sure, if the U.S. will adapt to that and try to stop that. They really can't if they stay in Pakistani water because you need to do the blockade in international waters. But, oil prices pretty strong today, moving up, and now we're seeing equities down. So that correlation is back in play of oil up, equities down. So for today, on oil, I've got an order, and I'm selling all my put spreads in the. I got put spreads in the CLM6 contract and the CLN6 contract.
and also putting on a short call spread in the N6 contract at 110. So, trying to still play this oil volatility here. And, if we get that sell-off on Friday, I don't know if that's going to hurt your positions too much, because with oil, you can still get pretty wide right now. So, a 1% sell-off on Friday, it's not something that's going to flush you out of most positions, as long as you're sized appropriately and you have your strikes selected carefully. So, Tuesday, it's interesting, and another down day for equities here, like we've been over the past 2 weeks. So behaving well there. Maybe we get a bounce now, following the pattern of the last 2 trading weeks going into the weekend. I think this week it all depends on how those set of earnings we talked about, what is it, Microsoft, Amazon, Meta, Alphabet, that's huge right there. Thursday, huge amount of market cap concentrated into the stock market. And then Thursday we get Apple too. So, the past 2 weeks, they haven't had heavy tech earnings. So, that's a wild card here when you look at these charts. And, if the psychology of the market holds, de-risking against higher oil prices into the weekend, expecting good news, earnings could throw all that off. So it could always change. Myself, I'm still expecting oil prices to stay pretty elevated. Even if the Strait of Hormuz, I think the last thing Trump said was, he's not happy with the most recent Iranian proposal. So it doesn't look like we're really moving forward. We're just kind of sending things back and forth. There's really nothing tangible. But the longer this goes on, of course, the more impact to the oil market. I think Goldman, or one of the big banks, they're finally starting to really lift their oil price forecast for Q2, Q3, Q4 to stay higher and higher. We're already seeing companies, especially those that sell consumer products, start to say that their margins are going to get impacted more and more. Of course, it's the tech stocks that are really, lifting us, and the AI enthusiasm. So I'm not sure if the market will, if there'll be a bearish force over the whole market. But for me, I'm still operating mostly the same. I'm expecting oil mostly to stay between 75, 80 to 110, 115. So I'm operating there. So I'm taking off short put spreads today. I'm putting on short call spreads. So as we get more near the top of the range, 110, I'm selling call spreads with about 10 points out, so I can tolerate a little bit more upside. I'm in the N6 contract, so we still got duration there. And I'm not really changing anything that's working on crude oil, just playing it, expecting it to stay elevated, but still range trade. And, I think if anything, if you had to pick, a direction from here, I think maybe staying the same or gently easing off unless there's serious escalation again. But I'm interested to see if this Friday, if we'll follow that pattern of kind of backing out a little bit again against upside risk.
Love it. Yeah, I think as oil continues to creep higher, you can see it in the IV 5-day change as well, up 60%. I mean, all things considered, those numbers are going to fluctuate based on the backwardation, that just the huge implied volatility we saw in the K contract before the M. But at the end of the day, 85% IV in crude with a 16-day expiration, this longest term expiration that still settles to the M contract, 13 points in either direction, I think is pretty fair to your point. And I think we could chop around this 100 level, especially as we continue to see issues overseas and supply and demand issues. There's nothing that's going to send this much lower, and I think escalation would obviously send it higher. But how much higher and how long that lasts, I think, is the question. So I'm looking at just like a 120, 121 short call spread, and then like an 85, 86 short put spread to just cover this range. And what's interesting is into the escalation, the K contract went nuts. The M contract got as high as 105. So it wasn't as crazy, but now the M contract is the active contract, which would be the one that goes higher if things were to escalate, the backwardation were to steepen. So just something to keep in mind. that this peak isn't necessarily representative of the current peak now that the K contract is expired.
Yeah, and I mean, the prompt spread right now, we saw it after the ceasefire, the 2 weeks after. The prompt spread, went from, it was trading at 15, it went all the way down to, got down to 175. And now we're back up at 5.5. So, the past 10 days, really, we've seen the prompt spread increase again. And the 10 days before that, we saw it collapse. And the initial escalation is what pushed it up in the first place. But signaling some tightness in the oil market, and then you got things like crack spreads. They've stayed elevated. That means the fuel prices are outpacing the actual prices of crude oil. So, plays like refiners, VLO, they've done very well. There's the crack ETF. Not really too tradable, at least I don't trade it, but that's staying elevated too following the crack spread. There's more ways to play it than just the futures. There's USO, of course, too. That's good if you're still in a backwardated market. And I just don't see a big relief coming anytime soon. Negotiations have to start moving in the right direction before you get a deal. We're not even really seeing that yet.
Yeah, and all we're seeing really is elevated prices in the front month and continuously elevating prices in the back here. October, November, December, these were all in the low 70s, even during the escalation where the K contract was exploding. This back month, I remember being at like 70, 71, and it got as low as sub 70. It was like 69 and change. Now we're sitting at 73, 74, 75, all the way trickling up here. So your exact point is being priced into the futures market right now, where all the way through the end of the year, we've got the lowest price of 77, which is still on the higher end of the range of the last year of trading in crude oil prices.
Yeah.
Could be wild. I was just filled on that. The 16-day longest expiration that's still in the M contract, capturing this heightened implied volatility before we go to the next contract out here. But yeah, just your cookie cutter setup, 86.85 right at the expected move to the downside, and then outside the expected move to the upside, the 120, 121, collected $300, risking 7. And you're 1/3 the width trade here, but with 16 days, it's a shorter term one. And if we chop around this 100 mark, we could see that get 50% profit in the next week or so, maybe a little bit longer, due to the heightened implied volatility. But defined risk, trade in the range.
Oh yeah,
Yeah.
Beautiful.
Yeah, that was the other alert that went off this morning at some point in time overnight. Oil climbing above 100. So it sucks and doesn't seem to be relenting at all.
Yeah, I mean, there was some news on OPEC too. The United Arab Emirates will leave OPEC. After war, yeah, it has an impact. They could use more of their spare capacity. But during war, with the Strait of Hormuz still largely closed, they're not going to start utilizing that spare capacity right away. The UAE is like the third largest producer in OPEC, so significant. Them leaving, this is a huge blow to the cartel. Iraq's the second largest producer, but the UAE kind of has a little more political influence. So with them gone, now Saudi Arabia is pretty much, they have more control over really the cartel. They're really the shot callers with the UAE out. And then the UAE, after this war is over, probably bearish for oil prices in the longer term, since they can utilize that additional 1.2 million barrels per day of spare capacity.
We had Ryan on yesterday, and he was talking about he's keeping his eye on that report that I think it comes out this week, right? For crude.
Which one is that from?
EIA.
Yeah.
Oh, yeah.
Are you looking into that at all, or are you just kind of playing the macro market more?
Yeah, no, I'm looking at that. We should start to see bigger and bigger inventory withdrawals from this report in the coming weeks. Some people were expecting it to start last week. It really didn't. So this week is when it could start. SPRs, US and otherwise, and the IEA still have to come down to get that oil on the market. So, you're going to get stock withdrawals for quite a while now. Especially there's so much export pressure on the U.S. right now with the Strait of Hormuz closed. So exporters, producers, benefiting from that. And, we'll have to see. Yeah, the report comes out Wednesday. The API, American Petroleum Institute, I think their report came out this morning, if I'm not mistaken. Let's see. So their report, it didn't come out yet. Yeah, but the EIA report, we start getting these big draws that could add more upside to the market. Of course, we expect draws, but so they'll have to outpace the analysts to really get that big, market reaction.
Yeah, it'll be interesting to see. Seeing a little bit of a spike in implied volatility for tomorrow's expiration could move some markets. But yeah, this whole week is kind of wild because we got, again, Fed, we've got the EIA, we've got tech stocks reporting earnings. Like this could be something. Could be something.
Yeah.
Beautiful. Well, we're in crude in a neutral way, just trading that range, see if we can chop around this level and capture some premium there. Love to see it. Popping over to the YouTube chat now. Again, if you want to join us there, just head to the Tasty Live channel. Margin Walker closing some nice winners in corner wheat today. Love to see it.
It's like Skywalker.
Yeah, right.
Yeah. Margin Walker. Amazon Leap setup. Well.
Leapity leap.
Well. So Amazon's at 260. Implied move for earnings is $17. So pretty low. I mean, 5% is pretty low for Amazon, I would say, for any tech stock, really. 5% of the notional. But yeah, Leap setup, I guess it depends on how far you want to go. But the further out on the strike plane you go, or the expiration plane you go here, the lower your implied volatility is. So the options will be more expensive, but they're time-based options versus implied volatility-based options for the most part. So yeah, Leap technically is over 360 days. So you're going like June, July, December, Jan, somewhere around there. I would just look at where the most liquidity is in these options if you're trying to just buy a Leap. But it's Amazon, so I don't think you'll have too much of an issue. But I think June is probably going to have more than July. And then December and January will have both liquid markets as well. But yeah, the further out in time you go, the more inclined I am to go out of the money or further out of the money, because that's where you get the gamma. If you do get the move from 260 to 300 and 300 and above, but it's up to you. It's hard to sell premium against a long-term leap like that. That's really expensive, unless you're going like really far out of the money. Because these options, just like pulling up June, $5,000 for an at the money, and then you can sell something against it, but you'd have to be above 300 to make sure that you're paying less than the intrinsic value here between 260 and 310. So it's still doable. Selling the 300 or 310, you're kind of right there. So I don't actually mind that if you're going longer term. Still expensive though.
Yeah, and that's such a drop in the bucket, the 310 selling against that. It's like, you really want to do that one?
Yeah.
I mean,
yeah, you could also do like a shorter term earnings trade, and then if it drops, like risk a couple $100, for example, for an earnings trade. But if Amazon drops 30 points, now you go do the leap, because now you get a depressed implied volatility. You've got more room for it to go to the upside. So I kind of like that idea a little bit better, I would say. Let's see. We're looking at Microsoft now. But yeah, we'll have a deeper analysis of Amazon earnings trades tomorrow. We'll wait to see where Amazon settles at, but tomorrow after the close, we'll place those trades tomorrow for sure. After Microsoft blew past 405, I did not manage the long spread placed 20 days ago. 395 long, 405 short. Nice. So it's a winner.
Yeah.
That's it.
So far, I heard no problems.
Yeah, I hear no issues. 395, 405. Yeah, trading for 760, 230 left. Basically a short put spread now. You just can collect this extra extrinsic value if it stays above 405. So that's where your risk is. If Microsoft chops around here or rallies on earnings, you'll make an extra $200. If not, you have the ability to lose all that value. So if you're uncomfortable with that risk, maybe you make an adjustment, but don't mind it now being a higher probability in the money trade. How do you defend a crab trade? It's tough. I mean, the first things first, like just like a ratio spread or butterfly, like you can sell out of the debit vertical spread that's in the money, but the options are right on top of each other. So that's basically what you can consider. And then your short call spread, if it's a call crab trade that's in the money, not much to do. That's the one caveat of those trades. They're cheaper than a diagonal spread, but you have upside risk for call crabs and downside risk for put crabs.
That's why I try to widen them out.
Yeah.
If I can, bigger names, like at
Yeah.
least $20 wide, $15-$20 wide.
Yeah.
For that reason.
Yeah, because then you have a much wider range, so you don't get the gap risk.
Yeah.
If it happens. Hood, Robinhood, after the close today. You trading this? Do you have any positions in there?
I have nothing. I'm not trading it. I am obviously very, very interested in what they're going to say for obvious reasons, but no trades. And I'm not really interested. Unless you can convince me here somehow, but I'm just waiting until Wednesday. You know?
Yeah, it's fair. You trading this at all?
Robinhood? No.
Yeah, it's it's been super volatile on previous earnings reports.
Yes, it has. Which I typically like.
Yeah.
Because I like to play earnings for moves and not for selling vol.
The trade idea here is a 75 strike short put.
How did I know?
Yeah.
Like, I feel like that's kind of where most people want to do with this.
Yeah. I would say I would choose a different strategy personally, because unless you want shares at 75 or below, your base is at 70. If you want shares at 70, totally fine. But it says you're going in with some size here. You have to be able to withstand all variants. If Hood goes to 50, you can't be closing a losing short put with undefined risk. It doesn't make any sense. Instead, maybe you go with an upside diagonal spread where your risk is defined and you can make just as much money. You can make more than $500 on a trade like this one's an 80-95 call diagonal spread for $7. Just a little bit more value, but if you look at the Theo P&L and we push this to expiration this week, you're going to make on a rally that's 10, 15 points, you're going to make more than your short put with way less risk. So that's where I would go for earnings. And the nice thing about these kind of trades is if you do an 80-90 call diagonal spread, same story, you're still going to make just as much as your short put. But let's say Hood drops to 60. Now you can sell your put and get into shares at a much lower basis. So earnings trades, I like to avoid undefined risk just because you just never know what can happen here. And you will be much more happy getting into a short put at 60 after a big sell-off if you have $500 of risk here versus having a $2,000 loss at a basis of 70.
Yeah, and the only thing I'll add to that, one of the things I love to do is looking at similar comps in the industry, different, similar names that are doing the similar type thing. And if you look at Schwab on the 16th, they had their earnings and the stock did not respond well. So, it's not guaranteed, but there's a good chance it could end up, Hood could end up suffering the same fate. So to Mike's point, yeah, I'd want to be risk defined. And if it does drop, then you can get your short put.
Yep. Liz and Jenny have a diagonal in Hood. Is that so?
Let's
pull them up. Hood, diagonal, 90, 82. Okay, so they're doing a short-term one. 82 long, 90 short. So we're looking at something like this. And yeah, if we push this to May 1st expiration, yeah, same story. Probably crush implied volatility a bit here. Let's bring this down 20 percentage points. So yeah, $3.70 debit, you can make $3.50 on a rally up to 90. So cheap, risk one to make one type setup. I like it. Another hood trade.
Whoa.
People are all over this thing. 70.85. Oh man, I don't know what you have here, Shawpaw. Credit. CSP. What is CSP again?
CSP. I don't know.
Covered call at 85. I don't know.
idea.
I really don't know.
I have no idea.
I honestly have no idea. Both June expiry. Is it advisable to buy a straddle for
Call spread?
May 1st? Call
Yes.
spread? Call spread?
Yeah.
Maybe. An 82 straddle. I don't really love this. Like buying all implied volatility for $700. You're not really going to make anything on this trade unless you get a big move, because your break evens here are down at 75 and 89 just to break even on this trade. So I think if you're trying to hedge, there's way cheaper ways to hedge. Like just buy the 91, 72. This is an example, but like put up a lot less value. And if you do get that 2-3 standard deviation move, these options will still go in the money, but you have a lot less risk. Cash secured put. Okay. Cash secured put at 70 and covered call at 85. Yeah.
Okay.
Sure. Yeah, same story though. If you have a cash secured put both in June, just buy the put at 70. Like your risk is below 70. So just give up 30 cents instead of $800 with this straddle. And then 85, if you have the covered call up there, then you're golden. If you get a rally up to 85 or above. So yeah, if you're worried about your downside risk, I would just buy the put that is equivalent to your intrinsic value risk, or your strike at least. A lot less risk if it just chops around. What else do we have for earnings? Are you trading any other stocks for earnings today?
Not me, not the kid.
I have a short put spread in Microsoft, 405, 400.
Mm-hmm.
Oh, no, I'm going to keep it on.
For May or June?
It's all the way out in July, so 80 days, yeah. So not really a play on earnings, but you know.
Yeah, I mean, it still benefits if you get a nice rip higher. I do like this, that it's up today on this market sell-off. I think that's interesting. I think the general public wants to rip this thing higher.
It's got it. You go, trading at 360.
Yeah.
Last month. It's
Yeah.
crazy.
It's insane. But they got to post strong numbers with strong forecasts. But I think you could see a pretty big move here. Earnings are reflecting a 30-point implied move for the week. So this is one of the bigger ones in terms of implied volatility for the Mag 7 stocks. Like we just looked at Amazon as 5%.
Yep.
This is closer to 10%. It's under 10%, but still a 2 standard deviation move is a 60-point move. That brings you back to 500. That would be nuts. And we would love that with these positions we have. Super Bowl and a call calendar at 500. Would be absolutely magical if we got that.
We take it. We definitely take it.
Yeah. UNH popping off, up $14 today.
I was going to say that. Yeah, UNH and Humana I'm seeing are up today.
All of a sudden, healthcare's back.
Yeah, it's back, baby.
So back. This is another one that could be interesting because if you look at the 2-year chart, there's a big gap here. We're at the top of this trading range, and then you've got this huge liquidation gap, and you could see this thing just blow right through it.
I think it might be in sympathy with CNC earnings. I think they're all in the same group. I think that's why. I don't give a damn what it is. I'll take it. I know you have the UNH. I have the Humana.
Yep.
For work.
Yeah, this one could be another one. Liquidation here.
Sure hope so.
Yeah, UNH is interesting. We've got this June-May calendar spread at 370. I guess I should probably close this. It's right at the strike. That's what I've been saying. Just close it if it's at the strike. We'll route it. $275 on a $440 debit. Love to see it.
Yeah.
What else we got? Palantir.
This name has been very quiet.
Ominously quiet.
Yeah. Very quiet.
Yeah, I haven't traded this. Looks like they've got earnings May 4th or around there next week. $15 expected move on a $140 stock, so over 10%. Big implied move there. And this is really interesting. Like, this is the nice setup if you're trying to do near-term calendar diagonal spreads. 15-point implied move for 10 days, 20-point move for 50 days. So 75% of the implied move over the 50-day cycle is priced into the 10-day cycle with 1/5 the amount of time. So that just means you're going to be able to, like, just random strikes here, 150 trading for $4 and change. The 150 in June is trading for $8 and change. So you can reduce your cost basis by 50% on this long option with this 10-day short option. You have a lot of flexibility of strategy there, especially if you did like a really near-term one, 150, and then the 17-day 150. Look at that. Calendar spread for less than $1 in a product like Palantir. Quite interesting.
Yeah.
Quite interesting. SoFi.
As I like to call it, Sophie.
Sophie. That's how I say it too.
Sophie.
Yeah, earnings tomorrow morning. They're trying to squeak this in here, huh? $1.50 move on an $18 stock price, so pretty big. I think this one will be interesting for sure.
I feel like the public likes this name.
Yeah.
I used to have something in here. I haven't had it in a long time, though.
Yeah. It's basically, it's going to be interesting to hear what they say about like the loans, and the app banking is kind of a subtle thing, but I think it would be interesting if they said like, we've reached an all-time high in cash loans to people because inflation is so high, nobody can afford anything, blah, blah, blah.
Yeah, and I mean, there's that new level of finance, right? I mean, it's funny because like, so my main bank is a credit union. I've had it for 25 years. I got it when I went to Wisconsin, and that's been my main bank. And the biggest, toughest thing about that was when I moved. It was like, yeah, I'm paying for cash if and when I get that, and the ability to not go to the bank, right? Which was a thing at one point in time. But in the 20 years that I moved, I don't need to go to a bank. And that's what they are all about, right? Like, who goes to a bank anymore, really? I mean, how often do you go to a bank? When's the last time you went to a bank?
Yeah. Oh, no.
I actually did. I went to a bank. It was a great day. I went to the bank because my condo building, the management was like, we have this cashier's check from you for $200 that we collected when you like moved in. And I was like, well, that's just like idle cash, right? They're like, yeah, I get. You could just like bring it back to your bank and they'll deposit to your checking account. So that's exactly what happened. Brought it back, $200.
Well, why'd you take it to the bank? Why didn't you do it like? Why don't you take the picture and like?
Oh, I don't trust that.
You don't trust? There it is.
Yeah, that's the boomer in me.
You don't do that?
I've never done that.
Really?
Yeah, I've never
that's
done
funny.
that. I'm always just like, nah, can't do it.
Yeah, I mean, that was something I've been doing a long time since my bank is like, 2.5 hours away. But
yeah, I think if it's a personal check, I think it's different. But like a cashier's check that I bought, I don't know. I was like, I think I have to bring this back to you. So I did. But yeah, I've never done that. I always just bring it in.
That's funny.
Yeah. A lot of Apple chatter here. Apple. How about a Tim Apple calendar?
I was thinking that. I was literally thinking that. They read my mind.
Call calendar heading into earnings 275 or 280. Yeah, I mean, it depends on what you are doing in terms of the long option. So if you want to do like a 6-day, 3-day, like a short-term one, totally fine. 275, 280. Yeah, you're picking up a ton of value in the short option. So like these short-term ones, I have both of these on for 75 cents total. So really cheap way to play for an upside move or an inside up move for Apple. If you wanted to go more long-term, you could do May or June. I always like to go further out if you can afford it, just to give yourself more time for a reversal if you're doing a call calendar and stock drops. But yeah, you're still picking up a ton of value here. Like, look at that. Paying $6 for the 280, collecting almost $2 for the 3-day. Paying $8 and change, collecting $3 for the 3-day. So your cost basis reduction is pretty good here in Apple for the 3-day relative to June. May, it's going to be a little bit better, but you're going to have a bigger vol crush in May after earnings. So if you're trying to avoid the vol crush going to June or beyond, similarly low implied volatilities, you can see it's about a 3 percentage point, almost 4 percentage point boost, which is a loss for you if you're buying this May option. So yeah, definitely lots of ways to play it, but we'll trade this on April 30th after the close, just because like there's so much that can happen this week.
Yeah.
I think this is really an important week to just like, if you're trading earnings in isolation, just wait until the earnings announcement day, because you've got the market down right now, a percentage point. You've got a Fed announcement tomorrow. You've got other tech stocks reporting tomorrow that can push and pull these other tech stocks for Thursday. So it's just like, just wait until Thursday if it's reporting Thursday after the close. Wait till tomorrow if it's tomorrow after the close, because you just never know. Like, you could wake up, the market's down 100 points, and whatever you thought was going to be an earnings trade is now a deep out of the money earnings trade.
Yeah, particularly for things like these call calendars. I mean, if you want the right setup, you got to wait until stock is closer to where it might blast off or fall down from earnings. So you kind of need to be right on those strikes.
Yeah. Northern Oil and Gas. Have you traded this?
No, I haven't. Yeah, I haven't traded this one.
NOG or something? Yeah, NOG. I remember this ticker.
28 strike call in June. So I assume you're buying this call. Yeah, I mean, I typically avoid these products that don't have weekly options because it just shows you there's not enough activity. There's not even 1 million shares traded here in NOG. So you're going to have a little bit less liquidity, but this is actually not too bad. 15-cent bid-ask spread. I think if you want to risk $150 and play for an upside move, I don't hate it.
Yeah, I used to run, like not walk, but run towards names like these back in the day. Just because it was like mid-cap and you could have a bigger chance of a big move, and, I would just hope for that. But yeah, you're right. As I've matured in trading-wise, I want something that's way more liquid. I'd rather deal with the way more liquid stuff.
Yeah. Yep. SoFi. What did we talked about it, but we didn't look at it.
Oh, no.
We were just
Earnings
like,
play?
yeah, sick company. Next.
They want an earnings play?
Yeah, earnings play. So $18 stock, like under $20, I'm either just buying shares or doing something that's, longer term. Like, why I wouldn't mess around with these near-term options when I can just afford to just like, if I want to play an upside move, why not just buy like a Jan 30 strike call? 25 strike Jan call. Like, longer term, these options in like Apple and Microsoft, they're thousands and thousands of dollars, but a product like SoFi with a $3 implied move over the next 2 weeks, if you get a $3 or $4 or $5 move, this option is gonna explode. You can see this here. This option is this is the 25 strike for Jan. Right click on it, view option and chart. This option got as high as $12, $13 in its heyday in SoFi's rally, and now it's trading for $2. So I would be more aggressive in these smaller price products if it fits your wheelhouse of risk. But if you're trying to sell premium, of course, the 3-day is the way to do it. If you're trying to just capture all that IV for earnings, and you can put on some smaller trades here too, like a 20 strike calendar, long May, short the weekly for 30 cents. You could do this a couple times if you're trying to risk $100, something like that.
Sure.
Would you play Enphase earnings? If so, how would you set it up? Another one I haven't traded in a long time.
I mean, we should ask them, why do they want to play Enphase earnings?
Yeah. Bullish or bearish? Let us know.
Yeah.
But yeah, earnings after the close today, it looks like $5 implied move on a $34 product. So big implied volatility there. I would say it's the same thing as all the other analysis. Like, stick to defined risk. Even if you want to sell a put, for example, you could play for an upside trade for a lot less risk. And if end phase gets blown out to the downside, then you could sell the put for a better cost basis reduction. BBAI?
Remember that name.
BigBear.ai. $5 stock, $4 stock. Nothing to do. Buy shares. Yeah, these options aren't, they're just like, they're not really tradable. They're not trading much at all. You can trade them for sure, but $4 stock, why not just buy shares and have unlimited time?
I mean, the stock is either going to zero, it's going to be like $15 or $20 in like 2 years. And, you know, either way, I mean, whatever you do, if you buy the stock, just put it in another account, don't look at it.
Yeah.
There's nothing fundamental about this stock right now. It's caught up, you know, it's all about what's going on in AI. And so if that really starts to take off, maybe this does somehow, maybe. I mean, I don't even know. Traded around this stock the last couple of years and it's kind of gone sideways at times. So I think if you buy stock of shares, you just don't want to look at it every day.
Yeah. End phase bullish since it's been beaten down pretty badly. So same story. I mean, July 77% IV out here, 85 in June. So you're still going to see a decent vol crush there. And these implied moves are almost the same. 795, 658. We'll call that the same for another 30 days of time. So I would go to July. If you're bullish, let's just throw up the cookie cutter at the money call for $5 and then selling the 3-day. Yeah, something like this is where I'd go. Like, sell the 40 for $1 right at the expected move, buy the 35 in July, $4. This is your standard call diagonal spread setup. And you can make, $300 if you hold this to expiration on May 1st and you get a rally. So,
although, as much as I agree, I will say, it depends on how bullish are they on this thing.
Mm-hmm.
Like, do they really like this stock?
Mm-hmm.
If you really like this stock, then yeah, you probably are interested in selling a put. I mean, we're not, but if you are and you have the money to eventually take delivery, this is one of those situations where you would do that. You could even sell the May. Those Mays are high. You can sell that May 30. Like, again, if you're interested in getting long stock at some point at 29 and change, then sure, but it's not what we would do. But if they said bullish. So if they're really that bullish and you have the money, eventually take delivery. And again, if it's a margin account, I think you'd probably take delivery. It might end up costing like $1,700 or something like that. And again, I think right now on the margin account, you can sell for that 30 put for $1 and change, and it would be about a grand in buying power. Like, if you're that bullish on it, then it's worth selling a put. Otherwise, if you're just trying to play for earnings, you don't want the opportunity to take delivery, then the trade that Mike suggested is probably better.
Yeah, for sure. It's all about your long-term plan after earnings that will help you decide on that strategy.
Yeah, I feel like anybody asking about in phase now is possibly that kind of bullish. You know what I mean?
Yeah. I hear you. SOXS. I know you have a position in there.
I do.
Is it too late to buy a call? Or is it too early to buy a call in SOXS? Not necessarily, I don't think.
Not necessarily. I mean, there's a decent chance that this market gets the kitchen sink thrown at it over the next couple of days, and semis all turn around and things could get a little ugly. That's part of the reason I have this trade on these shares. So I think we're about to trade sideways a little bit here. I feel, right? We kind of feel. I think it's probably a good time to still do it.
Yeah, and if you just play like, okay, where was this range where we kind of peaked between 35 and 45? I don't know what your expiration's looking at, but like, these are cheap options. The 35 to 45 range, you're looking at $1.50. 35 is $1.50, we'll call it. Out in August, November, $3 and change. So yeah, these options aren't that expensive relative to the appreciation you can get if you are right and you get the big move. So August 35, we right click on it, view this option in a chart. There you go. It's trading for $1. It was trading for $10, $12 at the peak of the mayhem that we saw.
The great thing too is they already did a reverse split. That's always my biggest fear in names like this. They're gonna do a reverse split. It's like, damn it. You know what I mean? Like, it's just so annoying. But they already did one. They did one on March 5th. Yes. So we're good for a while. You can just trade freely.
Last one, SPX 0-day trade. Can you show a setup? I mean, traditionally, I just do like these iron condors, collecting $2, risking 3. But this is a 14-point implied move for the rest of the day. Don't really love that in terms of the range. It's only a 30-point range you can cover here. And this is kind of one of those markets where one tweet changes the whole market dynamic. So I like to do these 1 day going into 0-day. So going like with a 1 day, 70, 80, 70, 75, and then 71, 75, 71, 80 for $2. Like this is my traditional setup where you have a lot more space for this thing to work. But that's what my brain is at. Any other ideas for it? You
No.
Off the sauce with the 0-day stuff today?
Yeah, no. I mean, kind of the same. I mean, other than that, it's just directional. Like, you don't really want to be doing anything too heavy in 0 DTE. I mean, your fortune, like you said, your fortunes can change so quickly.
Yeah. Or if you're going to do it in the morning because you have a lot more implied volatility relative to now, where you're not collecting anything really.
Yeah.
You know?
Agreed.
But that's it. Thanks for tuning in. We did get filled on that crude oil iron condor for 16 days out. So thank you for the analysis as always.
Oh yeah.
If you want to follow us on Twitter, reach out to us. You certainly can. I'm at Trader Mikey B. Jamal's at Jamal Chandler, and Thomas is at FX Westwater. Stay tuned though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. And we'll be back same time, same place, 11 a.m. Central tomorrow. See you then. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
What is going on, everybody, and welcome back to Risk and Reward. Today, we've gotten a little bit of a downside slide and then a little bit of choppy markets since then. But we'll do a little tour of the market here in a minute. Before we get into that, my brother Gus, how are we doing today?
Doing good. I did, and when we can get into the weeds of this in a little bit, but I did get short some SanDisk yesterday.
Okay, nice.
Right before the close.
I don't hate it.
Yeah, I decided it was just too crazy. I did something very high risk, which we'll take a look at in a minute. Going okay right now. It has toppled today, but I am going to need a little bit more throughout the course of the week. But it's an earnings trade. Aside from that, I'm doing well. I'm hanging in. I have a survey question for everybody. This is what I was trying to think of. It's why I'm stammering over my words here, without Googling it, because we just had a spirited debate about this outside. When you're noting a politician, like on the news or whatever, there's always a parentheses after their name that has their party and their state. Is it party-state or is it state-party? Like if you were saying a Texas Republican, is that R-TX or is it TX-R? Let me know your opinions in the chat. No cheating. But I did just have to figure this out, and I couldn't remember. It's like that scene in The Office where they don't know if Stanley has a mustache or not. It was very much that situation happening outside as I tried to figure this out.
No cheating, Grumpy Mike. Close that extra window you just popped open. No, we'll see what we get there. But I know you just mentioned SanDisk. I really don't hate that right off the bat because I know MU's kind of been killing me over the last couple weeks. So I kind of have I almost feel the same way towards Micron right now, but nonetheless, I hope they pan out pretty well because I think I have maybe a couple of weeks left. We'll look in a minute, but of the MU position. So if those can just stop floating to the highs, that'll be great. But what's going on, Ranch? What's going on, Jared? What's going on, Edward? What's going on, Arjun?
First two answers immediately different on the trivia question. I love it.
50-50. Oh, we got a little split now.
Yeah.
33%, 75%, or 66%. Sorry, I can't do math. Can't do math there.
We'll reveal the correct answer in a moment. But yeah, I figured when I saw SanDisk collapse in a little bit that would be good for your Micron position as well. Though I think you probably need a considerable amount more at this time. Right?
Yeah, a little bit.
You were already in the money when you put it on.
No, I went a little bit out of the money. So I mean that just shows how aggressive it's really been to the upside. But I mean, if you want to dive right into the SanDisk, let us know what you got going on your end, brother.
Yeah, sure.
Yeah, let's dive right in.
We can dive right in. So SanDisk, you can see I'm working to get out of one of these. I have two on. I've just thrown this on at close to 20% profit just to see if I'll get a fill throughout, at some point throughout the day today because these spreads have been jumping everywhere like crazy. So I'm thinking maybe all of a sudden I'll have a fill slide through for me. But I've gone hyper aggressive, 977.5, 975, short call vertical, expiring 3 days, Friday.
Okay.
This is because they have earnings on Thursday. So I'm just sort of expecting a similar situation to the successful the successful AMD position that I have going on right now, where things are so inflated. It took this big run up on Micron. I guess I got hit a little bit on Micron's earnings, but things have just become very, very inflated here, and I find it hard to believe that SanDisk could say anything to drive things too much higher. I have done this very conservatively. This is a slightly less than 1% portfolio size trade, so can't hurt me too bad because I do understand how high risk it is. But yeah, you can see the position on the chain here. I just have 975, 977.5. So we need this to drop below 975 as a result of the earnings call. Usually a $25, that's to say a 2.5% move, would be, incredibly aggressive, even headed into an earnings call for a traditional company. But as we can see, because of the earnings coming up, one standard deviation is 830. That's what's being priced in here. And to the top side is 1180. So I'm well inside one standard deviation. And if this earnings does go poorly in any capacity, even if they were to beat expectations, I think things could take a little bit of a dive if the forward guidance isn't exactly perfect. We're into this type of situation, the only type of earnings trade that I like to take where Usually I say with earnings that it's like trying to hit a 5-team parlay, right? You have to not only be right about what the actual core numbers are going to be, but you have to be right about forward guidance. You have to be right about the momentum in the sector as a whole. There's all these different variables that you have to get right. However, I feel that the edge slips into my hands when you have a company that's in a situation like SanDisk, which has just been on this parabolic run, where now they have to hit the 5-team parlay. And should anything else happen, it's going to come down a little bit. So I just feel that there's disproportionate risk to the downside here with SanDisk. It could take a hit to 950, and it would just be the smallest little blip on the radar here before it chases higher highs. So I did talk myself into getting short some SanDisk here, just hoping that earnings doesn't go exactly perfect on Thursday, and then at open on Friday we come down inside this range, and I'm able to get out of these. I very well might wind up stuck holding the bag on this, and this stock has done nothing but surprise me this for the last year now. I'm not at all shocked if they come out and say great things, and then suddenly this is at 1100. Very much in the equation. My spot on these yesterday was 1066, so we are still well below my entry and creeping towards these strikes already ahead of the earnings call. So liking the way that's shaping up so far.
That's really nice too, and it's nice to not have to worry about the Micron earnings as well. So I'm kind of banking on SanDisk earnings going south a little bit. Nothing in the woodworks on Micron. It's pretty much open fields on that end, so it's really going to be up to SNDK.
Yeah. So just hoping for the little blip. This is a 3-to-1 risk profile that I got on entry here. So yeah, disproportionate risk, and I feel that there is disproportionate edge in my direction as well. Because I shouldn't say I'm shocked if this makes an inside move after earnings. I wouldn't be surprised at all by that, because an inside move is a $200 wide range. But I am shocked if this doesn't move at all. If we only get a 1% move in either direction, that would be incredibly surprising to me. I think regardless of what happens, we're going to see 3, 4, 5% move on this. SanDisk, it's down 6% right now. This thing will jump 6 to 8% on a regular day with no catalyst. So with the catalyst coming up, I do expect a 5% plus move to go down. The market obviously pricing in almost a 20% move. This is something like a 17% expected move. So yeah, I'm not concerned at all about my moneyness. I just am concerned about the direction and hoping that I'll wind up getting that right. What's going on, everybody in chat? East Ventura, nice name. I don't think I've seen you around here before, but good to see you. Stan, yeah, busy. Everybody, state party. Stan has reverted his answer to party state. Everybody seems to be aligned on party state. Party state is correct. That is the correct answer. We've all gotten there. So proud of you guys. Good work. Hey guys, I'm just here waiting on Hood to get past earnings so I can do something tomorrow. Just got out of a disaster AVGO trades. That's all I'm going to do for now. Spooked. Broadcom has been a serious mover this week. Yeah, taking another dive to the downside. I presume that you were looking for an upside move. If you got smoked on this one, my condolences on that. I say it all the time, man, but this should be a Mag 7 company. We should be talking about Broadcom the same way we talk about these other companies. It's the 6th most valuable company in the world. It's more valuable than Tesla and Meta. Mag 8, I'm telling you, Broadcom. But that's beside the point. My condolences on the trade. Hood earnings tomorrow. Hood definitely should create some good volatility there. Got maybe a baby bull flag going on the one day if you're into that kind of thing. Obviously, earnings sort of throws technical analysis out the window. But we got candy cane chart action. Perhaps we have some scythe chart action here. Some Grim Reaper. Is this a Grim Reaper chart pattern? You know what I'm saying? He holds the Grim Reaper holds.
I can see that.
Scythe. Yeah.
I can see that.
We have a Reaper and scythe pattern here. So everybody, hang on to your bridges. Wasn't that disastrous? I lost like $3. Just bad because I put it on yesterday. Ouch. Oh, okay. Well, good. Happy. Risk management is obviously the name of the game. As long as you're able to at least somewhat manage your risk.
Losing
90% is better than losing 100%.
It is. I hear Rancher on that though. It is kind of cumbersome whenever you put on a position. It's like you don't mind being down on a position, but it's like, why am I down this much on the position? I put it on 5 minutes ago. So I hear you completely.
It's offensive.
It's like, come on, this is disrespectful. Just don't fill me.
I did a 4-16 team parlay. I did 4-16 team parlays for the first round of March Madness. Guess how that went? LOL. I would imagine not well. Hope you managed your risk on those as well, Mike Evans.
Mike Evans. Mike Jones.
Mike Jones.
Anything else? Standard. How's Starbucks? I've seen some ads on Starbucks.
I'm still holding that somewhere here. This will take little local down moves, but I'm so far above my range here. I would have to get back below 80 to hurt me in the next 50 days, which I feel pretty confident about at this time. 80 level is all the way down here. I mean, it'd be year-long lows for it to chase down 80. So yeah, this Starbucks position is one of the most successful leaps that I've had in some time. I mean, just flew through it. It's just always great when your confidence level matches the results, because I was just incredibly confident when I put this thing on. Did a 3x2, which consumes so much buying power. I've since trimmed to a 2x1, which, as you can see in my CapRex section over here, is still one of the highest buying power requirements in the entire portfolio right now. But yeah, I'm thrilled with the way that this has panned out. Shout out Brian Nickel, fixed Chipotle. Now he leaves Chipotle. Chipotle's dying. Starbucks going up. Everything this man touches turns to gold. Whatever food company he poaches him next, I'm all over it. Microsoft. I did see that not a publicly traded company, I don't think, but the Hardee's parent company declared bankruptcy today.
Oh, did they?
Yeah, Hardee's Carl's Jr. might be on the way out.
Okay.
Which is something. The company has like a hilarious name. Somebody can tell me in chat. It's like MC Burgers or something like that is the name of the company.
That's the parent company?
Yeah, I know. Okay. It's something Burgers.
Yeah,
and it's just a hilarious name for like this giant fast food conglomerate holdings corp to have. Like usually, like Yum Brands. It's like it's fun, it's tasteful, but they're just like burger.
Yeah,
it makes me laugh.
I actually want to go down the rabbit hole in the fast food industry a little bit. I know. So my first job was working at Sonic. Worked there for a few years. I remember we got 50% off on our lunches, and what I had gotten every single time was an 8-piece mozzarella stick. No joke, like the first 6 months I was working there, the managers thought it was hilarious, but I was like, this is literally one of my favorite foods, these mozzarella sticks. So anyways, I've always loved mozzarella sticks. Went to White Castle for one of the first times the other day. Got some of the mozzarella sticks from White Castle, and I kid you not, they're exactly the same. So I'm like, I wonder if they have like the same supplier, whatever.
Maybe.
So it could be.
Or something,
yeah, and it made me just think like I really want to go down the rabbit hole, because I just think it's so fascinating how we have so many companies that serve the same thing with just different branding, and I think that really shows how the power of branding. So if you want to boycott White Castle, go give them your money at Sonic.
Yeah.
I haven't done my research, but that's what made me think about it.
Yeah, I know people have talked about. I've seen people talk about the same thing with cruise ships before. It's like there's one person supplying the cruise ships with their food.
Oh yeah,
and some of the foods are just the exact same on the different cruise.
No joke. It was still fire. 10 out of 10 mozzarella steak. It's fire from White Castle. That's the only thing I get at White Castle. Miss me with the sliders and all that. But like,
I love White Castle. I'm all about the sliders. Yeah.
So I've only been there one time. Only gotten the mozzarella sticks. The first time I figured out about White Castle was because we watched Undercover Boss like 10 years ago or 15 years ago. That was the very first episode that I watched, and it was a White Castle episode.
Man,
but anyways, I won't dog on them.
You live like right next to a White Castle now.
That's why I hit it, and I skip it every single time. and I went there the other night, and they're one of the only places.
Waste. I'd be at that White Castle all the time.
And they close at like 3. It's like one of the only things that's open that late. So I remember just joking around too. I was like, out of all places, I live right across. I was like, it could have been a McDonald's, and from the window I could see a McDonald's over there. I'm like, bro, White Castle out of. But maybe it's an acquired taste. I don't know. Sliders are an acquired one for me.
CKE Restaurants Holdings. That's much more sophisticated than what I was seeing this morning. I believe you. I believe you. But I don't know if I was seeing something else being reported on, or if there's a smaller company in the mix there somewhere. I definitely saw something burgers. It was like 2 letters, and then burgers was the name of the company I saw was going to declare bankruptcy. Microsoft mentioned in chat. I see Microsoft. Very interesting spot here. I wanted to get long when we were, all the way through this drawdown, and that includes down here at the bottom, and like I've been kicking myself a little bit for not getting long when I was thinking about it down here at the bottom, especially when I saw $1.5 million in call sweeps from Congress coming through right around in this range. I should have been all over it. I laid off. However, that said, I also wanted to get long like here and here and here. So, there was bad entries to be had as well. Holding off isn't always the worst thing. I was no more inclined to get long here than I was, up here or something. But yeah, Microsoft just really far off the highs. And I loosely touched on this yesterday, but we have strange things happening where the Mag 7, there's 3 companies, Microsoft, Tesla, Apple. Microsoft, Apple for sure. Is Tesla the other one? Let me confirm, yes, before I speak on this. Microsoft, Tesla, Apple still far from their all-time highs, despite the market being at clear and way over all-time highs right now. They have moved up with the market, but not proportionately, within their own company. So it's a strange thing to see. I do think that there's definitely some catching up to do for Microsoft. I alluded to this gap yesterday, which I feel like has to get filled sometime on the 1 day chart, and why not now? That would be all the way up to 480 if we see that come to fruition over the coming weeks. But after this, big move that we've seen, and now we have a little bit of consolidation along with the broader market, with the uncertainty in the broader market. It's tough for me to get involved as bad as I would like to.
Oh, I mean, I hear you definitely. I know it feels kind of like we're at a little bit of, I don't want to say stagnation right now in the broader market, but we've got its first pullback, and I know these pullbacks feel so aggressive, but I mean, it almost feels like we're still kind of just pausing per se, because it's not even a real pullback just yet. So
happy to see bullish White Castle sentiment coming through here.
Is there bullish White Castle sentiment?
Yeah.
Is it paid promo by Gustafer over here?
Nothing like an entire white paper bag full of stacked White Castle burgers. Used to eat them all the time in NYC back in the day.
What?
In North Carolina. Yeah, I didn't have them when I was down in Texas either. I have been a few times since I've gotten back up here now, and they're around. But yeah,
maybe they're not in Colorado.
They might not be.
Maybe that's the case.
Yeah, they're kind of spotted. All over the place. But I know it's a Midwest is definitely, there's a lot of White Castle.
Are there in the?
Going on.
Okay, I might have missed it.
Yeah.
In Colorado at least.
Well, no, I mean like Midwest, like where we are right now.
Right.
Yeah, they're all over. They might be in Colorado. I'm not.
I don't know. Maybe because I just wasn't familiar with them growing up. You know what I mean? So it was kind of just threw me off a little bit. But I know Colorado's getting things like
a little paper bag or a box just full of a little 6-pack of those sliders.
Yeah, and I know Colorado's getting things like In-N-Out, Raising Cane's, In-N-Out. Colorado's finally bringing some of those West Coast franchises to Colorado. I don't know. Colorado's like right in the middle of the map. So it's like if you got a franchise on the West Coast, East Coast, I feel like we missed out on a lot of stuff in Colorado. We're so landlocked. You know what I mean?
Yeah,
joking a little bit. Obviously,
In-N-Out's doing a good job expanding, and they've done a good job of just building their brand in such a way that I don't feel like that's going to dilute them.
Mm-hmm.
Like Shake Shack is doing really aggressive expansion right now, and I don't like that at all. I feel like Shake Shack sort of has this branding, this allure of like it's almost like a tourist destination. They're only in major cities, and
you're actually I would say so.
It's this thing you got to wait in a long line.
Even in Tampa, the most tourist spot, now that you mention it, has a Shake Shack right on the corner.
Yeah,
great point.
Absolutely. So it's sort of like a destination thing.
Yeah, and it's supposed to be like a little bit more high end, right? A little bit more higher end than your regular fast food chain. So they're charging like $20 a burger.
Yes,
for a little burger.
Yeah, absolutely.
So
it is very pricey.
No joke. You got to add the fries. Don't even come in a combo. Come on, Shake Shack CEO.
Yeah, you got to add everything. Yeah, if you go burger, fries, milkshake. Shake Shack,
I can't stand the a la carte. We can get into that another time. But I mean, the a la carte business model for fast food just blows my mind. No more combos. Just add whatever you want to your cart. You want fries, it's $6. You want a burger, $6. I'm like, I know that business model is probably a little bit more popular, but would have never thought we would have it in some of your everyday fast food chain restaurants.
Yeah, definitely becoming more prominent, much to my dismay. But yeah.
Anyways, Shack.
Pull it up here, but yeah, Shake Shack now they're just. I mean, like I just went home to Texas, and they're just like there's one just in the suburban neighborhood, like.
So they're still developing
next
more
to my town, but they're just popping up in just generic fast food locations now, and it's not. They're sort of trying to move away from that, but I don't think $30 burger fries shake can stand on its own.
Agreed.
I think that if you are going to have those prices,
absolutely,
you have to. Be in the locations. It has to be a special one-off thing for people. You're not gonna. There's not gonna be recurring customers going to Shake Shack for $30 when you can get that exact same meal at any other fast food place for $15.
And for the prices now, why wouldn't you just go sit down in the restaurant for service for these same exact prices fast food?
Yeah, especially at $25, $30 a head. I mean,
of course,
get that done sitting down in the restaurant.
100%.
There's a lot of places you can get an entree and a beverage, and it's going to be $22.
Yep.
So. Yeah, Shake Shack. I feel like they're going to hurt themselves with that unless they want to budge on their prices.
Sonic is even a la carte on DoorDash. That's crazy.
Yeah, that is crazy.
Yeah, good business model. But I just wouldn't have thought we would see a la carte in fast food. You know what I mean?
Castle is awesome. White Castle is so gross. The duality of man between Matt and Mike.
They're going to be like $5 to add some salt to these fries. A la carte the seasonings.
For real. Yeah, combo's good. The wing places are doing a good job of that. I'll tell you what. Wingstop, Buffalo Wild Wings, they always have good big old value plates.
Yeah.
Anyway, that's pretty much all the activity I have going on my end. I actually am short Shake Shack as we're talking about it. That's always a difficult thing to say, short Shake Shack.
I might have to double down. No, I'm just kidding. I might have to go over here and short them too. But
this was looking a lot better 2-3 weeks ago as we were down here, testing the 80 level. I have a 195, so still definitely on the dance floor here. Would just take a little more of a leg down to put me back where I need to be. What's that? 51 DTE. So We have time. The $30 burger fries thesis is just is pretty much why I'm short. The thesis that I just gave. Yep. I just don't know that Shake Shack can sustain, especially as they continue the expansion. Doesn't make a whole lot of sense to me. But let's kick it over to you.
Yeah, no, we can go ahead and jump over to the TradingView platform. Tried to sign into my account right here, and then it sent me a promo code, not a promo code, a verification code to my phone. It's on my desk over there. So we're just going to have to work with regular charts real quick. But we are currently short a few contracts in the NASDAQ market. I'm hoping to at least be able to cut. Tell me why in my mind, I'm like, bro, I wish I could just go run out there real quick while Gus is talking and come run back in. No, but I'm hoping that the market is going to take out a new day low. Maybe we scale out a couple contracts there whenever we can do that. But especially with how much we've sold off since overnight, and then we had a little bit of a relief pop, and then we put in new lows again. I don't want to overstay my welcome. We can ride the trend as far as possible, but maybe we do that with the runner on. So again, if we make a new day low, we'll scale out a couple of our positions. If we start to stall, somewhere around right here near the low, but we don't take out the low, we'll still look to scale out of some of our positions, because something that happened earlier today, I was looking at the tape on NASDAQ. So I was trading on the micro NASDAQ, but I was looking at the order flow on NASDAQ. And usually I'll look at the tape on NASDAQ and then I'll make the decisions using the micros. But if I go over here to NASDAQ, one thing you'll recognize was earlier today, I was waiting for this low to be taken out on the micro NASDAQ. So we're waiting for this low to be taken out so we can start scaling out a couple contracts, only to find out, I'm looking at the order flow, I'm looking at the tape, and I'm like, it says we made a new low, but I'm looking at the chart, and it doesn't say we made a new low. Come to find out, once again, I'm looking at the micro NASDAQ contracts and not the NASDAQ contracts. So obviously they're the same product, but they're not going to move tick to tick, if that makes sense. So one thing that's really interesting over here is, we make a new low on NASDAQ, but we don't make a new low on micro NASDAQ, which is so interesting because it's the same exact product. But once again, they're not moving tick to tick, close enough, but not tick to tick. And then anyways, we came down here, made a new low around lunch, totally forgot I had the position on, then it, went back to the highs. I'm over here forgetting we got positions on. But anyways, we never actually stayed down here towards the lows. So that's pretty much going to be the objective. If we get it, that'll be nice. It'll be a nice little payout, especially with all the upside action that we got over the last couple weeks. But that's pretty much it for the day. I know we got the sell-off. 27,105 is pretty much the line in the sand, pretty much the rest of the week. So even if we come back up here, 27,106 is going to be the area where we're looking to determine if we're going to stay within value or if we're going to break out of value. So that's the goal. We had taken a couple extra trades earlier today, and this is just to stay true to your process. Process over profits, because there's a couple times I was looking to get short way up here, a little early, and I had gotten stopped out, but I was anticipating this move to the downside. So it's like sometimes when you go back in journal, you can recognize, okay, maybe I was a little bit ahead of myself. Maybe I can cut out a couple trades or a couple attempts that can kind of refine the data or your trading results at the end of a week or the end of a month. But it's been really slow the last couple hours. We've pretty much just been putting in this range near the lows. And chopping around for the most part since then.
Yeah, I saw a big deal say "crazy day, so slow" a few minutes ago, and that is apt. And really just sort of a deja vu situation from just yesterday. I mean, we are just seriously at a decision point here. It seems we feel that these levels are fair for the amount of information that we have, and the market's just waiting for the next catalyst, higher or lower.
100%, 100%. I don't want to get too ahead of myself. I don't want to get too ahead of myself, but we had scaled out some of the SPY contracts. So we took off the out of the money call spread on SPY. We scaled out of that one. We still have some QQQ positions on, but QQQ is going to have to get down to like 615. So where's QQQ right now? That's going to take some time. Where are we at? 654. So we need QQQ down another like 40 points, which is wild. 35 points, which is wild. But anyways, I'm not a big fan of swing positions. I recognize today, especially, trying to get out near those lows, we're looking at about 500, 600, 700 worth of profit on a scalp. And one thing that's attractive about that I recognize, especially swinging more positions, is I hate floating profits. I can't stand it. So like even when I was looking at the exit that I missed today, because sometimes they're so quick, I missed the exit. I'm like, I almost want to get out of this trade right now, but I'm like, I got to let the process play out. But whenever it comes down to floating profits, if I could reduce the amount of exposure that we have on any type of floating profits, it'll be so much easier to navigate the trades. And I just hate floating profits. So that's a little bit of my spiel for the day. Hoping we put in a new day low. But let me put this back to the single chart, so it's a little bit easier to view over here.
Let's do 8 charts. Can we do Octobox?
We actually, we could get crazy with it, right?
Yeah.
If we want to scalp silver, gold, S&P 500, Nasdaq, Bitcoin, and Ethereum, oil.
Oh, you know what? Yeah, you're right. No, we need
absolutely.
Ethereum too. We need more charts.
So we could absolutely do that. But yeah, no big deal. It's starting to slow down a little bit more here now. See if the market makes a new day low. If it doesn't, it doesn't. And we got FOMC tomorrow, so that might shake the market up a little bit more too. Kind of interesting that we got a decent move. I feel like we got a decent move today. It's been slow, but Asia session, the overnight put in a pretty big move to the downside and then a little bit of a relief pop. So even though we haven't really gone anywhere, the ranges are pretty wide. So the opportunity is there. Volatility is a trader's best friend. We'll see what we get.
Yeah, we will. Earl and I have a full hour tomorrow as well. So
that is tomorrow, yes.
It's a party.
Oh yeah, so we will probably be on for FOMC tomorrow then, I think. So I think...
Yeah, we'll get off at 1 Central.
So I think...
Is that when FOMC starts?
I think FOMC 12:30. I think the speaking starts at 12:30, and then the decision is at 1 tomorrow, I think. So 1:30...
Yeah.
Or did we just miss it?
How it goes.
Yeah.
The Eastern time thing always confuses me with the FOMC.
I think it's an Eastern.
I think you have it right.
When I looked it up, I'm already trying. When I looked it up, it said 12:30 Eastern, I think.
Yes.
And I didn't even check to see if it was in Central Time. I just assumed the standard was going to be Eastern. Anything to do with the stock market, everybody on Wall Street thinks there's so much more important. Got to do Eastern Time. No,
decision at 1, press conference at 1:30. They're telling me in my ear.
Okay.
Decision at 1, press conference at 1:30.
Tell me in my ear, Shake Shack CEO is not very happy about this segment. No. Anything else top of mind before we wrap for the day?
Shake Shack CEO won't eat his own burgers. This breaking. More on that at 11. No, I don't have anything else. I just saw a very nice comment from Gary here. Gary, thank you for the kind words. We dearly appreciate it. I'm hoping to see you again. Come hang out with us for the 1 hour tomorrow. Comedy, Gary. Do you do comedy? I'm curious. I know you're an OG because you said Tasty Trade, so you've been around. Appreciate you. Need to revisit on selling Spire QQ45 DTE, using that to hedge my scalping.
Need to revisit on selling Spire QQ45 DTEs. That's exactly what I've pretty much been doing, big deal. I mean, to a T. So I hear you on that.
Well,
cool.
That's all the time we got. I got nothing else.
That being said, big deal, Gary, Stan, Money, Mike, everybody else, thank you for taking the time. Ranch, won't forget about you. Everybody else, thanks for taking the time to hang out with us today. Big deal. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was not a paid, you're not getting paid for this advertisement.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. It's still Tuesday, April 28th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Jamal Chandler. Jamal, how are you feeling today? Everything all right?
I'm okay. I'm feeling good, you know. I got no complaints. How about you?
I'm good. I guess we're, love you and Josh bantering. It's a highlight of my week every week. Exactly. We move on. The week arrives tomorrow, Jamal. The market's getting a little bit ahead of itself here, perhaps taking some profits ahead of the big four tech earnings. Alphabet, Meta, Microsoft, Amazon, all due up tomorrow. Apple on Thursday. Of course, we have potentially Fed Chair Powell's last meeting ever. Sad. Tomorrow as well, but the market doesn't seem priced to care about it. Nevertheless, tomorrow is when the week begins. Tomorrow is the week, Jamal. As we look into what's happening here today, some reactions to headlines coming out of Iran. We have some news about OpenAI. We'll get to all that and more here. But as we typically do on these Tuesdays when we have our resident vol expert here on Futures Power Hour.
Thank you, sir.
Let's talk about the shape of the volatility curve right now, where front month to back month, if you're looking at the VIX, it's still hovering above 18, peaking into 19 right now. It's not a 6-7 point contango that we once had maybe a week or two ago. Things have calmed down to a certain degree where you're looking at 4 or 5 points wide. What does the evolved shape of this VIX futures curve tell you about the state of the market right now and people's overall sentiment?
Well, I mean, it's fairly calm, as you can see here. It's weird, though. I mean, it doesn't feel like it is as calm as it should be. I mean, I think if I told you some of the things that you mentioned at the top of the show and showed you a couple of things, you were like, oh, well, VIX itself is probably 20. And that's not the case. It's in the teens. But the futures are in the 20s, or I should say the low 20s, obviously 2021 and change. So it does seem that things are calm, but I would say, I mean, it would take probably a drop to below 7,000 before I think markets really got scared. Maybe, seeing a VIX above 22 to 23 at that point. Futures probably trading 24 to 25, I would think. So that's a ways away. I mean, it doesn't really seem like there's much catalyst that could cause that, but we got a ton of them coming up, so I guess we'll find out.
Ton of catalysts coming up. Today's really not the day for the catalysts. I know that there are some earnings that are due out here after hours. Visa, for example, T-Mobile, Booking Holdings, but I don't think anyone's going to be paying much attention to them, or at least giving them the type of credence to move the broader markets like we have tomorrow with Alphabet, Microsoft, Amazon, Meta, and then a whole host of other names. Between tomorrow and Thursday, of course, with Apple, that's earnings season before we get to NVIDIA. I don't think anyone here is looking for many other names beyond the mega cap tech right now in NVIDIA. Jamal, we see the headlines today, though, and I think that's where we can start the show, thinking about the volatility heading into tomorrow, coupled with this backdrop, maybe a little bit of a narrative switch here, thanks to some of the reporting on OpenAI. Can't help but notice that the NASDAQ is the weakest of the bunch here, and falling back to our 1 week moving average. Reporting overnight, Jamal, Wall Street Journal says that OpenAI is kind of in knots internally right now over missed user growth targets, missed revenue targets. Questions abound about whether or not they're going to be able to fulfill the promises they've made to investors regarding the return on capital for all the build-out that they've done, for all the debt that they've incurred to bring about the AI revolution. The past few weeks, it feels like earnings for the mega cap tech, or for just tech in general, I should say, are you doing enough to meet demand? Right? We've seen it through the memory chips. We've seen it through the data center providers, yada, yada, yada. But all of a sudden now we go into tomorrow where, hold on, hold your horses. What do you mean you're spending too much money and not seeing a return on your buck? Does that concern you, a potential narrative shift here going into tomorrow's big day, given how important OpenAI has been part of this whole AI revolution story?
Well, I mean, I'd like to know who the insider is. I mean, is it Diana Rossini? I mean, outside of that, I'm not really sure I can really get behind the story here, but it's, but I think it's fascinating story, if you will, but unless it's a real inside source, I'm not going to get that worked up about it. Naturally, that sounds very, very bad for the AI trade, if you will. And I think you've seen a couple of names react to it potentially today, but not in a very strong way, I guess. So I don't know. It's interesting noise, but until it's substantiated, until we see continual downside, then it becomes something. Much like if we see, moves like we saw around DeepSeek, things like that nature. Some of the names that we saw move affected the software names and Anthropic because of that news. And unless we start seeing moves like that, then I'll take it more seriously. In the meantime, it's just a data point that maybe could eventually gain some steam.
I appreciate that you mentioned DeepSeek here, because we had a DeepSeek headline last week where they were unveiling a new open source flagship model. And in January 2025, we got an announcement that DeepSeek was putting out this fantastic model. We had DeepSeek Monday, where the market bled out, 3% or so. This time around, that wasn't necessarily the catalyst. It's not really about the chatbot headlines. It's about who controls the chips, the power, the data centers, the developer ecosystem. It's an interesting backdrop with this reporting from the Wall Street Journal heading into tomorrow, because all of a sudden, if you're seen as spending too much money, it's a problem. You're not getting your return on invested capital. If you're seen as not spending enough money, you're going to fall behind because you can't satiate the demand. And so your competitors will step into the space. We have our Microsoft here, Jamal, which is something we've covered on signal versus noise recently. Michael Burry's taken a long position in it. We've seen some other folks on the the options chain stake out a little bit more of a bearish point of view. I think this is one of the names that you've been active in as well in recent weeks. And considering how important it is for the broader NASDAQ, can't help but notice that heading into earnings tomorrow, while the NASDAQ's down, Microsoft is still up by 0.75%. Does this price action at all, this dispersion, if you will, between the index and Microsoft, does that do anything for you heading into tomorrow, or steady as she goes?
Steady as she goes. However, I do feel like it is somewhat of a crowded trade. I saw the fellows before us just talking about it on screen. I think I'd challenge you to find anybody who's short Microsoft right now. I'd like to talk to them, honestly. I think it's be fascinating. But look, for me, it's not even like a huge thesis or anything, or I believe in their software so much or whatever. It's just a contrarian play. I mean, I feel like the name has been beat down quite a bit. You mentioned OpenAI. I still feel like the AI theme is one of the strongest in the markets, despite whatever news to the contrary might be out there today. And so as a result, I mean, let's remember who was the first really big name that got involved in this trade, and it was Microsoft with their stake in OpenAI. And so that's kind of a lot of the thesis behind my long playing contrarian, if you will. So I think this one is definitely one of the more interesting ones. Again, we're looking at what all of these companies are going to say, but none more so than Microsoft, I feel.
The next 2 days between or among Microsoft, Amazon, Meta, you're talking about, from like the triple Q perspective, that's nearly 30% of the Qs that are reporting in the next 2 days in terms of market cap weight. So, Jamal, I mean, I think this is the lens. Interestingly enough, if this becomes the lens again, where everyone's concerned about the spending on AI, Apple probably comes out as a winner on the other side of all this. It's been such a funny dynamic on a day like today, where you have a name like Oracle getting pressured, the OpenAI flywheel getting pressured a little bit. Apple gaps open higher, and it continues to try to hug this trend line that we've been seeing trading for the better part of going to the April 25 lows we had here in August 25, clipped them at the start of this year in January. Apple has been this weird reflexive play where if AI spending is a concern, Apple's not doing enough of it. So it probably means it's going to be doing a little bit better. And then when AI is exploding, it has been a little bit of a laggard, grand scheme of things. It's certainly not having the move that the semis are having over the past 2, 3, 4 weeks, even though it is up. It's not up the way that some of these other AI sensitive names are. I know that you think Microsoft's the most important stock to watch here. What are you looking at in terms of the NASDAQ, though? Because my technical bells are starting to go off and raise an eyebrow here. One of the tenets of this market since the lows that we had at the end of March, at least for NQ and ES, March 31st close, you get a move back above the 1 week moving average, something that we've closed above every session since then. For the Russell, it's a little bit more delayed. They got their close above the 1 week moving average on April 2nd. I digress. The point, Jamal, is that today we're back to those 1 weeks, this uptrend that's been in place for literally the entire month as trend support here. Are you looking at this chart right now and thinking that maybe we're getting a little toppy, or is this another buy the dip opportunity as they have been for what feels like, 4 weeks running now?
It's hard to call it a buy the dip opportunity considering the dip that we just came out of. But I look at it, I don't see toppy, honestly. I see a chart that is looking bullish and looks like it could be making a run at 28K, honestly. The only real caveat to that is the situation we're in. It's kind of weird to play this for the upside when it feels weird to play this to the upside when oil is breaching $100 today as we sit here and talk. So, and again, that's been pretty much the narrative for the past few months here, right? When we look at oil, and when it rises, typically markets have fallen, but that dynamic has changed over the last several trading days, and so. The fact remains is like I am long NASDAQ in a couple of different ways, whether it's a diagonal in Apple, whether it's a diagonal in NVIDIA, whether it's in the MNQs, and I have the strangle with a long delta bias. So I'm playing it that way regardless. And it's been strong so far. It's been good. And again, despite the fact that you have something that typically in recent weeks would push the market down, it's still staying resilient. I actually don't count today. It's weird. It doesn't seem like today is down because oil is over 100. It just seems like there's a little bit of pullback ahead of the beginning of the catalyst.
Some of these charts, I'm just I think the 5 EMA, it's been a good point of reference for the past few weeks. Today, the Russell looks like it could close below it as well, something that since April 2nd here, in March 31st, in fact, for RTY as well. RTY, that's where you get that move. And then through the 1 month on April 2nd, you could see here today, we're potentially getting a close below it. And with it, it would be a close below the former yearly high that was carved out on January 22nd. That doesn't feel great. I think that the range low that we're working with is what came on the 23rd here, though, and that's 27, we'll call it 2750, a shade underneath it at 2748.9. If you lose 2750 here, Jamal, you can make the case that this has been an equidistant range. You've got like a 75-point range. Maybe you were due for a little bit more of a substantial pullback, but the charts start to roll over. And I know what we're seeing today in the oil market. You mentioned $100 oil. It's not just oil that's happening today. There were some bad crop reports that came out this morning. Wheat has surged to its high of the year. And so you're getting these little knock-on reminders through the futures market right now that, yeah, maybe we're not getting 150 oil, but inflation is still here and it's still going to be coming. And, let's slow our horses for a moment. But even to that point, let's say we do get a pullback here. Let's say oil jumps up again. You get a pullback, Jamal. I was running the numbers. The S&P 500's earnings directly related to what's happening in the Middle East, coupled with any knock-on effect from oil, probably amounts to 1.5% of S&P 500 margin, in terms of their earnings. I was looking at the tech sector. Compared to last year, tech sector net profit margins up from 25% to 29% over the past year. So the way that these companies are growing, they're expanding their footprint. I don't want to say they can absorb it, but also they can kind of absorb it. The balance sheets are set up and the way that these businesses are structured, they can still make more money than they were a year ago, even with oil at $100 a barrel. And so that sets up it sets up an interesting dynamic right now for the stock market, where outside of volatility coming through as a short-term transmission mechanism, the earnings profile suggests that you still have to look for long opportunities.
I think that's the key thing. I mean, they still make money. These companies still make money. They print money, if you will. Much like we talk about banks all the time, it seems as though that's the case with these tech stocks, these major ones anyway, that we talk about all the time, these Mag 7s particularly. They still print money. And so unless that changes somehow, I don't see the point of making these parallels to like 2000, the year 2000, 99, 2000. 2001 that people like to make. I just, I don't see it as of now. Have we bounced pretty hard off of the lows that we had? Yeah, we definitely did. But it still is a crisis that was created here and landed somewhere else. And, you can argue how much that should affect the stock market, I guess. But I think like most times we always talk about the market, it's perfectly priced. It seems to be perfectly priced.
7162 here in ES. It's a 42.3 IVR, Jamal. Volatility has bumped up a little bit here right now. One of the reasons why, it's difficult to commit to saying that the uptrend is over is what's vol up to today? We're up a quarter. This doesn't look like a chart that's screaming, risk is coming back into the equation in any substantial way. Maybe it speaks to complacency right now. Put call ratio was 0.82 yesterday, right? Not a lot of fear out there in the current marketplace. And ever since we've had this bounce last week, note how these attempts to get back through the psychologically significant 20 level in VIX, rebuffed. So first blush, Jamal, right? Heading into tomorrow's earnings report, if I've been chasing this thing to the upside, if I've been trading this long, the 1 week is still intact. We haven't gotten a close below today. Maybe we get a close below today. Maybe the structure weakens a little bit here. But until we see that decimation, there's not enough evidence to suggest that the rally's finished, especially if we get the numbers that we've been getting out of these companies tomorrow. And maybe a bit adieu to Powell as we welcome in the Kevin Warsh era of no more hikes. It's nothing or cuts.
Yeah, I think if a pullback happens, it's either because whatever reason these companies just don't meet the expectations, or I think they're going to come with good earnings. I mean, EPS and revenues, but whatever they say obviously is going to be the big deal. And if they don't meet expectations somehow, I think that could lead to somewhat of a pullback, right? But even still, how upset can analysts be when they're still making money? I think that's still the big thing. And AI is becoming an ever increasing part of our economy. So I find it hard pressed for us to see a market that's going to be down 5% from here or back towards the lows because, you know, the war fear is back. I think that has subsided.
I saw, was it maybe a week or two ago? Did it come from PwC? I think it came from PwC, PricewaterhouseCoopers. Or do they still go by PricewaterhouseCoopers? Is it just PwC now?
No, I think they go by CP.
Stop that. Their report here came out on April 13th. 3/4 of AI's economic gains are being captured by just 20% of companies, with the leading companies focused on growth, not just productivity. Okay, well, there's that concentration, but the names that are coming up around the corner speak to that concentration. It's not like they're the losers in the trade. They're definitely some of the winners. You know, you and I have been going back and forth the past few days. I really want to underscore this note. Tomorrow, the market is not necessarily freaked out about what's happening during the day tomorrow, even with the Fed. We can go over to the trade tab here. We can go into the table mode. You can take a look at the 1 DTE, look at the delta, the expected move, plus or minus 43 points, 11 of which are coming through the end of the day today. The next day into Thursday, you're getting a little bit more of a bump, right? It's now looking 38 points. So something's happening between the close tomorrow and the close on Thursday that's leading the market to think that we're going to get a little bit more excitement. And it's the earnings. It's not the Fed. So the Fed tomorrow, there's no rate cut expected. There's no rate hike expected. There's no new summary of economic projections. It simply may be Powell saying goodbye. Not that we know his official time to leave yet, but chances are that he could just say like, yeah, you know, we're not going to look too far into the future because I may not be Fed chair anymore. So where does that leave the market? I don't know if it gives you anything during the day tomorrow with which to operate if Powell's not going to be the guy in charge moving forward.
That would be great if he says that, honestly. But look, I can't answer your questions. I don't know what's coming up in the future. And he's right. I mean, things are going to change markedly if he does. But yeah, it's not the meeting it's not the Fed meeting that we're seeing the bump for. It's definitely for the earnings. I mean, it's a large group of earnings, and it's some large names that we've talked about all the time. Which, by the way, haven't you noticed how much that type of talk has subsided? The Max 7s are too much of the indices. I feel like we don't even really hear that anymore.
You don't hear that anymore, and it doesn't make sense because they're now like 48% of the market cap. So, you know, that number shot up here in recent weeks for what it's worth. The breadth in the market is not fantastic right now. We need to get a little bit of improvement there to keep this rally going. But right now, the bonds here are telling you everything you need to know, Jamal. That slow hissing sound is air coming out of the bond market. Finally starting to get a little bit of movement down here. Finally starting to see this drift away from 111. We had this rebound here, jump right back into the former lows through late January, early February, right into that 50-day. And all of a sudden we stop. And oil's making its move back towards 100 and treasuries are selling off again, which may be counterintuitive. If things are getting worse, why are people fleeing the safety of treasuries? For starters, it's fixed income. You don't want fixed cash flows in a world where inflation's running hotter and has the potential to run hotter. But moreover, you buy safe havens when you're worried about something, and then you sell them to raise capital if that something occurs. And oil prices are pressuring to the upside. Treasuries are down today, Jamal. Gold and silver are down today. People are selling their safe havens to raise cash. Stocks are down today. People are raising cash right now in this environment. So I'm not really a fan of what's going on here in notes and bonds, just in terms of the price action. It's starting to look a little bit slippery, as it were. And I don't know if there's enough volatility to say, let's start selling it yet, because volatility is on its way up while the market's coming in, which stands to reason that if the selling persists, vol is going to keep going up. So I don't know if I want to jump in with like a short put spread at 111, 110 in ZB right now. How are you feeling about the bond market, though? And we could talk about the seven-year note auction that just hit the tape almost an hour ago.
Yeah, they've been running in place, right, since the beginning of April, I think. And honestly, that's really what you want to see from bonds typically, right? I mean, we've been in this, almost 3-year period, if not longer, where bonds have just been a little bit more volatile than usual. And things have really calmed down. The MOVE index has kind of pulled back some. And we've seen bonds sort of, like I said, running in place. And I think that's exactly what you want. I don't have any trades on in here. It did catch my eye that I saw ZB, on the lower end of 113 today. I thought that was a little bit fascinating. And, You talk about the 10-year note. I mean, that's still been sticky, sitting around 4.3%, getting real close to 4.4. So obviously that's interesting, but we all know why that's happening. I mean, oil keeps creeping higher. And so, that for that reason, the 10-year note still remains something for us to keep an eye on, especially if we're not cutting rates anytime soon. So I think the story around bonds is fascinating, but the trade itself, it's just not there, Chris. Like I'm not really looking to get directional in any way, shape, or form. I've made that mistake several times. And then on the sell vol side, I mean, as usual, ZN is a little bit higher on the vol end. But how far out do you go? What tenors? How much, like we said, how much are things going to change over these next couple of months? I mean, suffice it to say, you have no idea what May, June, and July and those months and August are going to look like, let alone September, which we really typically don't go out that far unless we're a lot more convicted. So there's a lot of questions to be answered. And I think maybe we just kind of wait and see what changes here before we even really get on a good trade.
If we wanted to, you mentioned going out to September. I mean, the U expiry now is at 59 days there for June 26th. So just thinking out at 59 days right now and looking at the chart, the low that we had on March 27th comes in at 109.19. So I suppose if we wanted to call the low and set our short strike at 109.5, 3-1 at a 78% probability of profit. Look, you're getting a 3-1 at a 78% probability of profit. That's actually really nice. The thing is, you're calling the low. If you're selling the vol down here and you're saying, well, may not go up, but we're not going to break the lows right now. That's all there is to it. You want to give yourself a little bit more breathing room in the event that we break the March low. Now you're looking at something that's worse than a 4-1 risk to reward as vol's expanding. I don't like being short puts or short of put spread when momentum is still accelerating to the downside and volatility is increasing. How do you know that momentum's accelerating to the downside here? The rate of change of the moving averages. The rate of change of the 5 is more aggressive to the downside than it is yesterday. Same thing for the 1 month. Same thing for the 50-day.
Mm-hmm.
That to me is, I'm not saying we're catching a falling knife, but you're trying to say that the market directionally is wrong without any evidence of a turn. We had the 7-year auction here today, which is not exactly the 10.
Wait, one last thing on that too. Not only are you calling the low, you're calling the top on oil. And how comfortable do you feel calling the top on oil? That's the other thing about that.
That is also the consideration here, because if oil goes up and stays up, and it's not just oil, but what if all the other petrochemicals and fertilizers and gases stay elevated as well? Right? That's a problem. That's a problem. We're going to get to the grains here in a little bit because wheat's having a day. When you look at the auction here right now, 5-year was mediocre yesterday, 2-year was good. 7 is mediocre at best. So bid to cover ratio is a little bit better for those that have read the How to Read a Treasury Auction note on our website. Go check it out. Type it into your Google machine. The bid cover was at 2.51 from 2.43. And so this is the highest bid to cover ratio we had since last June. And it's above the 6-month auction average of 2.46. That's the good news. Everything else, though, foreign buyers are stepping away. 58.4% down from 62.4%. And that's below the recent average of 61.3%. So why would foreign buyers be stepping away? They don't want to buy fixed income right now at a time when oil's elevated. They need the cash for something else, perhaps. I don't know. But I can string together a narrative ahead of a Fed meeting where we're not going to get a cut, and the Fed is probably going to talk about inflation sticking around, and they can't provide us those cuts. I get why bonds aren't exactly enthusiastic right now. So I'm not going to catch a falling knife here, Jamal. I'd like to see a little bit more vol, particularly in ZB, given the product size. In ZN, I'd like to see some evidence that the acceleration to the downside is ending, not just starting, which it feels like it is. But bonds are offering you not the most comforting sign if you're an equity market bull right now about where prices are going and whether or not the Fed can deliver your cuts.
Yeah, it doesn't really look good at the moment. And obviously it shouldn't. I mean, given everything that's going on, that's the one remnant of the war that's letting you know it's still a problem, I would say. This is definitely the one thing that should be bothered in markets.
Not for nothing. It's not a big move, but relative to where it's been over the past, say, 3 weeks, rate expectations for the end of this year are leaking to the downside bottom part of their range. So you're seeing oil go up and the rate cut odds are starting to get pushed back. And as we make our way into the middle of the year, let's say the Fed wants like a 6 month buffer, 3 to 6 month buffer for when the war ends to actually get the data and digest it and figure out if it's transitory or not. We're almost in May. 6 months after May is November. I mean, the odds of them being able to give us a cut by December, you're then starting to argue we're getting cuts because of a recession. And that's not a place where we want to be. So we need to go take a look at oil right now, which is obviously ultimately approaching triple digits again. It's happening in Brent, which is up near 104, 105, in the BZN6 contract, which is, again, Brent is the global benchmark here. This is cycling up to what would be a new high close for the war. Crude, which is still in the M cycle for June, that's likewise near the top side of its range. Volatility is stable, 47 or 48 IVR in the recent day or so, Jamal. Do you see any reason to chase this higher right now in the oil market, or do you view this as an opportunity to maybe start scaling into a short call spread type of position?
It's a good question whether to chase or not, because it pertains to your second question. I already am short a call spread via a iron condor. I rolled down, which I probably shouldn't have done. I kind of hate when I do that sometimes, but I had an iron condor. I've had it on for a while and eventually rolled down my call spread strikes. And now I'm short the 98-100, which obviously is in the money as we sit here and speak, with 16 days to go in the contract. And it's almost like you could see this coming, but if I would have told you that this was coming 2 weeks ago, you would have been like, okay, well, markets are probably back down, and they're obviously not doing that. So this is different this time around. Not exactly sure what to make of it, but I think anybody who's not short a call spread, I think it's worthwhile doing. You're going to see the upside skew is a little back to being a little bit more steep, and so that is obviously of interest, and you're able to go further upside and probably get some things on. Myself, I'm just going to hang in here, Chris, and see if we can eventually see some kind of fade back below 98, 95, if you will.
Right now, I mean, I still have, finally, the 148, 150s are making some money. About dang time. You'd figure that would have started sooner as we're getting through the decay curve here. The 111, 113 that I have had on is not making money, which is noteworthy given where volatility is priced. And over the next 16 days, Jamal, we're talking about a move that could potentially go up through 113, maybe all the way out to 119, as it were. That to me is the trade here right now in the short term. We've been trading range bound in the M6 contract. We've been trading range bound in some of these other products. They're starting to break out. So kind of getting like a sense of where this war is. People say backwardation, as Scott Bessent, the Treasury Secretary, who should really know better, that when you look at prices out in the futures curve, well, the market's not freaking out about what's happening in the future. Lower prices are predicted. That's not what the futures curve is used for. It's not a predictor of future prices. The shape of the futures curve in oil tells us about supply and demand dynamics in the oil market. And this very aggressive backwardation tells us that there is not nearly enough supply right now to meet existing demand levels. And you're seeing what happens with backwardation. You generate your positive roll yield, right? Generate your positive roll yield. You're selling the more expensive front month contract to buy the cheaper next month one. And as you get closer to expiry, the future price has to roll up. Okay. So we're starting to see a little bit of a roll up here, Jamal. You're seeing the N and the U start to, press to the upside right now, telling us that this issue is going to be sticking around for a little while longer.
It does seem like
I
that.
still feel, yeah, it's bothering me too. But, I know I've been saying for the past week, it feels better to do short put spreads than long call spreads if you're going to take an oil position right now. I know this thing has moved up, but also I feel like that's still the appropriate thing to do, because the longer this disruption goes on, the longer it's going to take to restabilize supply at the front end and reroute all the ships and repressurize the pipelines. It's not changing. So if we get dips in oil here, Jamal, I'd much rather do a short put spread than like a long call spread or even a short call spread right now. But if we get more rallies and they want to give us a 130, 135 strike to sell and give us like a 2-to-1, 3-to-1, as they've done in the past, we have to take it at first blush.
The key phrase there is if we get dips. They've been very short dips that we've gotten more recently, and that's the problem. I know.
Is there a level that you're comfortable like looking at? I know 16 days is not really it, so we should stick to the N6 contract if we're going to, do our typical close to 45 and 21 out. Is there something that you like that's inside of 49 right now?
I mean, it's hard for me to
sell?
think about new trades when I gotta basically manage the one I got now. Like that's the thing that's what you see going on in my face here. I feel like I gotta manage my trades. Again, I'm short the 98 100, and I agree with you. It's probably better to be short put spreads and long call spreads, but in my case, I'm gonna have to buy a call spread just to offset risk because I mean, you could see 110s, and that's what I'm really looking at. Honestly, I'm looking at maybe having to do something centered around 110 because I feel like that's clearly the next area where we're going.
Oil's been a really interesting market to trade here, Jamal. I think this has been, you see spikes, you look to sell them. If you get dips, you look to buy them back. The physical market's constrained. Look at what's happening with Dubai crude, for example. Prices aren't letting up. Look what's happening with jet fuel prices around the world, going through the absolute roof. We're running out of refined product in a lot of places, Asia, Europe. We're emptying our domestic storage in order to help satisfy demand elsewhere, which is part of the reason when we look to something like gasoline futures are sitting at their yearly high because we're drawing down our domestic refined gasoline inventories to send it elsewhere to fill the gap. But that means less for us here at home. So just thinking about this, Jamal, the oil problem, it's screaming at you right now. And, it looks like we're in the throes of maybe a window here where we could potentially get a headline. Either the war is going to resume or we're going to get some sort of change in the blockade ceasefire. Maybe in the second half of this week once we get through the Fed and the earnings. But I would not dismiss getting another big Iran war headline in the next day or two, given the constraints around Iran's energy inventory situation and storage problems.
Yeah, and so to that end, if I were looking at this with fresh eyes without having the stigma of having my trade on, I'd probably go to the N contract. I probably wouldn't necessarily do anything in the M contract. It is kind of a shorter time period, and a lot of times when you get closer to oil expiration, you can kind of see some funky stuff happen. You can kind of see some big moves. So for that reason, I'd probably go to the July contract or options within that July contract and probably make a trade there.
What
is that, the 49-day window? The 49-day window is, I think, the one with the most liquidity.
That's really the one that I think just typical Tasty 45 in, 21 out. And that is the last cut. June 16th is the last in that cycle for July. And then you go over to Qs for August. We have, let's go to natural gas here. It's another 1.25% lower here, Jamal. I don't know if you've had anything in natural gas. I certainly have not. It's on the watch list, though. It's a 13.2 IVR, and that's usually not the appeal of trading natural gas. The appeal is that it has a 70, 80 IVR when everything else is like VIX is at 15. And so it gives you something to do. But when the volatility is this low, not just on an absolute, but a relative basis compared to other products, no reason to engage with the honey badger. That said, we have a yearly low here from January 15th. We had it treated as a pivot high just last week. So about 290. We've had our 1 month moving average cut through there. We have a downtrend in recent weeks. So I'm looking for a little bit of stability here before I stop operating on any sort of long deltas. Vol is cheap enough that we get a little bit of a reversal. Maybe you can punch a lotto ticket and not look to sell vol, but buy maybe something out of the money and get a vol expansion or right.
No call spread.
Like a 320, 340 call spread here. If you start to poke through 290 and see if that starts to fly, right? But until then, the momentum to the downside has just been so bad where you're not getting any movement above the 1 week or the 1 month. Again, falling knife, right? Do you want to catch a falling knife? It kind of reminds me of the notes. The notes kind of look like that momentum-wise. You're trading sideways and tilting over. Why buy the dip?
Yeah, it is fascinating, the idea of buying a call spread in here. But like you said, we've seen times where we feel like oil is, natural gas, is tanking, and it's possibly a time to buy, and we just see it fall even more. So I think you do want to wait for at least a little bit of an uptrend before you make a stab at it, right?
That's what I'm hoping for. In the N6 contract, it's going to be a little bit higher, about 320. But if you get to 320, maybe you can look for a move into 340. And so 340, 350, 360. And obviously, this isn't going to be the pricing now. We'd have to make another 20 cents. So it would look more like this in terms of payout, risking 1 to make 3, around a 1 in 3 chance of success. It's not bad. I mean, if you break even on that, Jamal, you're not going to make any money. So, if you do that 3 times in a row, the win weight is expected to be 1 out of 3, and you're going to break flat. But the point is that if you happen to catch it one and the one time it's right, you can triple up. I'm looking for something to do here. It's just, it doesn't feel like it's the time to take it off the watch list.
Yeah, it actually would be a nice change, honestly, to get long natural gas in that type of way. I mean, do you look at June? And again, obviously, as you go further out, you start looking at different strikes, and strike structure changes a little bit. But is it June or is it July? Is there something centered around that? Is there some type of? I know that's more of AC season, but it's. I like the idea, Chris. I do.
One thing that we've had our eye on here for a few weeks, it's been a trade that we've had on since effectively the start of the war, was looking for a long move in wheat futures. And while it started to come together, we had the pullback. Really terrible crop report today, underscoring the fact that we're having lower yields in the key parts of the country, particularly the Midwest, where we need to have higher yields for our crops. This then plays into some of the reporting recently that not enough fertilizers in the country, even though the places with the deficits of fertilizer for the crop sowing season are not in the Midwest. It's mainly a Northeast problem. And, Northeast isn't known for growing its crops. New England isn't exactly a crop growing area. So Jamal, this is again, one of those knock-on effects of the war here, where all of a sudden, we're not producing a lot of our product in one of the world's bread baskets, and we do have these supply chain problems. And by the way, we may be underpricing this risk again. So 658 here. It's a 4.6% move. That's a $30 jump here in wheat futures. I have no reason to change the structure of this trade right now. I could take a little bit of profit on it, and it still doesn't paper over nearly enough of the sins that I've had in other places recently. But it is one of those little canaries in the coal mine to me, that if this trade is working out, it's working out for something that could be problematic for other parts of the market soon too. And so oil at 100, wheat jumping to the high of the year today, things that make me feel a little less comfortable, even if tomorrow's earnings come out great and stocks push higher, that's not changing, because this is a function of physics and molecules moving, nothing else.
Yeah, I'm a little disappointed. I had a trade on in the corn anyway, a while back. Actually, it was I put it on the 31st. And I had the 470, 500 call spread. My thesis was essentially, if the whole situation at the time that it escalated even further, then obviously these were going to be the names that really ran. I was looking for more like bars like we're seeing now. And of course, we started that de-escalation process, and oil started coming down, and so these naturally pulled back some too. But this is a whole different animal. Like you said, some data today. And these are some big moves here. So these are viable trades once again in the corn and the wheat. Soybeans not doing the same thing though, not at all, which is kind of interesting. Usually they're all kind of moving similar, but not in this case. So,
well, if you can't plant corn and wheat because you don't have the proper fertilizer, you can plant soybeans. So there is that trade-off for farmers right now, where if every incremental, acreage of corn or wheat that's not planted, you can then just, soybeans need much less fertilizer, so you can make dough. I don't think that's where we're going to see the action. I would point out what's happening here, though, in corn, comparing it to what happened at the start of the Russian-Ukraine war. You get the initial bounce at the start of the war, and then you spend basically the month of March consolidating, pulling back. And then after a month of consolidation in corn, you finally get another push to the upside. You can see the same thing in wheat back in 2022, where you get that initial push higher when the war starts, you get a pullback for the course month, and then you get another swing to the upside. I point that out because we just had the start of the war, a push higher at the start, spend a month consolidating, and now we're cycling up again into a new high. And in 2022, when that happened, what was the next 6 months like? Stock market was pressured lower, inflation was running hotter, yada, yada, yada. There's a little bit of a cadence here in terms of the timing that I think is not coincidental. But oil, wheat, your commodities are running hot today, the ones that you don't want to see running hot. It's not an ETF, or it's not a future, so to speak, but we can look at some of the commodity tracking ETFs like DBC or DJP, and these things are continuing to just run and run and run. So hot commodities, Jamal, right now, I know we're all paying attention to ES at 7,200 and thinking about tech.
For sure.
But the commodities are screaming at us that this thing ain't over.
Yeah, no, this is, again, another really interesting, I think, perspective trade. When you're looking at summer months coming up, it could possibly exacerbate in this way. And so, yeah, I mean, looking at upside in corn and wheat, or, even the previous where we talked about natural gas, I mean, wouldn't that be something if that ends up being the big moves that really kind of end up rocking the market? That'd be fascinating. This is interesting. Might have to look at some upside in one of these, corn or wheat.
Year to date, S&P is up 3.2%, Nasdaq's up 5.7%, crude is up 89%, natural gas is up 30%, heating oil's up 173%, wheat's up 26%, soybeans up 49%. So soybean oil's up 49%. Soybeans themselves are up 10%. I mean, that says a lot. The commodities, the soft ag, the energy is outperforming the broader market. And it's one of the reasons why metals are just having so much trouble still. This has been one of the clear dynamics about gold, about silver. You can't call a top on oil, so then how do you call a low in products in a sector that central banks have been effectively mining for liquidity? We get that push to 100 today in oil. Gold takes another slip down. Volatility is still coming in. I think you've been short this time. Well, I've been staying away from getting long. So you may be doing a little bit better than I am here, although I suppose avoiding a bad trade's better than being in a bad trade. Are you still trading this thing short?
Yeah, still short falling here. It's been a little bit rocky, obviously moving around a lot more recently, but my downside is 4,500. That's where my short leg of my Iron Condor starts. So luckily we did not get close to that today, at least not too close to it. We didn't breach it, and so that's good. But the shortfall has been the play. I mean, the vol has been coming in here. Now, recently it started to move a little bit more, and I think vol is picking up, but I'm still staying shortfall and hoping that we just get a little bit of a rise here. Usually after you've been shortfall for a while and this makes a strong little move, and then it comes back to, say where it's been trading in the mean, if you will, which I guess is probably 4,650 to 4,700. Hopefully vol collapses a little bit more, and then I can just move on and take the trade off. Right now I'm at 28 days, so I'm not changing anything as of yet. But yeah, the move this morning kind of was a little scary because it's like, this thing is looking really bad. And on top of oil rising and markets being down, it looked like we're in for a big time catalyst.
Silver, same thing. It had that attempt to break through the former swing lows. It got through there, and then it gave you one of these little left shoulder head breakdown, lost the uptrend, and then bleeding out. Not great. It's a slippery market right now. Copper is a different story. It's still down today like everything else. It lost its range here, but it's holding up right now. Broadly speaking, I'm with Thomas Westwater here on a short put spread in copper. It's not doing fantastic today, but broadly speaking, I'm comfortable holding it still given where it's situated. We'd have to see a much more meaningful meltdown in copper. But again, the commodity supply chain issues, there's no sulfuric acid leaving China right now because there's a shortage globally. You can't mine copper without sulfuric acid as part of the ore refining process. And if you can't mine copper, you can't mine silver. So, people are sorting through liquidity issues right now, Jamal. There's still very compelling fundamental stories behind the metals. It's just not the right time for it.
Right.
I would point to something like GDX. I had a really interesting conversation today for Trading Trends, and I'd encourage people to go check it out. But the gentleman had pointed out that when you look at something like the miners move before the actual underlying commodities. And so until you get stability effectively in your silver miners, in your gold miners, don't have too high of an aspiration or hopes for what's actually happening with gold and silver themselves.
Yeah, I think you have to look at these metals through a different lens. I know it was a wild time a few months back, the way that they were trading, but it's different now. And again, the vol is still elevated in a lot of them. I think that's still the place. I think, and whether it's oil, whether it's gold, silver, I think those are some of the inherently higher vol names in plays right now. Obviously, I know there's a few equity plays that are a little bit higher vol, but those have earnings and these don't. And so that's what makes these a little bit more compelling.
I saw a comment that there was some questioning of whether or not OpenAI is behind today's sell-off. I actually just saw a Goldman Sachs note hit the inbox. High beta momentum is down 7.5% on the back of neg OpenAI reports. This is one of the worst days for momentum in the past 5 years, and the move has completely reversed what was previously the pair's strongest 10-day gain on record in their high beta momentum index.
I mean, it
So
could be
it's just
OpenAI. It could be a little bit of de-risking heading into these events. I mean, I'm sure a lot of people feel like they're going to be doing it tomorrow. So maybe some people wanted to get ahead of the trend. Maybe, it could be a couple of things.
And the trend is still intact. The 1 week moving average is 71.67. We're currently at 71.67. We haven't closed below it yet. The NASDAQ, the same thing. Haven't closed below it yet. The Russell, can we make it 3 for 3? Not quite yet, but we're climbing off the lows here. So yeah, maybe some jostling ahead of tomorrow. But also this is a market where people have been underinvested in equities because they got out at the end of March and then the market rallied in April. Mm-hmm. So imagine if we have blowout numbers tomorrow. Imagine the level of chase for some more of these folks.
Oh my goodness.
That could definitely scream here, Jamal. Let's get off the metals and let's go over to the dollar, which is rebounding. Thanks, oil. Again, liquidity provisions in focus today. One thing that's standing out to me, though, is a bad of a day it is for the risk complex, so to speak. Even have Bitcoin trading in a little bit weaker. That commodity-centric Australian dollar is holding up near the top side of its range. And in fact, with just a few more pips here, it's going to be a closing high for the year right now. Selective dollar exposure, I think, works depending upon where you're looking. I'm finding myself, if I want to continue to bet on dollar weakness, it's through the commodity currency complex rather than the euro or the pound. The euro and the pound are currencies of countries that are net exporters. In fact, net importers of energy. In fact, if we take a look at jet fuel as just a baseline, the UK imports more jet fuel than any other country on the planet in terms of net imports, exports. The two that don't, Holland and the United States. So, if the British pound is going to be center focus here, if you're really looking at a crisis that's going to move beyond just oil going to 100 or we'll call it wheat prices moving up, currencies will reflect it. The British pound is going to be the one that gets hit the hardest in my view. 135.17 here, still above a breakout level. You lose 134.5, then you have a potential top in place. And you can look to get aggressive on some of the puts. But right now, dollar weakness is the main trend. Today is an intermediate step back within that trend.
Yeah, I know it's weakness, but for the most part, it really kind of also not moved a whole lot in the last several trading sessions. It's kind of been in the same spot it was a week ago when you look at the dollar, right? Despite us seeing this move recently in oil, I would expect it to be moving a little bit higher. That was at least my thought, and it just really hasn't. So, I think we're possibly due for another move. Maybe something's going to change in the next couple of days here. But for right now, it just seems kind of quiet.
It seems kind of quiet. There's a good deal of volatility in these markets, though, which is why on a day like today, you could look at natural gas, which is 12 IVR, or you could go over to the British pound with its 87. Jamal, 87 IVR, not for nothing. That's a pretty decent look for the currency space. If I wanted to articulate the view that this British pound is weaker and should be weaker, I'm looking above recent highs, which in the M6 contract gives you closer to 136. If we were to go to U6 for the next expiration cycle, not that different, right near 136. 136 has been a swing high here. So if we wanted to go to 65 days, start to spread maybe 50 pips wide, you're getting close. One risking 2 to make 1. That's not bad. You want to go a little bit beyond there. It's closer to a 3 to 1, but now you're up at a 60% probability of profit. You could effectively lay out the view that, the wars are going to get worse through a fairly cost-effective view through the currency markets. But also to that point, if this is, oil's at the top side of this range, they're all going to come to a deal. It's a nice little bounce here off the British pound, Jamal. If that's it, if 134 is the low, there are different ways to skin this cat. 134, say 135, all of a sudden we're working with a little bit of a short iron condor situation. We're not going to rally substantially because we have these commodity issues cropping up, but we're also not going to break down because oil's not going to make a move higher. You can find interesting pricing metrics that I think folks should be willing to explore. And in this case, risking 1 to make 1.5 on a short iron condor using recent swing levels that we've seen established over the past few weeks.
Well, yeah, and given the chart that we've seen more recently, you can literally keep it that tight as well. Like that's actually a much more meatier iron condor to sell, and it would actually work given that there really hasn't been a huge move in price.
No, and there hasn't been a big move in price, right? Even going a little bit further out, just to, starting to look at recent swing lows. We're talking about 131.5. You want to go down to 131, 131.5. All right. And above the recent highs through 138.5, Jamal, I'm talking myself into this. I mean, you're telling me that I can go through the highs that we had pre-war and through the lows that we had during the war, and I can basically risk 2 to make 1 at a near 60% probability of profit?
I mean, yeah.
Sign me up right now. Let's do 2 lots. Sign me up, put it on. And I think with that, we can talk about cashing out of this session of Futures Power Hour. We're running it a little bit early today. I guess we got through this quickly. Although the volumes in this market, what do you do on the day before the Fed and all these earnings reports? The S&P 500's off. Decent volumes,
decent,
better than
yeah.
yesterday, but not exactly through the roof. Nice little defense here of that 1 week moving average though right now. So I think that's just the most important thing to watch. Going into tomorrow, if the market hasn't given up the trend characteristic, don't short the market too early. Maybe you have to wait until the other side and you get your buy the rumor, sell the news, blow off. 7,300, kiss it, say goodbye. And we're back down to 7,100 in a few sessions.
That's how it's going to go, huh?
Listen, if that works out, I have a 7,300 long call and I have a short iron condor that's in greater duration. So we want to go up first and then come back in a little bit harder. I'd be quite happy with that, Jamal. I'd be quite happy indeed. Calendar tomorrow, saturated, super saturated, particularly on the U.S. economic side. Building permits, housing starts. We care about those numbers because those are sensitive to rates sensitive to oil. It's all the same thing. We go over to durable goods orders. That's definitely important. Items with lifespans of 3 years or longer. Think automobiles, airplanes, appliances, the kind of stuff where you take a loan in order to finance it, Jamal, pay for it, which means you have to be confident about your future, right? You're not going to take out a loan if you can't service the debt. So you don't take the order for the new refrigerator unless you know that you have the savings for it, or at least the money to rebuild the savings, the cash flows in the future. I digress. That's actually an important figure. We'll watch it tomorrow morning. We have a BOC rate decision tomorrow morning, and then we have the Fed in the afternoon. I am remiss to say that I will not be here for what may be Powell's last meeting. It is thoroughly bumming me out. But, I've got this throbbing mole that really needs to go away. So we're going to get that scoopy scooped out and see what's going on inside there. Fingers crossed. Fingers crossed.
Hopefully it goes well.
I'll be back later today with Nick. Liz and Jenny are closing the bell from the SIBO floor. So I'll be back with Nick for last call today, and of course with Ilya on overtime. So see everyone again at 3:30 Eastern, 2:30 Central. Until then, though, good luck trading. Dr. Jim's coming up at the bottom of the hour. Go get a sandwich, coffee, drink. You're watching Tasty Live.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. named best online broker for options trading. Genius loves company.
We gonna build it up and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way. I'm feeling fly tonight, like a rocket ship. I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope grooves. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing, this body totally bussin'.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the pre-water park edition of what it is that we are trying to do. The only thing that is standing between me and the germ-infested cesspool that is the Great Wolf Lodge is you guys. And so, man, we got 45 minutes together, and we're going to make the most of it here on the Tasty Live Network. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Man, on a day like today, can you celebrate if you're a bear? I mean, we're down a little bit. I suppose you can, but I kind of have a feeling it's going to be a good time ahead by not only most, but everybody here today. And of course, drop whatever questions you have for me in the chat. I'll try to get to as many as I can. I typically get to some number between 0.008 and 0.0085 per show. So the earlier you get it in the chat box, the higher the delta that will get to that question. And if for no other reason, guys, you've got one job to do, one job only. Hop in the chat and pump that algo. So I appreciate you guys. Josh, bring us into the market. Man, what is going on out there in the world of the old financial markets? Even the S&P is down 39.5. Risk-free instrument, also known as the NASDAQ futures, which is not risk-free at all. It is actually extraordinarily high risk, down 265 on the day. You got the boomers down 78. You got the Russell 2000 futures index down 34.5. You got bonds down a little bit. You got notes down a little bit. You got oil catching another bit. So apparently we must have a blockade of the blockade that's been blockaded. Oil up 380. Got UB40 down a little bit. Got the shifties getting smacked around a little bit. Gold down 82, and the Hunt Brothers down $1.75 on the old silver futures, down to just under 74. British pound is down. Euro is down. Volatility is not really up on a daily today. That's kind of interesting. I would expect, or I would have expected volatility to be stronger on a daily today, but the market down, I mean, EMS&P is down 40. It's not like they're down 8. I mean, it's not like we're down 12 3/4. Like we're down 40. That's a little over 0.5%. That's a decent little move. NASDAQ down a full percent. You know, boomers obviously kind of, leading the pack, but that's what they've been doing. I mean, they've been doing it for decades, for centuries at this point. And so would you expect anything else? I most certainly would not. And so volatility up a little bit. Spot volatility, the old VIX, that guy is up 21 cents, so up a little bit more, but still very, very muted, very, very, very calm on the seas. And I think I know why, guys. So I'm going to be gone tomorrow. I'm going to be at the water park. I'm gone tomorrow. I'm gone Thursday. I'm gone Friday. But I'll tell you what's not gone tomorrow. So listen, if you're multitasking, come back to me. I've been looking at markets for a long time. It's been 20 something years now. I've been studying markets. I've been trading markets. I've been actively involved. This FOMC number that's coming out tomorrow, guys, I've never seen, studied, or even thought about a more impactful number than what is coming on down the chutes tomorrow at 2 o'clock. And then we've got the presser at 2:30. I mean, we are on dangerous, dangerous ground that Powell goes with a non-purple tie. Like, we need something in the Hex family, some shade of purple, to let us know it's going to be okay. We need to be assured that, okay, we're going to make it through this. If he comes out with a gray, if he comes out with a black, if he comes out with like a periwinkle, like a baby blue, man, this is not good. It is not good at all. So you've got about 24 hours left, right? I mean, again, if you've got the Amazon Prime membership, if you've got hardware stores nearby, go to an Ace, go to a Harbor Freight, like whatever, get the bunker materials ASAP and start construction immediately because you are running out of time. But that's tomorrow, and I'm going to be gone. I'm going to be on the lazy river while you guys are all trying to keep the market above zero. But anyway, I digress. So let's go into the portfolio. We'll see where the wind blows us. And then, of course, I'm going to get to you guys, man. You know, we've got earnings coming on down the chutes. I mean, tonight is Starbucks, and then it's all the other guys, Microsofts and Metas and Apples and USA, of course, which is, of course, tomorrow with the FOMC number. I'm not going to trade any of that with you guys because I'm going to be on the lazy river. Because I'm going to be going down some slides. I'm going to be doing the whitewater rafting deal. Whitewater rafting? No, that's a little grandiose of a term, but I'm going to be doing some rafting. I'm not sure it's going to be whitewater rafting, more of a kind of like an off-white water rafting there in Great Wolf Lodge. But yeah, so I'm going to need you guys to keep it above zero. And good luck on all of your earnings trades. Let me say that now before I forget. If I forget over the course of the next 36, 37 minutes, good luck, Godspeed to you and yours during this earnings season. Tomorrow, the next day, it's going to be a little bit crazy. And so, and of course, about midway through, I'm going to get to you guys. I see you guys, man. Look at Sam L's here. Ron Bashar is here. KG is here. Griffin Jones and Joe YQ and Ash Finn is here. I got Josh Amazon priming me some questions, man. I appreciate you. Man, look at Nara Lee in the house. What is going on there, Nara Lee? I don't recall you having been in the chat before. And my blueberry intake has been very, very consistent. And so I think I got that one correct. But thank you there, Nara Lee. Maybe I might even surprise and delight you in a couple of minutes. I see BDH sneaking in at the end. Big Deal Donuts is here. Man, that's some good stuff. So, all right, so let's go into the portfolio. Let's take a look at what's going on. So number one, we've got GM. So this was earnings this morning. Now, again, I'm sort of in cleanup mode right now. I'm sort of in like, all right, let's try to, tie off some loose ends. Let's close some loops on some things in the portfolio that makes sense to do so because I am going to be out for a few days. Now, I'm not going to be gone for a week. I'm not going to be gone for 2 weeks. Like, it's not really that big of a deal if I want to keep some things on. But still, if there's something where it's obvious to take something off because of where it's at or the risk parameters or what have you, then I'm going to take that opportunity right here and right now and not really think twice about it. So for GM, this was a long call spread that we played for the stock, and it's up 76 cents. It was kind of weak this morning. I think it was down, actually, so I was prepared to take a little bit of a loser on this trade, but it looks like market's moving, things change. Like, it looks like this guy has come back to us. And so we will take our 38 cents and we will move on. And so again, 38 cents, you got to put that in real terms. You got to put that in tangible terms. And how do we do that from theory to practice? We use the bonefish converter. Right? How many bonefish meals can I get out of this trade? 38 cents, that's $38. That's 80% of a bonefish meal right there. Now, of course, you're going to be dining alone because very few people are going to want to come with you, but that's just more for you. I mean, this is not a bad thing. Like, you think that's a gotcha? Man, that's the cleanest gimme I see on the board. And so GM, we are up 39 cents on the trade. And from a bonefish standpoint, pretty solid. So let's go ahead. We'll take it off. But was it down today, though? I think it was, right? It was down. Yeah, look at that. Man, this thing was down to, wow, it was down a lot today. Man, it was down under 75 at one point. And then they just ripped them right back. And I don't know who they are, but man, I'm very appreciative of them, much like I'm appreciative of you all. And so GM up 71 cents on the day, looking pretty good for us. Let's take it off. We'll get our 80% of a bonefish meal and we'll call it a day. So let's go ahead and highlight both options. Close position. And we can just be done with it. We'll go 228. That's right there on the mid price. Boom, got filled at 228. That's a beautiful thing. And there you go. All right, so there is GM over and done with. It's almost like it never happened, other than the fact that we were able to pick up about 40 cents on the trade. Okay, so that's GM. The other thing I want to talk about here today is let's talk about the MES call for a second. So first of all, we talked about this. It was either yesterday or, well, it must have been yesterday because it's only Tuesday. Man, it feels like it's like Thursday. Is it just me because I'm going on vacation? Like, if it doesn't feel like Tuesday, it feels like we're like right on the doorstep of the weekend. Is that just me? Am I just feeling that kind of in isolation here, or do you guys feel the same way? It kind of has the week has a weird feel to it this week. But so we talked about this just yesterday. I'm going to hold this guy while on vacation. I don't mind being a little short the market. I don't mind taking this guy 21 to 14 days, anywhere in that range. I think you're fine. Again, all the research has been done at 21, so there's no reason to kind of deviate from that necessarily. But, if you find yourself in a situation where you may be out of, commission, or you may be, on vacation or whatever, I wouldn't worry too much about 21 to 14. Anywhere in that range, I think you're going to be totally fine. And, obviously position size is going to pull rank. As long as the positions are small enough on entry, and obviously over the duration of the trade as well. It may not just be entry, because sometimes we like to layer in a little additional risk. And so I guess you have to factor that in as well. But as long as the position size, as it currently stands, is within your position sizing parameters, I think you're fine. So for us right here at 17 days, I'm not going to take this off right now. I want to leave it on because it is giving me a little short delta exposure. And I was going to say what's cool. I guess it's a little bit cool, but what I wanted to really focus on here is look at my delta on the trade. So we're pretty deep in the money with this short call. I mean, you can see we're 364 points in the money. And so this is a pretty deep in the money short call. So I wanted to draw everyone's attention to my actual delta exposure on the position. Because remember, one MES future is equal to approximately 50 delta. That is an approximation sign. You would never know that unless I kind of verbally guided you forward through the forest. But there you go, about 50 delta. So I'm at about 45 delta on this position. So what does that tell me? Like, what does that communicate to me? It's basically telling me I've got some pretty static short delta here, and it's going to feel very much like a short MES future. And so when you understand that and you look at that metric and then interpret it, it's like, okay, is that what I want? Do I know what I've signed up for? Am I okay with what I've signed up for? Do I want to potentially consider signing up for something else? Do I want to kind of cut rope on this guy and move into something else? And so I'm not going to do that here because this is what I want for this position and the portfolio kind of writ large. But it's very helpful to use the metrics to our advantage in terms of understanding, in terms of, this is what I've gotten myself into. This is the pathway that I am on. Am I okay with that? And so for me right here, I kind of like having a little static short delta, just in case. Like, isn't tomorrow Powell's last ride? Isn't that it? Like, tomorrow's it, right? Does he have one in May or June or whatever? But if tomorrow's it, man, I really think he's going to deviate. Like, I really think, just from a game theoretical standpoint, like, everybody's been operating within the Nash equilibrium to this point, but my man is going to defect tomorrow. He's got to. If it's his last ride, he's not going purple, guys. I'm telling you right now, take the field. Hop on Polymarket, hop on Call Sheet, whatever, take the field. I'm about 25% sure he's going non-purple. And if he goes fire engine red, look out below. If my man even goes magenta, if he even goes like maroon, man, look out below, because the markets are not going to like that at all. But going into tomorrow, I don't mind having a little short delta that has a little more of a static feel to it. And so there you go. So there's our MES commentary. And I know you were obviously champing at the bit, however you say it, whatever, to know what I was going to do with my MES position. And so there you go. And so I do want to talk about Johnson & Johnson a little bit here too. We're not going to close the trade, but man, we're getting pretty close to, victory lap territory on this guy, because we're only down $1.70 right now. No, nobody takes a victory lap better than I do on a losing position, but we've been down a lot more than this on Johnson & Johnson pretty much every day prior to this point. So when I look at this trade, I'm only down $1.70. Again, understanding I still have plenty of room between the stock price and the strike price. Man, this thing is moving in our direction, and we only need another couple of days, another couple of weeks like this one, and we're going to be in a really, really nice spot for Johnson & Johnson. So I'm not going to do anything with that guy. And that's going to be that. QQQ, this is our short call spread. It's defined risk. Not going to do anything. If it doesn't work out, it doesn't work out. And that's just the way that it goes. We talked about this guy just yesterday. I do want to talk about Starbucks, though. So Starbucks, If I'm not mistaken, they've got earnings today. Is that correct? I think they have earnings tonight. And so, I mean, all the stars are aligning, guys. I mean, I'm not going to trade it because, again, I won't be around to manage it. So that doesn't really make a lot of sense. I mean, maybe we could do something in the back month. Thank you, Josh. Yeah, they have earnings tonight. Should we do something in the back month? I mean, we're already pretty long Starbucks. But again, guys, just use common sense, right? Just use common sense. You don't need the charts. You don't need 10Ks. You don't even need probability analysis. Just use common sense. They have earnings tonight. And then you know what Friday is? Friday is the first of the month. Friday is May 1st. And so let me be the first to wish you all a happy month anniversary on Friday. I don't think I've ever told this story before. So back in 2006, I met my wife in the summer of 2006. She worked at a tanning salon and I was a customer. And so I went in there one day, asked her out for coffee, and she begrudgingly said yes, reluctantly said yes. She looked very hesitant. She wasn't really sure, but I just kind of wore her down, much like I do with you guys. And she finally said yes. And so we went to coffee on July 1st, 2006. Went to Starbucks. We have been to Starbucks on the first of the month ever since, every single month. It's 2026. I mean, you guys do the math. I don't feel like doing the math, but that's a lot of Starbucks trips in a row. That's a lot of month anniversaries in a row. Look, James didn't even know I was married. Yes, James, I am married. It's going to be 17 years in October. And man, it feels like about 70. It's been an amazing, amazing marriage. And so Friday is our month anniversary. And so happy month anniversary to you guys. I'm very excited to finally have shared that story because I don't think I've ever shared that story in 10 years. That's kind of amazing. Because I mean, we've talked about PhD, we've talked about bodybuilding stuff, we've talked about a bunch of different stuff, but I've been keeping that one under wraps. And so there you go. So yeah, so let's play Starbucks to the upside. I'm maritally obligated to play it to the upside. Let's go ahead and go into the back month. 51 days to go. I saw you guys, by the way, giving your thoughts about my top 3 earning strategies, which that video, let me think. I think that video is going to drop tomorrow. I thought it was going to drop today, but I had the timing off. Today there was a delta theta ratio video. It's already on the YouTube channel. Again, they gave your boy the morning slot today. Like today I got like the 10 a.m. slot, which I mean, that's like prime time, man. For a trader, that's like the A++ slot. And so they put your boy in that slot, which I don't know if that's a good fit. I kind of want that B- slot. That would feel a lot more comfortable from my vantage point. But yeah, check out the theta ratio, the delta theta ratio video, which is already out there. But then tomorrow will be my top 3 earning strategies. And I'm even going to, I don't want to tell you because then you got to watch calculated risk. But all I'll say is this. I was scanning through because we talked about this yesterday. I had you guys put it in the chat. A couple of you guys nailed it. I can't remember who it was because there were so many people that kind of shared their thoughts, but a couple of you guys completely nailed it. And so I'm proud of you guys for having followed the show and having been able to kind of figure out what those top 3 strategies are. But when that video drops tomorrow, I think it's tomorrow. Yes, you will see my top 3 earning strategies. So I'm going to go in here in the back month and we're going to use one of them. And so let's go ahead. 51 days to go. Again, I'm maritally obligated to play Starbucks to the upside. I can't really think about it. I can't deviate from that. There's no defection allowed in this game theory. Essentially, my moves are all predetermined and they are authorized before I can even make them myself. So let's go ahead and, which anyone that's been married longer than 10 years knows exactly what I'm saying. So 27 delta. Yeah, I think we just sell the 90 put. You know, I mean, we're already pretty long Starbucks because we got the shares, we've got the short call and what have you, but let's go ahead, let's double dip. I mean, it worked out pretty well for George Costanza. Maybe it'll work out pretty well for us. Actually, I don't think it did work out that well for him in that episode, but maybe we can right the ship for all of my Seinfeld fans that might be watching or listening to the show here today. Let's go. We're going to sell a 90 put in Starbucks. I'm choosing the 51-day cycle. And so I'm not worried about being out for a few days. That's not really a big deal in this scenario because, you know, a couple of days for a 51-day trade, probably not going to make that big of a difference either way. And so we sell the 90 put and then we can just move on with our day. $1,200 buying power. So that looks pretty good. And there you go. 230. Boom. Done. All right, there you go. So let's go ahead and we got Starbucks. Snapchat, I mean, I'm not worried. I don't really want to spend too much airtime on Snapchat. I've just given it 7 seconds. That's probably 6 seconds too many. If I go to TLT, we're up about 40 cents on the trade, but it's defined risk, 51 days to go. I'm going to sit tight on that guy and do nothing. The one trade I did want to take off here is UAL. So this is the trade, this is a trade that we did for United Airlines earnings. We skewed it to the downside a little bit. It happened to work out for us, so that was really, really good. You can see that we sold the Strangle for $6.41. It's currently marking for $4.58. And so we're up about $1.83 on the trade, which is great. I mean, that's a great trade. If I wasn't leaving tomorrow, I wouldn't do anything. If I wasn't leaving tomorrow, we would go ahead and leave this trade on. But again, I mean, we've got FOMC tomorrow. We got all these Mag 7 earnings and what have you. And so I'm like, yeah, let's just go ahead and book the profits on this UAL Strangle. We don't have to worry about it. We've already gotten a very economically significant profit out of this trade. I mean, $1.80, that's pretty good. $1.80 in the options world, that's $180 in the actual world. And so again, I don't even know how many bonefishes that is, but it's multiple for sure. And that's being generous with your tip. Like, that's being generous, 25%, 28%, 30%, 22%, like however you define tip generosity. I think anything 20 or above is pretty generous in my opinion. Although I don't know. Is 20 like minimum now? Like, I feel like times are changing. Like when I used to serve at the Olive Garden, which that's another story that I know I haven't shared on air before, but maybe another time. 20 was like, I was super happy when I got 20%. Like I typically got like 10 to 13%. I was like, man, I'm not very good at this. So when I got 20, I was like, this is amazing. But I feel like times are changing. I feel like not only are we expected to tip our AC guy and tip the butcher, but now it's like minimum threshold is 20%. Like if you're not tipping 20%, you're like looked down upon. You're like, the downtrodden of society. It's like, what are you doing, man? Like, don't leave the house if you can't give me at least 25 to 28%. But maybe I'm just seeing that myself. I don't know. But let me know, what do you guys think about tipping society these days? I would love to know your thoughts. The algo is dying to know so that it can kind of become a bit more human-like and understand how we all kind of act and react and behave with each other. But yeah, I think it's a little bit crazy. And so let's go ahead and take off UAL, though. Tip culture aside. And then we can just be done with this guy. And then I can see where you guys are at, man. Let's see if we can do a little 459. All right, that looks fine. Okay, no takers at the 459. Let's try 462. No takers at 462. All right, so here we go again. Another little cat and mouse action in the UAL pits, which is a little bit surprising. But these days, man, I don't even know what to believe. 465, that's got to get filled. Okay, so we got filled at 465. All right, so there you go. So UAL, we are out. I'm very happy with that trade. And there you go. All right, let's go ahead and let's see. I want to surprise and delight. Where was the new person that I found earlier? I found a new person. I thought I found a new person. Josh, I'm going to get to yours in a second, but let me get, if I can't find it, then I'll move on quickly. But, there it is. Nara Lee. What's going on there, Nara Lee? It's kind of like Sara Lee. So you got Nara Lee, you got Sara Lee. Sara Lee is one of my personal favorite products. Just an amazing, amazing product. I mean, yeah, it's all, obviously just inflammation out the wazoo. You got a little jet fuel here. You got a little glyphosate over there, but it's delicious. You guys know it's delicious. But Nara Lee says, hey, Dr. Tim, what should we do on the Mag 7 today? Man, it's a great question, Nara Lee. Now, again, because I'm going to be out the next 3 days, again, terrible planning on my part, but it's not my fault. It's not my fault at all. You can take it up with my wife. And when you do, let me know so I can be nowhere near that scene when you guys throw down. And so I'm going to be gone for a few days, so I'm not going to do too much. But, if I was going to be here, Starbucks just today, we just played it kind of, in like a de facto way using the back month. But then you've got Amazon and Google and Meta and Microsoft are all tomorrow along with the USA. I don't know, narrowly. You could do it so many different ways, right? My biggest suggestion is watch the calculator risk tomorrow. Hopefully they drop it during the day. That would be good if they did drop that guy during the day. But then also make sure that your position sizing is in check. And so, bullish, bearish, nobody knows, man. Nobody has a clue. I certainly don't know anything, so I could give you my opinions, but they're not really going to help you. Other than the fact that if you do the opposite of what I do, it typically takes, on average, 6 to 9 months off of your pathway to financial independence. And so I wish I was staying around so I could give you my opinions, but I haven't thought about these. I haven't really considered these because I knew I would be gone. What I would do, though, just make sure that your position sizing is in check. Make sure that you are small enough on order entry with whatever you want to do, whether it's defined risk, undefined risk. I mean, you can be the judge, jury, and executioner when it comes to those decisions. Just make sure that you're small enough. And so one of the things I typically like to do is shrink my size down even smaller than what I would typically do for like a normal trade. So like a normal defined risk trade, for example, I might risk 2% of the account, 3% of the account, what have you. For earnings and binary events, I'm typically 1 to 2%. So a lot of times for like normal trades, I might be 2 to 3%. But for binary type trades, I'm oftentimes 1 to 2%. Don't usually like to go too far above 2% of the account because I just feel like, the potential explosive move that is on the horizon, it really is a bit of a stick in the mud when it comes to theta and vega and the time and volatility components that we typically want to play with those type of trades. So whatever you do there narrowly, definitely keep the position sizing in check. And so, all right, let's go to, Josh surprised and delighted me with an Amazon Prime question brought right to my doorstep. Here we go. So Josh says, Joel James. This is from Joel James. What's going on there, Joel James, my man? Can you safely trade low liquidity if you just want to put on a short put and are happy to take assignment? For example, the May 17.5 short put on MIR, but the open interest is 3. Can it be done? It can definitely be done. MIR, let me take a look at it. I don't typically look at open interest and volume and things like that because from a liquidity standpoint, the markets themselves essentially tell me everything I need to know. Because remember, regardless, or even irregardless, if you want to play it that way and you want to be a little creative and innovative with the English language, I mean, it's 2026, man. You just got to do you, boo. Like, I can't tell you what to do. Irrespective of what the volume might be or the open interest might be, if the posted quote is the posted quote, then the other side they have to honor that. So if you're willing to pay the offer or sell on the bid, like there has to be a counterparty there. That is quite literally what their function is in the marketplace. Again, irrespective of how much volume there might be or open interest or what have you. And so now obviously if you want to get a better price and price improved, then those things obviously come into play a little bit more. But if we just look at MIR, liquidity is 3 stars. Okay. I mean, I've seen worse. I've traded worse. I mean, so that's not necessarily a deal breaker. If I go to the trade page and I go to May, there's earnings. Oh, earnings are today. Okay. So you've got an $18 stock and you've got $2.50 wide strikes. That's a little bit of a red flag. You also have, the 17.5. Is that what you were saying, Joel? I think you were saying the 17.5. Those markets are not very good. Just to be perfectly frank, Frankie Walsh with you all. Those markets are pretty bad, actually. And so 35 cents wide on the bid and the offer, if you're selling that put to potentially get assigned on the position, you could do worse, definitely. But a lot of times, like when you're selling puts to enter positions, most of the time, you kind of want to do this in a way where what you're collecting on the put is going to have an appreciable impact on the overall basis on the position. Now, again, it's all relative. So I'm talking about an $18 stock. So if you sell this put for, let's say, 50 cents on the mid price or whatever, that's actually 3% of the stock price or what have you? Like, that's not even that bad, really, when it comes to the basis reduction. But generally speaking, and maybe this is simply a product of the fact that I don't trade lower price stocks that often, I'm typically thinking of, hey, I've got a $70, $80, $90 stock, what have you. Let me sell a put and pick up a couple of dollars, which again, relatively speaking, it's the same as what you see here with MIR. And so it could, again, just be a product of my not really trading the lower price stocks as often as regularly. The liquidity is not that great. It's just not that great. You could try to get filled on the mid price and you could see if you get filled. And if you don't, then you just leave it be. And you either don't do it, or if you really want to own the stock, you could just go buy the stock. The stock itself is only a penny wide. Now, you're not going to get any type of discount. You're not going to get any type of the advantages that come with selling puts and options and whatever. But if you kind of want to be a long-term holder in MIR, Mirion Technologies, whatever they do, then maybe just buying the stock is the way to do it. You buy the stock, you just hold the shares, and then that's that. But yeah, the liquidity here is not that great. It's not that often. So just understand what you're getting yourself into there, Joel, and understand what you're signing, what you are signing up for. It's not the most liquid trade in the world. And so just be ready to potentially either A, put in your price, and if you don't get filled, you walk away, or B, have to do some pretty aggressive price discovery to get to a price that makes sense. And so hopefully that helps a little bit. And so but I do see Ron Bashar right after Narrowly says, can you live stream your trades from the Lazy River cesspool? I'm sure it's less volatile than the SIBO trading floor. I'm sure it is too. But sometimes those kids are crazy on that Lazy River. Like, we're all supposed to be just relaxing, having a good time, and they just go bonkers ballistic. And I'm not talking about my kids. I mean, my kids don't necessarily, make it any easier either. But just all the kids, it is anything but lazy, man. And so I'll try to live stream, but I have a feeling our connection might drop a couple times. And so let's go to the beginning, though. Man, I see you guys in the chat. Man, you guys are doing work. I appreciate you guys. You guys are talking about tip and tasty trade. That's pretty funny. That's going to happen. Watch. You're going to go. You're going to click review and send. And after you click review and send, you're going to wait for the order fill. No. You're getting another screen. You're getting another screen. Like, would you like to send 20% to the devs? Like, would you like to send a little 15%, to the support group, like your Josh Fabians and what have you? And so, that's 100% coming. I'm a bit shocked it's not even there yet. And so, that's too funny, man. I tip tasty trade. Man, that's really, really funny. I see you, E-Media. I see you. So let's go to the beginning, though. I mean, the show's almost over, so we might as well go to the beginning. And so, but I see you in the house. Let's see. Point B is here. Danish Dynamite is here. What's up there, Danish Dynamite? Hey, Dr. Jim, buy the dip. I just put on a June 18th modified MNQ put ratio spread. Buy the 27,000 and sell the 26,800 and the 26,600. Plenty of time and over 1,000 to make. Do you care to join? Man, that's a decent looking little trade right there. An MNQ, it's kind of like a staggered ratio spread, right? You got a little extra space there. What expiration? June 18? This is interesting. June 18, 50 days to go. Okay. Okay, so this is going to be pretty tight. I mean, just given how much time there is. Yeah, that's a lot of credit to be made. You're correct. We're picking up over 500 points. That's not a bad trade. And from a buying power standpoint, I mean, that's very, very reasonable for my account size. I mean, that's about a 7-ish% of the account, between 7 and 8%, I think. And so I really like this trade a lot. I think I am going to do this one. And again, this is not really something, so great trade there, Danish Dynamite. I like it a lot. I'm not worried about this one for 3 days. I mean, one way or another, I don't really think it's going to make that big of a difference. Of course, those are famous last words. But yeah, this is a 1 by 1 by 1, kind of like a 1 by 2, but instead of stacking on top of the same strike with the short option, we just spread them out a little bit, which gives us a slightly wider break-even point, to the downside. And so I kind of like this, actually. We'll pick up a little over 500 points, and it's a good-looking trade. And so thank you there, Danish Dynamite. Let's do it. I'll try 532. We'll see if we can get filled. No takers, which that sort of makes sense because MNQ, as we've learned, is quite craptacular from a liquidity standpoint. 529, can't get filled there either. All right. Let's try to get somebody to take us 525 maybe. Got to have somebody at 525. All right, we got filled at 525. So it wasn't that bad. And so, okay, so we got in MNQ. Thank you there, Danish Dynamite. That is some good stuff. Oh, Denu's in the house. What is going on there? Denu, thoughts on Starbucks? I gave you my thoughts on Starbucks. Thoughts on V. Wow, V has earnings tonight. Visa. I think I'm going to pass. Yeah, I'm going to pass on this just because of vacation and stuff. But I mean, obviously Visa. I mean, again, guys, just use common sense, right? I mean, Visa, I don't know how you could be anything other than mega, ultra bullish on Visa. That's pretty obvious. And by obvious, I mean, it's about 40, 60. Point B is in the house. Glad you're here. Can you shed light on the short puts that expire next year? Like the Google March 19th, 2027, 230 short put. Man, I don't know. That's a leap option. I don't do a ton of leaps there, Point B. And so I may not spend too much time on this guy. But yeah, you're going to what, June? You said June 2027, right? No, May 19th, 2027. May 19th. I don't even have it. You said May or March? Oh, March 19th. March 19th. You're selling a 230 short put. Yeah, so you're way out of the money. Yeah, I mean, this trade to me doesn't make a ton of sense because you're only collecting $5. The capital could be tied up for a while. And the decay, when you go really far out in time like that, it's just not really going to move. Like, you are going to get paid a little bit every day. I mean, you've got a little bit of positive theta, don't get me wrong. But this thing might go a month and only come down, 30, 40, 50 cents. And so that's not really a lot. So that's why we much prefer to be closer to around that 45-day marker when it comes to trade entry. So point B, I would probably pass on that from a leap standpoint. It's too far out for my liking. Patrick is in the house. What's going on there, Patrick? Oh, well, hold on. I see N1C. I don't want to skip over you. Oh, I see point B is Dr. Jim showing up in a pink shirt with his B- energy. No, I went with a bit of a shocker today with the one of the plaid shirts that's kind of in the back of the closet there. But every once in a while, we got to bring it out just to shock the muscle and kind of keep you guys on your toes. But Patrick says, Dr. J, are you aware of any study done by TT about the best ratio to use in ratio spreads? I find myself doing 1x2, 2x3, and even 3x5 sometimes. Well, so this one is tricky. I don't know that there's going to be a best because it really depends on what you want to accomplish, right? Like, remember, when you do a ratio spread, there's two pieces to that ratio spread. There's the bullish piece and put ratio spreads. Obviously, the same would apply to calls. It would just be all flipped over. But most of the time, it's put ratio spreads. I think that's what you said. You didn't say, but you didn't say. But I'm going to assume it's a put ratio spread. So if I do a 1x2, it's pretty balanced, right? I have the extra short put that's bullish. I have the long put vertical spread that's bearish. Those two are kind of balanced in terms of, competing forces. But if I do a 1x3, now I have a lot more bullishness on the strategy because I'm doubling up or tripling up, I guess you could say, on the extra short put. I guess I'm doubling up on the extra short put. So that's going to give it more of a bullish tint to it. But if I do a 2x3, now I'm doubling up on the long put vertical spread. So now I'm not going to collect as much credit because I'm using more of that credit to buy another vertical spread because I want to have more protection to the downside. And I want to have a faster move potentially to the downside if I get that move. And so, 3x5, I mean, you can go all the way down the line. You're just shifting the exposure between the bullish piece and the bearish piece. And so I don't know that you're going to find like a best or like an optimal or anything like that because it just depends on what you want to accomplish, like what you're trying to do with that spread specifically. And then the 1x2, that's going to be your Betty Crocker recipe. Like that's the tried and true where it's pretty balanced on both sides. And that's what I typically go with. But I also, I like a 1x3. I like a 2x3, a 3x5 from time to time. And so I'm not surprised that you find yourself using multiple iterations of the ratio spread because the flexibility and the versatility of a ratio spread is second to none, in my opinion. That is by far and away its biggest advantage. And so take advantage of that by kind of customizing it to what you want to do with your bias in that position, whether you want to be more bullish or more bearish or what have you. And so Sam L, what is going on? Doc, I'm in North Africa. I think I said South Africa the other day. But that was pretty close. But somehow you keep mapping me to the south of the continent. There you go. Classic fade Doc location. That's correct. That's correct. And I was pretty sure of it too. Not unlike my earnings plays. So you can just fade that too. You can fade anything from a geographical standpoint. That is for sure. Big Deal Donuts is here. What is up? Brian Dowdy is here. What is up? Hello, Dr. J. It hurts to see UNH just go up $100 per share after taking off the trade for that small loss. It always does, my friend. It always does. But don't forget, Brian, this is very important. The rear view mirror is batting 1,000, right? The rear view mirror is crystal clear. In the moment, we never know what's going to happen. And I'm sure you do this because I do this. I think every trader does this. We quickly forget the times when we actually made the right move, the times when we actually zigged when we should zig, and we zagged when we should zag, and we kind of got out of there more or less unscathed at the best possible time. We only kind of remember the times when we made a quote-unquote boneheaded move when we shouldn't have, but that's only because you know what has happened now. So the fact that you got out of UNH for a small loss, I mean, that thing was really giving you fits, man. Like that thing was a crazy trade for a number of months, if I remember correctly. And so I would just chalk that up as a W and just move on. But I know it's tough. It's obviously tough. When you kind of see something just rip in your favor there at the the last minute, or not even the last minute, but 8 seconds after you close the trade, of course. And so Sam L is here. Doc, happy water park vacation. No charts, just waves and maybe a little volatility in the lazy river. I'm telling you guys, man, the IVR on the lazy river, it ain't 10. It ain't 20. I mean, it's 65 minimum. Minimum 65. And it might even get bid up going into tomorrow. And so I will report back when we return. And so Big Deal Donuts, wonder how Dr. J's fence is. Man, I get so many comments on my fence. So many compliments on my fence. My fence it's never done better than what it's doing right now. My fence is phenomenal. The stain is on, the functionality is all there. I got a fence guy, man. If you guys happen to be down in Southwest Florida, you let me know. I got a fence guy. He, kind of takes his time. He prefers to be paid in bonefishes, but he's a good dude and he'll get you a good fence. And so Ashvin is in the house. What's going on there, Ashvin? Appreciate you, my friend, so very much. Joel James, Dr. Jim, thank you for all that you do, man. I appreciate you so much. It is my pleasure. And I mean, seeing you guys here in the chat, it really, really gives all of us so much purpose. And I feel so much responsibility with what I'm doing and what we all do. And it's really, really awesome. I feel very lucky to be able to do this every single day. And so Anta is in the house. Dr. Jim, this is the way. Yes, it is there, Anta. Give my best to Uncle Duh. And I appreciate you. BBB fine. Hey, Dr. Jim. What is going up there? What is going up or even going on there? BBB fine. Ron Bashar is here for the cesspool, a.k.a. the algo. Well done, my friend. I see what you've done there. Very nicely done. Bread Mud is in the house. What is up there, Bread Mud? RML, what's happening, Dr. J? Enjoy the vacay with the family. I appreciate you so much. Brian is here. What is up, Brian? Sebastian is here. What is up, Sebastian? Jared Kramer, I'm here for the algo and the solid B- humor and hopefully some insight to pay for my bonefish this weekend, man. I got you covered. I got you covered, and this is all that matters. That's all that matters. You got to make it real. You got to make it tangible. And the best ways to do that, as we know, are bonefish or banana natties. These are the two ways that you can turn this into real tangible stuff that you can get your grubby mitts on. And so there you go. So Ranch is in the house. What's going on there, Ranch? Ashfin, Jim, what do you think of a 38 days to go strangle in 6E? Man, we're doing Euro strangles now? Man, I don't know. Let's take a look. So Euro. Wow. 151. Hang on, I gotta rummage up my baby pips. It's been a minute. So 115.5, 120. You said 38 days to go? I mean, I don't know, man. Maybe. We do a 115.5 and a 120. I mean, we're picking up what, 45 pips? I guess that would be 45 pips. The buying power is only a couple $1,000s, right? So, I mean, the euro is it's been a minute since I've even thought about trading the euro, either directly or with options or what have you. But the buying power is really favorable because we're only putting up $2,000 and, it doesn't look like much on the trade bar, but you have to do the converter. And I think every point, every pip is what, $12.50, I think? I think it's $12.50. I think that's going to be your multiplier there. And so you take 45 pips times $12.50. That's going to bring you to this maximum profit. And, the pop is 71%. That's not too bad. It's pretty neutral. Got a lot of positive theta. Maximum loss is negative infinity. You would need the euro to print positive infinity. And I don't even think the administration can do that much damage in the next 38 days to cause the euro to print positive infinity. But you have to be aware, theoretically, it is possible. And so I like this trade a lot there, Ashfin. I really, really do. Let's do it. Let's do a little Euro strangle. Man, I haven't done a Euro strangle. It's been a long time. But let's do it, Ashfin. I like it a lot. All right, so we got filled for 45 pips on a Euro strangle. All right, so now we are international traders. Man, that's exciting stuff. Samuel Doc missing Uncle Jay with no purple tie in sight. That's a market risk. It's absolutely a market risk. I'm telling you guys, take the field. He's going to buck the trend. He's going to defect. If tomorrow is his last one, if it's not, then he's going purple. There's no question. But whenever my man is doing his final swan song, it's going to be non-purple. There's no way. He's a smart guy, man. He knows what he's doing. He's clever. He's crafty, right? He'll go non-purple, but he won't do it until the very end. And so if tomorrow's not the end, then he's definitely going to go purple. But just wait till that final one and we can fade. We can fade the purple tie. And so Edward Lond is here. What is up? Anta. 0.008 to 0.0085. Yeah, that's the number of questions I get to per show. So we have surprised and delighted to the upside today. And so thank you there, Anta. Robert P is here. What's up there, Robert P? Sebastian, long live the algo. Yeah, there you go. Adam Armfield, hey, Jim, I have some naked calls in the video. 780 days to go. I rolled the in-the-money call spreads up and out. And I just noticed I could sell 3 DTE puts against the buying power they use. Is this wise? I could always do longer. So you're going to sell puts against calls? I mean, that's fine. I mean, I don't really love that's a pretty extreme mismatch. You have a super long-term, if I'm reading that correctly, like a super long-term in the money call. on NVIDIA, which is going out like several years. And then you're going to sell like these weekly puts against it as kind of like you're legging into a strangle at that point. It's kind of like a covered put at that point. I'd have to think about that a little bit more. I don't love the mismatch timing wise, but I do like the idea. I like the idea of getting premium working for you on the other side of the market while you're waiting for the side that you've been affected on to come back to you. So I love the spirit and what you're trying to do. I'm not sure that that's the mode of transmission that I would choose to do that, but I got to go. I got to run. I got to get you guys over to Tim. Man, I appreciate you guys so much. I appreciate you guys. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultz3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay optimistic. We'll see you guys on Monday.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Good afternoon, everybody. Tim Knight here, and it is time to check out the charts of the financial markets, see what's going on out there. We've got kind of an interesting day on our hands for a couple of reasons. One, during yesterday's show, I pointed out that NVIDIA had broken to a new lifetime high, and it had escaped from a range that had been trapped in for like 9 months. And I just sort of off the cuff said, what should happen is that it just keeps flying higher because there's all this pent-up energy from that being trapped for 9 or 10 months that's going to get released because new highs tend to beget more new highs. Everyone's a winner, everybody's profitable, it feeds on itself, just like new lows tend to beget new lows, although to a lesser degree because you've always got a hard stop at zero. But I also said, hey, market gods, if you want to sink below back into that pattern again, that'd be pretty cool because that'd create a failed bullish breakout. We've sort of got that. If I was doing the show a few hours ago, I said we do have that because NVIDIA basically gave up its gains from yesterday and sank right back into the pattern. Now, over the past couple of hours, the market in general has fought back. NVIDIA is, once again, above that pattern. And we'll look at that in just a moment. But I wanted to set that up as like one kind of thing that's going on that I think is important. The other thing, which frankly is probably responsible for the first one, is that there's more and more chatter and concern about AI. And as I said yesterday, the entire AI thing, semiconductors, hyperscalers, Oracle, Meta, NVIDIA, Micron, AMD, and of course all the private, and CoreWeave, Blue Owl Capital, and all the private money behind all this as well. Should that unravel, the housing crisis of 2006, 2007 will be just like, nothing compared to this because they're so much bigger. And it is the one thing holding up the market. I'm not saying it's happening yet, but we sure are getting little hints here and there. The Wall Street Journal came out with an article yesterday evening, I think, which basically said, OpenAI is not hitting their monthly users numbers, and they are not hitting their internal revenue targets. Now, to be clear, 10% of the humans on Earth use ChatGPT, so it's not like, haha, what a failure. But they have $1.5 trillion committed to data centers in the coming years. You don't get that without having enormous amounts of revenue and or investment. And the fact that both users and revenue numbers were looking kind of squishy for a company that desperately needs tons and tons of money to stay in business kind of put a chill through some spines. Now, we're down 0.5% right now, so it's not like, all hell's breaking loose. But take note, little hints are going on here and there. From a selfish perspective, I'd love for OpenAI to thrive. I'd love OpenAI to be the biggest company on the planet. I don't have an axe to grind, quite the opposite. All of my interest is in their success. But as a chartist, as your chartist, and as an observer of financial history, there's cause for concern here. It's kind of a big deal. Okay, let's jump into the charts together. And we'll begin with the cubes, which are weirdly down. They're down almost 1%. They're still above their breakout level, but they've basically thrown away the gains from Monday and the gains from Friday. We're hanging out down here again. Incidentally, let me correct myself. I'd said, all the earnings coming up. Tuesday is Alphabet and Wednesday is these. That's not true. It's kind of a boring day today, actually. Tomorrow is the juggernaut. Almost everything reports tomorrow, which is going to be Microsoft, Amazon, Google, and Meta. Wow. You will not be bored tomorrow afternoon. And the Thursday, there's Apple, which frankly has become kind of boring. Today, nothing really. Seagate, I'll be watching that. It's kind of interesting. But yeah, tomorrow, Wednesday afternoon, plus the Fed, so get your espressos ready. It's going to be a crazy day. So there's the cubes, basically unwinding some of those recent gains. EFA, which we've been looking at regularly, is down again. It just keeps slipping. It's down about not quite 0.5% today. Nothing dramatic, but it's behaving itself. Some charts have not behaved themselves. This one is doing well. But yeah, like I said, just to go back to that whole hyperscaler thing, Oracle is a good example. Oracle has lost almost half its value from its peak. That was that insane day when, and talk about hopium, this entire lift was predicated on nothing but, wow, we sure are going to sell a lot of compute to OpenAI. How about that? And people went berserk. Oh, and by the way, our earnings suck. I mean, it was the simultaneous, but it was the press release that got people fantasizing about the future. Things are going to be so great when, fill in the blank. This is psychology of tomorrow. And the hard data was just like, we're not doing so good. But that was the lifetime high for Oracle, that press release. And it has been grinding lower ever since, having lost hundreds of billions of dollars of value for shareholders. And it ain't doing much better today. It had kind of a leftover a few days here, but it's starting to unwind that too. So today alone, it's down about 3.75% because if the hyperscaling thing flops, Oracle could get destroyed. Larry Ellison's wealth could get destroyed. It could be bad, depending on how you feel. But yeah, pretty big deal. CoreWeave, against which I own, I'm short by way of puts. It's not a great pattern. It's broadly speaking executed a series of lower highs, but it's not some sensational setup. But a lot of my rationale for this is just based upon what I'm reading. And it's worked out pretty good so far. The puts are profitable, and I've got months and months of time left on them. So down about almost 5% today on the equity, and the puts are doing just dandy. But let's focus on NVIDIA for a sec, because I made a bit of a stink about this yesterday and was intrigued by how rapidly it unwound that. Zooming in here, this was yesterday. So it opened within the pattern. And pattern's a generous term, it's just a rectangle, but it is a range we've been in. So yesterday opened within the pattern and went shooting higher and basically closed at the high. A high for the day, lifetime high. It opened yesterday even lower than it opened today lower than it opened yesterday, and it's been pushing higher. So it's another green bar, but we're still down 1.3% because we've shaved off a portion, like 40% of yesterday's gain. So it's not that big a deal. It'd be more interesting if we were grinding around down within the pattern. But the fact that there wasn't any follow through is worth noting. And I'll just say again, if we do slip back into that rectangle, that's not a good look, because it's like the old saw about if something goes down when it's supposed to go up, sell it. That would be very much a, hey, this is supposed to go up kind of thing, because you've got a company with tremendous positivity around it. No matter what folks say about AI companies and their inability to make a profit, nobody's saying that about NVIDIA. They are making cash by the truckloads because they're the proverbial selling shovels to the miners. They're doing just great. Tons of revenue, tons of profit. Hence, $5 trillion plus valuation. But keep an eye on that. If we slip into that rectangle, it is a big deal, and one that approximately nobody's going to notice. So just saying. And with all this going on, SMH finally has found some weakness. We got a little teeny weeny bit of weakness yesterday, and we're getting some more weeniness today. We have thrown off the past couple of trading days worth of gains, and we're basically trading now about where we were trading on Thursday. As I've mentioned, I've got puts against this, and they're doing okay. But yeah, this is slipping down about 2 3/4%. But if this whole hyperscaling concern starts to get legs, look out, because you're going to see Micron and AMD and all the high-speed networking companies. You're going to see a lot of diminishment in value because these are sky high. AMD opened quite weak today. It actually sealed its gap beautifully. So if this is nothing but a hiccup, that was a great entry place because it tagged the gap and did not pierce it. So it's been pushing back against that. But there's AMD, which had this explosive move, which ended on Friday so far. And then Micron, MU. Not much to say here. It's down also about 3.5%. These concerns are universal. They're spread out amongst all the relevant parties because the number of public companies that are directly related to hyperscaling is no more than 20, and probably like 7 important ones. So it's a pretty small universe. Let's yell at me about getting rid of my miner short again, shall we? I'd gone bearish on precious metals. Absolutely the right call. They just keep sinking. And they ain't done sinking, I don't think. I think they've got plenty to go. Silver, down over 3% today. Gold, down almost 2%, following that island reversal pattern that you see right there. And my miners short that I covered, that continues to sink. The miners GDX down 4.16% today alone. I actually, if memory serves, I shorted them like on a perfect day right there below that gap. And down it went. I covered somewhere around here, and it continues to fall. And I do not think it's done. So as weird as that may seem, with ostensibly a war going on, and of course Dust is doing great. Dust is up strongly, up over 8%. Dust had fallen. This is the leveraged bearish fund against miners. This had fallen, didn't quite close its gap. The gap has remained, and then whoosh, up we go. So that's doing well. As far as some shorts go, I've got a lot of shorts cooking right now. I've got 37 different short positions. 7 are in options, and 30 are in just straight equity shorts. Here's a few. Good old AST, Space Mobile, doing great. ASTS down about 7.5%. Carvana just got into this yesterday, down a little bit, not quite 0.4% there. Robinhood, HOOD, is down 2%. Sienna, this was also a new one for me as of yesterday. This is down over 7%. Rigetti, also new yesterday, down a little bit, about 3.2% on RGTI. So yeah, I've got just a whole boulabos of positions, and pretty much all of them are down. There's a couple of fussy ones. IBM, I'm sure they're up today about 2.25%. There's nothing else really troublesome going on out there. On the whole, they are down, so that's good. As I said, I'd mistakenly said yesterday that Alphabet was reporting tonight. I don't think that's true, but Seagate is, and that's kind of the only cool, interesting tech company that's going to be reporting. And it's particularly interesting because this thing has been on a tear. Ever since a year ago, it is up hundreds and hundreds and hundreds of percent. And they sell storage. I don't know if they sell hard drives anymore, I assume so, but memory and so forth. So they are definitely part of that hyperscaling world, and it'll be worth keeping an eye on what STX does after the close today, because they are richly valued. So here's the NQ. We are down today almost 1%, about 250 points or so. As with NVIDIA, it's going to take piercing back into that rectangle to get things kind of interesting again. That would take some doing. And finally, kind of what I call my North Star these days, my really anchor position of mine is my Bitcoin short. I am short by way of being short IBIT, which is off today almost 1%. That's a cute little pattern. I'm also in a different account, long BITI, which is the bearish Bitcoin fund. And that's up, as you might guess, about 1%. Here it also fell toward the gap, but it's starting to strengthen. And broadly speaking, the real McCoy here is the Bitcoin futures. It got quite close to its own price gap during Sunday/Monday trading, but it did not seal it, did not pierce it. And now we're starting to slip away some, and I'd like to see a lot more slippage. If this goes the way I think it's going to go, if this goes the way I hope it's going to go, I think we've got tens of thousands ahead of us. We shall, as always, see. All right, well, I'll see you tomorrow, and then we can brace ourselves for we'll be sandwiched in between Jerome Powell's last press conference and a quartet of huge earnings events. So I'll see you then. Bye-bye.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, my friend, we are back bringing in the closing bell here for Liz and Jenny, who are ringing the bell at the CBOE today, this afternoon. They are honorary members to ring the bell. So sorry to everybody out there. You got to get the second tier crew here, but we're ready to take the helm. E-mini S&P 500 futures down 37. Been a relatively quiet day, I would say. NASDAQ down 254, about 1% here. The Dow down 100 and the Russell down 38. The Russell the weakest of the group here. Oil quietly staying at 100 all day today, up $3.61. We're at 99.98. Volatility futures at 20 on the dot. They're actually lower on the day. They're down a nickel here. Bonds down 6 ticks. We got as low as 113.02. Gold has bounced a little bit here, only down 84 on the session. It was down as much as like 120, 140-ish. Silver down $1.85 and Bitcoin off the highs here. What do you make of today?
It feels like a small pullback within the broader trend. Oil obviously going to 100 is spooking a few people, scaring the kids in bonds and metals. But I'm looking at the S&P 500 right now. And I've been beating the drum for the past 2 weeks until this thing gives us a close below its 1 week moving average. Then the uptrend remains intact. That number today is 71.67. The S&P 500 is currently trading at 71.67. So it's going to be a fun close. Will bulls hang on to it? I mean, that to me is what matters. Will we retain the bullish posture heading into tomorrow's earnings, which are probably going to be good, given everything we've seen so far?
Yeah, it was funny because we were talking about it even early in the morning, and when we were talking about for what's your assumption this morning, you had markets down, volatility basically unchanged despite oil, the move in oil volatility itself. I was talking about this with our very own Mr. Margin Island, the mayor of Margin Island, Mr. Klink. Oil volatility has come in about 3.5%, OVX at 70 and change. Still high, no doubt, but it seems like the moves today were just like kind of a mad day. You have no fear with volatility unchanged here at the lows. The VIX itself, 1812. I think it's had about a full point range here in the VIX. The VIX got as high as 1943. It just seems, to your point, like this is just, a temporary pause, another just kind of little tiny dip until the festivities that we have tomorrow with J-Pow, with earnings, all those things it seems like those are more in focus than whatever is happening right now.
It's got to be. I mean, the fact that the VIX is sitting at 18.10, that's it. You look at the pullback in the market and you see vol is not going anywhere and volumes are still pretty light. That doesn't scream top. Who wants to be the hero and say that Amazon, which is sitting near an all-time high, or Meta or Microsoft, which have had substantial rebounds, or Alphabet, which is it's freaking Google, people. You're going to tell us that you're going to stand in front of the train of those potential earning releases? I mean, sure, some of it's probably been priced in over the past few weeks, but you're really going to try to jump in when we have those giants do? This just looks like paper shuffling. It's window dressing.
To that point, there are a couple earnings I'll get to after the close today. We are starting with a couple big names today. But to that point, how are you looking at the Mag 7 earnings that we have coming up tomorrow and then Apple on Thursday? Are you looking at those like, maybe some of the upside is already baked in and it might be a muted upside? Like if you're going to be I look at them and I'm sitting there thinking, I don't know if it's going to be like a good day to just be YOLOing calls. I feel like, maybe you get some upside, but I feel like we've priced in some of the upside. Like, do you see any tail risk on either side for these names in general?
Yeah, I mean, if it definitely feels like the pendulum has swung, where because of sentiment now and everyone getting so bowled up in such short order. I mean, especially look at the investing surveys for longer term investors, the AAI bull bear spread, which, Helene Meisler has taken issue with it here on Trading Trends, as we have up on our YouTube page.
Yeah.
But just as a point of reference that I'm using here, anytime you see a net swing of 20 points in either direction over a 3-month span typically indicates a turn. We just saw a net change of 20 points week over week from bears to bulls. So folks have gotten here very quickly. The downside is that despite all the hype, you don't meet the moment. You see that, maybe capital expenditures are too high or they're not enough, so you're not able to monetize demand and it's going to go to competitors. It really feels like you need to hit the Goldilocks number right now, but more so for a Microsoft than a company like Google, because Microsoft has this whole Oracle OpenAI nonsense to contend with, whereas Google's just plowing back its own money into its products. So personally, Microsoft holds up. That's probably the base for okay, the rally can keep going. But if Microsoft has the floor falling out of it, I think about that OpenAI article today, Nick, and
it felt so perfectly timed. I mean,
perfectly timed.
I'm no
Yes, you are.
It felt perfectly timed. I don't know. I look at it from a sentiment perspective, and I think today wasn't the last of it. In the near future, I think you're going to have this whippy two-sided action, but it felt like it took a little bit of the wind out of the sails here in the short term, which I think is good, which is what I wanted to see into the Mag 7 earnings. I wanted to see higher vol, lower prices on the market as a whole, pump a little bit of fear. I was not expecting a Wall Street Journal article of regurgitated information that's seems to cycle back every 6 months. I didn't think that was the catalyst, but I felt like it was just kind of a market catalyst. If we got a little bit lower prices, volatility higher, then I would be bulled up, super bold into earnings, when nobody wants to buy them or everybody's bag holding back to even. That's what I like. I don't know. We're kind of just back to highs here. 30 points off the highs.
It's why are they talking about bombing Iran into oblivion on a Friday? It's so they can buy them back on Mondays. Why is this article coming out today before the earnings? Although, Nick, the last two big headlines, DeepSeek last week on Friday with their new open source model, and then OpenAI today. I'm trying to think, if this was October or November of last year, and we got a report that OpenAI was falling short of its revenue targets and its user growth targets. And if we got right, or it was last January when DeepSeek came out, we had DeepSeek Monday. The market is, it's not getting hurt the way that it used to around these type of events. So in terms of stability and durability here, just as a waypoint, the market is not nearly as negative as one might think had these headlines come out a few weeks back.
I will give you that. That is for sure. And a lot of the stocks that were hit earlier this morning, Oracle has been and continues to be weak today, but it got as low as 162. It's about $4 or $5 from there. Microsoft is actually in the green right now, 429 and change at the highs of the session. A lot of the high flying memory stocks, I was looking at SanDisk, we were laughing that it was down at 980. It's back, up a $30, $40 from here. Micron as well, kind of bouncing right back very, very quickly. I kind of wanted to see a little bit of a close on near the lower end on these sort of names to feel a little bit more comfortable. It surprises me that the bid is still there relentlessly.
You're gonna tell your clients that in the quarter where earnings growth is closer to 15% upon the estimate of 12% entering the quarter, that you were shorting tech stocks in front of their earnings? What's the incentive structure here to be short in the market right now, given how the market's behaved?
When everybody's thinking the same, that's usually the problem time. Usually when something happens.
Listen, it wouldn't kill me to get a little bit of a pullback here. I mean, you see the usual suspects at the top of the board today. Intel had a pretty significant move off the lows here. I know it's still down by 1.2%, but it opened up at $81. It's back to near 84. Which is not nothing. And then Micron has seen a lot of activity on the options tape recently. Jamal and I have covered this on signal versus noise, but even today, some very large option, some sweeps going through. People are continuing to look out to 550, 600, 625 strikes 3-4 weeks out. We're not even talking about someone buying like $600 calls expiring December 31st. We're talking about $600 calls, $10 million of premium laid out. Look like a May 15th expiry. So there's still some chase here in this market. Folks are not shy about thinking that the AI story still has a good deal of room to run. Nick, does the oil move bother you today, though, in context of all this? Oil at 100. Wheat prices are up 5% today because apparently we're not growing enough of it in the country.
I missed that one. I didn't get that move. That's quite the bar there. I need some of that.
It's one of my early war trades that didn't work out for a bit, and now all of a sudden it's working out nicely.
Of course. I mean, the oil move, it's pretty interesting to see us at 100 and seemingly it just completely not mattering. I mean, I think we've seen highs in both volatility and price for oil. So, and I think the market reflects that. And I think the bounce that we just had reflected the idea that, oil is high, inflation's high. It's not like through the roof and worse than the positives of the AI movement and the spending and all the stuff that's going to go with there. I totally agree with you on that. I think that's been even more apparent. Oil has been an incredible trading vehicle. So that's my perspective on it. I don't like the price at the gas pump, but trading USO and crude oil options and MCL for static delta, even if you want to go to like an XOM or a CVX, I mean, the two-sided trade that you're getting in some of these stocks, XOM, up $2 and change, was up like $4 or $5 earlier in the session. But, this is where there's some heightened volatility. And so I've been trading it. I don't have an opinion on it other than I guess I do have an opinion. I think the highs in oil are in just based on what you're seeing with volatility and price right now.
I would be surprised if we got another spike higher, but I'm definitely leaning against a sustained move to the upside. There's a great chart. Why didn't I bring it on for the show? But it's a distribution of where oil prices have settled on a weekly basis over the past 30 years. And you get these two very clear peaks, right? Most of the time, oil is going to cluster in the 70s, high 60s, 70s, or it's going to cluster for a bit up near 100. And when you get up past 100, you see that you don't spend much time historically over $100 a barrel because then you're in the the demand destruction zone. Oil prices are too high. And then when you get below 60, 50 for a while, you enter the supply destruction zone. There's no incentive to actually drill for it. So it's an Ouroboros. It's a snake eating its own tail. If you get a spike higher in oil, 110, 120, 130, it is absolutely looking further enough out, provided the volatility structure, to say, I'm going to sell upside here. I've been sitting through it for several weeks, but when we had those big spikes where oil IVR was constantly ticking past 100 day after day, I was able to go out there and sell 148, 150 call spread. And with still some time left on the board, we're now in a situation where it doesn't look like that's realistically going to get hit. I mean, $50 higher, Nick. So if we can get that type of outcome where if you get a spike in not maybe CLM6, but CLN6, for example, what are the odds that we're going to see 120, 130 oil there? So I do think we need to be fading the extremes either way. There's a floor underneath it. It's probably a ceiling above it.
Yeah, there's still pricing. I mean, if you look at the end contract, the 120 calls are a 22 delta. I mean, a 50-50 shot, essentially, of touching that strike at some point over the next 49 days. The volatility is still in there. It's not like volatility is still low. I think we've seen peak volatility there. If we got up to 120, maybe we would see a higher vol, but I don't think we're getting to the 120, 130 range volatility-wise like we had on that one Sunday afternoon. To your point, I think we've kind of got our oil highs here. It's not a story anymore. It doesn't matter.
No, CL's not the story anymore. I mean, I'm paying more. You can see on the platform, there's no listed options for gasoline futures, but gas futures are at their highs of the year right now. And one of the wrinkles of the war has been the fact that in order to help fill the supply gap, because the Gulf is closed, so you have to come over to this Gulf, Mexico, America, depending upon the cut of your jib. That means we're draining our domestic refined fuel inventory, jet fuel, gasoline, in order to fill the gap. So yes, oil prices are range bound right now. The M6 contract hasn't seen a new high in several weeks, and yet gas futures are still pointing higher. So Nick, do you like $450 a gallon?
No, I hate it.
Oh, well, too bad. It's coming.
Yeah. 450, that would be cheap what I got around the corner from here. I'll take 450, brother. Yeah. Yeah. We're at
459. We're at 459 here.
450. Yeah. 459 means like $5 here. Sounds perfect. Brutal.
Gonna keep going higher.
It's okay. We do have a couple names that have earnings after the close today. A couple interesting, couple very tradable here. Robinhood, probably the main one on my list. I have, I'm pretty neutral here. I'm long some stock and short some premium around it. It reports 5 minutes after the close. You have Bloom Energy, a stock that has just gone parabolic. I have some short delta there. 20 minutes after the close is when it reports. You have Seagate, talk about some of the memory stocks. If you remember on Micron earnings, Micron had kind of super high volatility into the earnings, had a little bit of a pullback into that. We'll see if that happens with Seagate, which reports after the close, say 5 minutes there. You have Visa, Teradyne is in there, another one in the AI space that's had just a parabolic move. Tomorrow morning, you have some of the healthcare names like Humana is in there. You have SoFi in the financials there. I have some long delta as well. You have Regeneron, Car, couple names going into tomorrow. I got a handful of positions there. But if you have some trade ideas into tomorrow too, so tomorrow is what's your assumption? Assume the position Wednesday. tastylive.com/assumptions. You can give us what you're thinking here for earnings, for non-earnings, market in general, anything you want us to pump your bags, put it in there. Anything, we'll take it.
Yeah, my bag right now is a crude oil short call spread. How can we pump that, Nick?
You'll be okay. You'll get some two-side action. I mean, as we speak, you have volatility, VIX vol futures at 1985, the low of the session.
What do you do, Nicholas? What do you do? Do you short vol at the session lows heading into tomorrow's earnings? At the end of the day, right now, the market's still holding up. Vol's low, volumes are low, and you have an S&P 500 with 10 minutes left that's going to close above its 1 week average if it were to close here. The uptrend isn't dead. You can't short the market going into tomorrow's Fed meeting, which, Nick, by the way, how much are you going to miss Powell?
I'm going to miss him. I feel like I've grown up with him. Like he's like a brother, like a big brother. He's guided me through a fantastic 5 years of trading.
Not for nothing, Powell's overseen the longest stretch of sub 5% unemployment for any Fed chair in history. And stock markets are closing at all-time highs. I think we're going to look back fondly on him, unless, of course, he's an Arthur Burns type character who is leaving right before the second wave of inflation hits, which, the 1970s charts are a lot of fun. Nick, I'm just looking at tomorrow's Fed meeting, and I can't imagine a world, maybe this is why it's going to be something, but I can't imagine a world where it provides anything material like the one we had last month. The one we had last month, of course, produced a new summary of economic projections in the midst of the war. And so the Fed had to take a step back and say, that cut we were talking about, we're probably not going to give it to you. And that led to another wave of selling. But we know that now. The Fed's already changed their stance. And this isn't even the Fed that's going to exist in a few weeks' time. Powell may not be the chair anymore if the nomination process speeds along up until May 15th. So what can the Fed tell us tomorrow that is actually materially important to the decisions that they make in the future? Powell might not be a part of it. So tomorrow may be the quietest Fed meeting that we've seen since COVID.
I can't think that it matters at all. I mean, it's all, and you see it in the volatility of some of these products. Like you look at a Microsoft front implied volatility nearly 100%. Even in the 17-day, you got about 50% implied volatility. Amazon, in a similar fashion, I mean, you got 100%, 70%, 50 in the middle of the week here. Apple is kind of the one that doesn't have as high volatility, but still has high volatility. Google, too, is a little bit lesser volatility, but you can see the vol is priced into these earnings. Like that's where the market's going to make a decision. I think the Powell situation and rate situation, we talked about it with Glenn this morning. I mean, there's no cuts projected anywhere in the near future. And there's really no hikes either. So it tells you that, that the rate situation and the way the bonds have moved from 113 to 114 basically day to day, that's kind of been the range. Doesn't seem like there's news there.
The vol in Microsoft to me is the most interesting aspect. I'm just, it's not an options trade per se. You can go out to 51 days, but you know what? Let's go to 3 days here. The 390, 385. You can go up to 470, 475, 470, 390. I mean, Nick, 390 is going to be a pretty substantial loss in Microsoft. It's going to be back down through the lows that we had prior to April 14th or April 15th.
Well,
there are vol trades to be done here.
Yeah, I think you see it, what everybody's thinking. If it's not like, I look at a Google and I think, okay, maybe Google goes up $5 after earnings. I don't think it's a blow off, move for Google where Google goes up $30, $40 into new highs, just blast off there. Microsoft, it could come out and be like, oh yeah, everything's good. We're gonna, kind of dull the OpenAI influence and, reliance. And that stock could be at new highs in a couple months, the way this thing is moving, the way this market is moving. I think the way the volatility is in a Microsoft is telling you, yeah, maybe there's 10, 15 points of downside, but there's 50 of upside. When you look at Google, I don't feel that same way. I don't look at the Google options and say, would I rather buy the, 20 delta put at, 332.5 or buy the 20 delta call at 372.5? I'd rather take the downside because the 10% downside move puts you, in no man's land in the middle of where that stock's been trading. I think the market is kind of pricing that asymmetry of like, maybe there's a little bit more room to breathe on the upside in a Microsoft or Meta. And thus why volatility is a little bit higher.
I think that's well stated. What would be the most surprising outcome for the end of this week? I know that typically means, all my positions are underwater because the market clearly turned out different than I anticipated.
Yeah.
But would it be more surprising for you to look at the end of this week and see 7150, 7200 ES where we currently are right now, or let's call it 73 versus 7,000? I mean, do you think that we're going to get that move? Or if we can't get upside acceleration, perhaps over the next few days, would that be a sign that this market is running out of steam? I did see today that Goldman Sachs estimate for CTA buying is effectively nil now. We no longer have that $40 billion, $70 billion tailwind that drove us higher through April, perhaps. The buying's been done, Nick.
Yeah. I think the most bullish thing that could happen, which has happened over the last week or so, is, you have this kind of flip-floppy market. After the earnings, we go basically sideways. You vaporize volatility on both sides of the market, and you chop for a week. I think the worst case scenario, I think, is a face ripper to the upside, because then I think it's a sell the news event into next week. And I think if you get a little bit of a downside move, it's probably a point to nimble on some longs. I think the worst thing that could happen is to have some, crazy move to the upside through the end of this week, 5%, 3, 5, 4, something like that. A big move to the upside. You're looking at 7,400, 7,500, and you have everybody rush in to buy them, because I think that's not, I don't think that's good. That's what I'm scared of. I would be scared of. And vol, I think, would stay bid into that sort of move.
Yeah, I think that's right. I'm trying to wrap my head around, what's the best possible outcome for bulls longer term. I think, trading sideways here.
Yeah.
Valuations have started to catch up. They're not there yet. I've been on this beat for a little while here, but like the Mag 7 PE ratio right now is 26.8 as of as of today. It peaked at 32 back in 2025. It peaked just above 32 in 2024. Guess where it peaked in 2023, Nick? Right near 32. So there is still room for this thing to run. There's room for it to run in the large caps. Right now, the large cap PE ratio, forward PE, is 20.8. That peaked near 23 last year. It peaked near 22 in 2024. So if this market wants an excuse to run, you say that people say it's a bubble. Yeah, maybe semis with their 60 times PE right now. It's gotten expensive pretty quickly because of the action over the past 3 or 4 weeks. But the rest of the market right now, if there's an excuse for this thing to continue to go up, small pullback, sideways hustle, and ultimately rotation away from mega cap tech into more domestic equities, the Russell, give us a bump in QQEW, hell. That would be great longer term. And then we're going to ignore the seasonals here, but we can go back to our mindset of just buy through July when volumes are low and volatility is in the tank.
We need to make tasty shirts, buy through July.
Yeah. Sell through May. Now I'm seeing people saying, oh, sell through May isn't a good idea. I know, we know. We've been telling you. But if it's those people who are telling you to sell in May before, don't trust them.
As we go into the close here, we got 2 minutes into the close. You got E-minis above the, what is it, the 1 week moving average? Which, 1 week at 71.67.
Beautiful.
Okay, we're going to be looking at that into the close. 71.67. We're at 71.72 here, down 34. You got the NASDAQ down 265, the Dow down 40. It's been the strongest of the group throughout the day today, and the Russell down 32. They're also been the weakest of the group. Oil here hovering at 99.90. I think the biggest story of the day is this move in volatility. You got volatility below 20. I think it's the first time we've seen in quite some time here at 1970, down 35 ticks, about 1.5%. Just an incredible move there over the last couple sessions. Bonds basically unchanged. They're actually rallying here into the close. 113.19. We got as low as 113.02. So you're getting a little bit of a bid in the bonds. I think that's probably what you're seeing with the volatility, with the contraction volatility and the bid in the market here in the last 30 minutes or so. Gold down to 85 at 4,600. You got silver down at $1.96, 73.60. Bitcoin kind of doing its own thing over the last couple sessions here, but has been relatively strong. Final thoughts into tomorrow. You think anything derails, or you think anything matters into the morning? If you had to guess, you think we have just a nothing 10-point, 20-point move through the entire session tomorrow into FOMC? I think that's what we're due for.
Part of me wants to say, no, of course not, Nick. You should tune in tomorrow morning at 8 a.m. 7 Central when Tasty Live programming continues.
Well, we're still going to be here.
We are, but the realistic thing is that tomorrow, for even zero DTE people, right? You probably have positions out that you put on today. You're not going to make many moves tomorrow morning. You're going to keep your powder dry. So if you don't tune in tomorrow until the Fed meeting, or quite frankly, until the close, until last call tomorrow, I don't blame you. But I'm not allowed to say that on air.
I tried to get a 1 day till expiration SPX on. I couldn't get filled on it, unfortunately. So we'll have to save that tomorrow. tastylive.com/assumption. Give us your trade ideas for tomorrow. We'll take those at 8:40 Central. Mr. Vecchio, thank you for joining me. I'm going to get out of here, let you take over. You've got overtime next with Ilya. Stay tuned for that. We'll see you in the morning. Peace. All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at Tasty Live, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Your pre-FOMC drift, your pre-earnings drift, and that's all there is to it. It's Tuesday, April 28th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Dalio Spivak in San Francisco. We're here to take you through the next 27 minutes or so as we wind down the trading day. Another uneventful trading day-ish, so to speak, kind of like yesterday, where volumes are for the most part lower. We do have an S&P 500 that comes in, but it's coming in with just what we'll call it, I think it's 1.3 million contracts traded. Not exactly a huge day. It's a day where you get a little bit of a pullback, and you still can't close below your 1 week moving average, 71.67, a level that we have closed above every single session since March 31st. It's the same thing in the NASDAQ, which is your loss leader or one of the loss leaders to the downside, just over 1.05% lower, but it too holds above its 1 week. The Russell is the worst performer, down 1.15%, and there's a little bit more damage piling up here. Maybe it's a double tap overnight, not just news that oil prices are continuing to move up, and we do have CLM6, front month crude contract, approaching $100 a barrel again, as really across the curve. We're starting to see the N6, the U6 contracts for the next few expiries. They're getting pulled up too. Supply tightness remains. Supply tightness that's in focus as inflation concerns and supply concerns start to spread over into soft ag futures again, which is a knock-on effect of the war we've been worried about, Ilya. Yeah. I digress, though. We have our stock market turning sideways ahead of all of the earnings tomorrow, ahead of the Fed meeting tomorrow, ahead of any potential Iran news tomorrow. It feels like it's a day of window dressing and people just simply operating between 9:30 a.m. Eastern and 4 Eastern to get some stuff done, but no real progress. Ilya, tomorrow could also be Fed Chair Powell's last Fed meeting. As chair, I have zero expectation for tomorrow to produce anything significant whatsoever from the Fed, simply because the market doesn't know to take Powell's word that he's going to be chair moving forward. Do you think tomorrow's meeting matters for the market at all, or should we just skip right ahead and get to talking about the earnings?
I think it matters very much, actually. And I don't think that it matters for the reasons that you might kind of read out of the first page of a textbook on monetary economics. I don't think it's going to matter for the substance of what is done policy-wise, because there won't be anything done, almost certainly. The real question, I think, is going to come vis-a-vis the guidance, because we find ourselves with this war at stalemate, basically in the same mindset that we had when we were really going into this year, which is to say the markets have many risks. There's the on, off, push, pull in AI. We, of course, have a very loud hype cycle and now some signs of wear and tear. We're seeing 10, 11 states are mulling bans on new data center construction. We see that the trade wars and the disruptions in energy are making an already complicated story about sourcing enough GPUs, enough CPUs, enough memory chips, already making that situation worse, and those shortages were already there. OpenAI didn't shut down Sora because Sora wasn't working, the video generation engine. It shut it down because it was taking too many resources, and they felt like they could deploy those resources elsewhere. So we're looking at an AI story that's starting to creak a little under its own weight. We're likewise obviously looking at the geopolitics. We're looking at the tariffs. We're looking at all kinds of other policy chaos, from the shutdowns to the non-existent tax policy. And we're seeing the markets juggling these balls really since the beginning of last year, generously. It's probably earlier. And all they've asked for consistently, won't you give us some cheap money so that if we get one of these things wrong, we can reload and go again? We're basically back there. And all we're going to hear from the Fed is going to be no.
Quick sidebar here. 3 earnings numbers are out. Visa, Starbucks, and Bookings.com. Bookings, they posted a Q1 revenue number, and let's go back to that there. $5.5 billion, which missed the consensus estimate of $5.51 billion, even though adjusted EPS surpassed the estimate at 1.14 versus 1.08. You can see here, if you're missing revs and you are a consumer-facing company, and guess what? Bookings is about travel. Look at the jet fuel prices. How are they going to keep holding up moving forward? But you know what? American consumers, we just spend through it because we can't give up our coffee. I certainly can't. Their earnings are up at 50 cents versus 43 expected. Revs came in at 9.5 versus 9.14. Comp sales are up 6.2% versus an estimate of 3.65 shares, 97 up to 104 here after hours. Visa, similar story, EPS 331 versus 310 expected. We're pushing through it. We saw it in the retail sales figures last month, Ilya. Yes, gas prices are up. Who gives a shit? We have to go buy our cigarettes and lotto tickets still. So, Robinhood, though, is the one that I think people need to be keeping an eye on here. We've talked about a retreat for what it's worth in, the speculative impulse in markets recently, how when you look at OCC data, you see that folks are moving away from single stock trading, and the data that comes from firms like JP Morgan and Citadel, publicly reported information that you could see on Reuters, that the single stock trading has moved from about 14% of total volume down to about 8%. And then in terms of the zero DTEs, we had seen this dip from where it was 30 or 35% of market-wide volume in SPY, dropping down to about 20% here. Robinhood right now, 38 cents versus 39 cents estimated. Revs were 1.07 billion versus 1.14 billion. And so Hood down from near 83-ish prior to earnings now to 77 or so. It's a mixed picture for the consumer and for what people are doing. At the end of the day, Ilya, you and I are not going to go to Europe on vacation, but we're not giving up our morning coffee. And we have lifestyles
or
to
our
maintain.
trading accounts, for that matter.
Well, and we have lifestyles to maintain and whatnot. So, I mean, there's an interesting story to be told here. If you've been playing these moves, it looks like it wasn't necessarily an inside type of move for any of the 3-4 that we've mentioned here. But it does show you that the market is sorting itself out by winners and losers, and anything related to potential speculative flows, anything related to travel, there are knock-on effects from the war that you can read through in some of these earnings figures.
Sure. And I think when you look at the broader picture, this is why the Fed is going to matter. Because the markets are going to look at all these things and they're going to go, well, listen, our situation has not become any easier. If we wanted rate cut as insurance last year, we only want that more now. And what the Fed is going to have to do here is thread a very delicate needle here. Because it's not like anybody doesn't understand that they can't promise rate cuts. Nobody's dumb. Everybody looks at the same thing and looks at what the Fed funds futures have done, looks at what has happened in bonds. Obviously, stocks are behaving as though the war is over and its consequences don't matter, but they're all by themselves.
One more Seagate Technology here again. We're going over into the chip space again. We're going into AI. $4.10 actual EPS versus an estimated $3.50. So that's 115.8% year over year. It's a beat by 17%. The actual revenue is $3.11 billion versus an estimated $2.96 billion. So that's a beat of 5% on their revenues. That's an increase of 44% year over year, Ilya.
Guidance here is going to be really important.
Text, Ilya, you were getting these reports after hours. Stocks are bouncing up a little bit. 71.67 is the number that I've had in the sand here today, just for that 1 week moving average that we've been watching since the end of March. And we're holding above it right now. What's the incentive structure for someone today after hours, tomorrow morning, to lay out a significant short in a market when we have these major tech earnings coming out? Why not just wait until Thursday?
It's not good. The incentive is not strong. I think
being a hero.
I mean, you're asking for it. You're asking for it. If you want to think about something like, let's say, selling puts in something, or selling calls rather in something as your bearish exposure, Russell might give you something there. I was able to roll my exposure. I actually had some expiring put verticals, and I re-upped on bearish exposure, but not in the same way. So rather than buying a put vertical, I sold a call vertical instead. And that gave you better than 1-to-1 risk reward, which for a short premium position is very attractive. So, I mean, worst case scenario here, you do okay. And 51 days out, so plenty of duration. If you wanted to play hero ball here, you could do it. And it wouldn't be terribly expensive. But why? I mean, I'm doing it because I have conviction in the idea that the risk reward is solid. And so that's really it. I look at something like a Russell and I go, okay, well, if I can get slightly better than 1-to-1 risk reward, I'm short premium. I have plenty of time. Okay, over time, if this thing pops out, vol will go down. That'll help me. My risk is defined. That'll help me. And so I'll be okay. This is not a very high risk way to take some exposure. But if you really wanted conviction, you got to wait until, I would argue, at least until after the Fed, which is not to say you can't have things to trade, because the microcurrency futures, the micro gold futures, they're liquid and active. So if you wanted to take a view on the Fed, you could do it in, let's say, 1 ounce gold futures if you wanted to keep things small. You could do it in M6 across the currencies, euro, say, or pound.
There's an interesting knock-on effect here after hours as we're digesting some of these earnings reports. Ilya, Airbnb and Expedia, which did not report, are following booking lower here. There's a very clear winner and loser after hours. You head over to something that's remotely tangential to AI, something that's directly involved with AI, and it's having a little bit of a bounce. I mean, Visa missed on their revenue numbers and turned in a higher EPS. They're more productive. They're doing more.
Yeah.
Right? They can make more money without having to change their overall revenue. That's good news. The American consumer may be holding up through this, but no one's traveling. That's not in the cards right now. No one's traveling, moving abroad. I'm thinking about what's going on with the airline stocks as well then. Here after hours, they're not looking too hot. They're just kind of chopping around, moving sideways. All of this is just leading me to believe, having looked at these earnings reactions, that this much desired broadening out that the market needs away from AI, if it's semis, if it's power, if it's data, if it's infrastructure, that broadening out into other sectors we're not getting the evidence of that coming together. And these are idiosyncratic things, but when Visa's doing what it's doing versus compared to, say, the travel companies are telling you that there is a legitimate issue going on from the Iran war. And so I think about the travel stocks today, and I think about what's happening with our friend wheat here, which wheat is something that we took a look at many moons ago because, hey, look at fertilizer prices. What happened when fertilizer prices go up?
Sure.
Products, the soft ags tend to go higher as well. This is finally working out for us. This has been the something in the pocket for almost over a month now, 650, 680 call spread. Today, if it's 5% move, it finally starts to work. I don't think we could ignore the fact that the market's giving you some pretty interesting signals through the earnings and through how some of these commodities are moving, that we are going to have winners and losers. And if you don't like concentration in mega cap tech and that scares you, you may have to just grit and bear through it for a little while, because that is the ball game right now. And odds of this broadening out are seemingly diminishing on a day-to-day basis.
There's a great article in The Economist, this week's issue, not the upcoming one, the one that just came out last week, about the state of U.S. farming. And not surprisingly, between the tariffs and the war, the state of U.S. farming is not good. Obviously, these are not new issues, but they're being made exacerbated by leaps and bounds here. The article quotes industry analysts saying, if a farm in 2026 can break even, that's rosy in an almost wishful thinking kind of way. And so, in some ways, that makes sense than what we're seeing in ag, because, of course, this means that supply is disrupted. Costs are such that people are having to use less fertilizer. People are having to plant less. And so, because they're planting less, supply is probably going to be tighter. Or at least that's what the markets are seeming to show. And of course, if then global supply chains are disrupted, then you're not going to replace that supply easily with imports, because tariffs and energy costs and chaos. So it makes sense what you're seeing there. I think the question for that part of it is going to have to start being, at what point is this demand destruction? But the recent retail sales numbers would suggest not yet, because to your point earlier, so far people are going, energy is more expensive, oil, I'm still going to buy my stuff though. I'm just going to, I'm going to take the pinch here and let this blow over. We're supposed to taco everything, aren't we? Give it a few weeks. But
I saw this awesome headline today.
But that's a matter of time.
Yeah, well, I mean, agencies within the U.S. intelligence community are assessing how Iran will react, if they'll react adversely if President Trump declares a unilateral victory and moves to pull back from previous commitments to a conflict with the Persian nation.
Great.
Sorry, almost going to stroke out here. Like, Donald Trump has declared victory in this war how many dozens of times since it started?
Many times.
The mullahs have been like, okay, you declared victory, where the Strait of Hormuz is still closed. So, I mean,
Yeah.
Very silly.
This is really where things get interesting. And if it feels overwhelming, if all the headlines coming at you feel overwhelming, then you understand why the markets want rate cuts and why they know that they're not going to get them, at least near term. So what they want is soothsaying. The markets understand perfectly well. I mean, look at break-evens. The 10-year break-even has now rallied to the highest level since July of last year. So we're looking at basically all of the disinflation narrative that motivated the Fed to have cut rates last year. All of maybe the labor market is softening a little. all of that disinflation narrative, all of what gave us those 3 rate cuts at the end of 2025, that logic, goodbye. Inflation expectations are back to where they were before that. So as you look at what's going on now, right? The markets look at this, and obviously break-even rates are market prices. So it's not like the markets don't know, oh, there's an oil shock, we're not going to get any cuts, right? No one's dumb. We see what the Treasury yield structure is doing since the start of this thing. We see what the dollar is doing. Dollar's only pulled back about 50%. ZN has only pulled back about, or pulled up about a third, and now it's attempting to come back down again. Markets know. They know they're not getting cuts, but they want soothsaying. And if they get a Fed that comes out like they did last time and says, our focus is inflation, what in the world are you talking about?
Last time I felt like it was a straighter forward shot, though, right? Going into the last meeting, Powell's the high priest of passive investing. When he comes out and says, by the way, we can't give you the cuts because of this inflation, the market may reflexively freak out because now all these people who weren't overreacting before now have a permission structure to overreact. And sure enough, the stock market took another leg lower after the last Fed meeting and didn't bottom out for another 2 weeks thereafter.
Yep.
But that Band-Aid's been ripped off, right? Like, if the market is priced for no cuts until September 27th, what could Powell and what could the FOMC legitimately drop at our feet that comes across as a genuine surprise? Oh, by the way, we're actually hiking rates now, and I'm not leaving the Fed, and we're going to make sure that Kevin Warsh can't cut rates during his entire tenure. I ain't leaving. I'm staying. No. He does the full Leo from Wolf of Wall. I mean, like, what's realistically then, like, what will happen tomorrow? What could Powell say that derails bulls, bear, anything?
The bar to cutting rates is high.
Sure, we know that, though.
We don't know that. Here's what we don't know. We saw in their last estimate, right? In March, we had the updated SEP.
Sure.
They increased growth projections. We see now in the CPI data over the beginning of this year, rebounding service sector inflation at the core, taking away food and energy. Rebounding goods inflation. Rebounding housing inflation. The messaging was still, look, we think we're on track to have these tariffs rebase. Mm-hmm. We think we're on track for the economy to give us some natural disinflation. That messaging has to change now. But more importantly, the reaction function might change. For example, at the last meeting, Chris Waller was still voting for cuts, and he was already out of the running for Fed chair. That messaging has changed just even in his speechifying. And so what if you get a statement here that says, we need to be prepared for two-way risk, we need to have a more balanced approach, that already came out in the minutes from the March meeting.
Well, they have to look at the Atlanta Fed's Taylor Rule Fed funds heat map right now.
Uh-huh.
All the different ways. They have this great little map, depending upon what your inputs are, depending upon what model assumptions you're using, what measure of R star you're interpreting, what's the output gap determined by the CBO. You're going to get a whole slew of different assumptions about where the Fed funds rate should be. Fed funds rate should be 4.1% as a floor, perhaps all the way up to 5.8, 5.9. According to 5.96%, according to the Taylor Rule estimate, using a 2% measure of R star and GDP output gap from the CBO. In what world is the Fed going to be telling us that they can cut rates with that in the background right now?
Well, the market doesn't expect them to do anything this year already. That much is known. To your point,
we know that.
We know that. So the question really is going to be, are they going to update us on the reaction function? And are we then going to get a sense from the Fed that essentially, to your point, we're going to get a new Fed chair, and that Fed chair, if he wants to do what he said he wants to do, is going to start getting outvoted. And then we're going to see what that looks like. Because if the tone on the committee is going to become hawkish, and the committee is going to say, listen, we need to be guiding markets toward the possibility of hikes, not that we're necessarily going to have hikes, but we're going to have to start telling the markets that we might, and they're going to have to start to understand there is no one-sided anything here, then we're going to have to be in a situation where if Kevin Warsh wants to not do that, well, Kevin Warsh is going to not get his way. And that would be a whole other thing.
Look, Kevin Warsh is starting, I think, actually from a pretty good place if he wants to make the argument to cut, insofar as it's not like the market's priced here. And then, all these other FOMC members get their TDS and go, not going to cut rates for Warsh because he's Trump's guy, right? And all of a sudden the market's pricing in cuts and the FOMC is just outvoting Warsh for the sake of spiked. Right now, the market's saying October 27 is when the first cut comes. So if we get the data, right, the Fed telling us they can't cut anytime soon, we got you. We're fine with that. We understand that. We've got that priced in. Anything that comes sooner, as long as it doesn't come too soon, Elliot, it's probably gravy because it means we're making our way through a transitory shock. And if it arrives quickly, it means that recession has come. And you have these recalcitrant Fed members who are saying, well, I don't want to cut because of Trump, but we have to. Now, that would be a nightmare scenario. We want to go steady as she goes if the cut odds come back. We don't want them to stay pinned back towards the end of 27 or get pushed into 28. We don't want them to jump up to early 2026. We want them to kind of meander and drift towards early 27, late 26, slowly as information comes in. So I'm not expecting anything from the Fed tomorrow. I don't know how we're priced in terms of getting anywhere to go. The market here after hours with all those earnings from Seagate to Starbucks, Visa, name one, is 71.73 here. We close above our 1 week moving average for another consecutive session since March 31st when we did it for the first time here in ES here at NQ. Tomorrow, Ilya, a little bit different story because I'm not going to be around for Futures Power Hour, and I actually might need to miss overtime. Joked earlier, I got this mole that's like bump, 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 bump. So they're just going to scoop it out and get rid of it to make sure there's nothing growing weird inside of me. I guess we're at that stage of our lives. We got to worry about that kind of stuff. But so overtime, we'll be back tomorrow with Ilya. Maybe me. We'll find out. 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I'm Chris Vecchio. Good luck trading. No cancer. See you tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We are ready to build. This is make or break for this team.
It's down to the last 2 minutes, and it's time to rock and roll, baby.
That's all I got is 2 minutes, and that's on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes.
Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Take one. Hey, baby. I like the looks.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it. Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin.
The markets continue to meander. And perhaps that makes sense. We've got a whole bunch of event risk in front of us over the next 24 hours, and perhaps the markets just don't want to have directional conviction until that is out of the way. So how are they setting up, and what is all of this going to do? That's what we're going to try to figure out here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And as is our custom, we are going to take a look at the price action first and foremost, because as we like to think here, the price action is what relays the macro story, and the markets will reveal themselves in how they move. And as long as we can figure out what the interrelationship seems to be telling us between assets, then maybe we can figure out what the macro story actually is. So let's take a look at the price action here first. We'll go asset by major asset, and then we'll try to see if we can't divine what the markets seem to be telling us before we have this major bout of event risk, which of course is going to begin with the Fed policy announcement, and then go into a big round of tech earnings. 4 of the Magnificent 7 big tech names are going to be reporting over the next 24 hours after the close of the cash trading session tomorrow. So here's the S&P 500 here just as our benchmark for overall risk sentiment. And we can see it seems to be losing yesterday's attempt at an upside breakout. But most importantly here, these elements of divergence that we were talking about yesterday, they seem to be looking even more acute. So we can see all the way on the rise here, erasing the sell-off from the start of the Iran war. Volumes have been fading. Volume is a little bit higher today on the way down than it was on the way up yesterday. In fact, yesterday was the lowest volume for this current contract for the ES futures, the S&P 500 futures, since Easter Monday, that low when outside of the US, most major markets were closed. So the gap here in conviction seems significant. So we have almost no conviction, it would seem, very, very light volumes on the way up yesterday. And it's with a move down that we get a little bit more participation. So interesting dynamics here. But of course, the stock market continues to be on an island relative to other major benchmarks, because here was where we were idling through late October into the beginning of 2026. That was, of course, tellingly, when the Fed chastised markets. Fed Chair Powell came out and basically told markets off for overly extrapolating rate cuts. S&P has been capped at those highs then from that point up until the beginning of this year, and well into the beginning of this year, through the first quarter, at least most of it, and until the start of this war. And that's where you get the sell-off. Now, the mere whiff of a ceasefire gave us not just the erasing of the war, that decline, but a push to record highs. And of course, tellingly, from the moment that we come back to retest the underside of the range we took out on the way down, and all of the subsequent rallying, so once we came back, retraced the break here, and all of the rallying that follows, essentially April's blistering recovery, has come with diminished volumes. And most recently, even as we set higher highs, we can see the relative strength index here, which, again, I like as a momentum indicator because its arithmetic is somewhere at a third grade level. This is telling us that the market is losing momentum. It's starting to lose the capacity to close up relative to down, even as the price is setting higher highs. Now, that need not be a reversal. It's not always one. It could just be a period of lost momentum that is characterized by sideways consolidation and then a resumption of the up move. But it could also be a top. And at this point, we don't know, but it is a telltale sign to keep in our mind. Now, we say that stocks are on an island because they've retraced all of the Iran war consternation, but that war trade remains acutely present across basically every other major asset. So crude oil, we can see, is near the middle of its wartime range, right around $100 a barrel. And we're looking at something on the order of 35% more expensive oil at this point versus before the war. And of course, at that point, crude oil was already grinding higher. It started to rise at the very beginning of the year and was already a concern that was eating into markets by way of inflation expectations. And then, of course, that move found steroids in the war. Now, we see the same thing, stickiness in that war trade in the bonds. The bonds clearly sold off here as the war started and gave us those implications for inflation from the knock-on effects, be they energy or fertilizer or critical inputs like helium that are disrupted by the closure of the Strait of Hormuz amid this conflict, now blockaded both by Iran and the US. And so not surprisingly, we get this big jump in yields. And in this case, as we're looking at the bonds, of course, that's reflected as a sell-off in the bonds. We've seen about a third of that retraced around that same optimism that has stocks all the way back and then some. This was that same low. And in this case, we've already undone the pull-up. This level that we took out, we've failed that move higher. And we're now going the other way. Yields are creeping higher again. You see it likewise in gold. It sold off as rates went up and rate cut expectations fell away as inflation expectations rose. Because, of course, gold yields nothing. So when yields go up, it looks comparatively less attractive. Again, here's that same low that we saw in stocks and in bonds. We see a rebound. We've only come back about halfway. And just like the bonds, we're leaking lower again. The US dollar, a similar story. It had a rally because, of course, higher interest rates and risk aversion mean demand for dollar liquidity. And likewise, the appeal of the dollar because it is an interest-bearing instrument. And if interest rates go higher, well, then the markets like the dollar better relative to other currencies than they did before. And so we naturally then see a situation where we have a stronger dollar. And on the way down, it has only moved about halfway and has since then found a way to once again start to creep higher. So it's a bit tenuous yet, but nevertheless, it is moving higher. And that's something that we need to keep an eye on here because, again, that lines up with everything that we're seeing not in stocks. Stocks being, again, sort of by themselves with their low volume melt up. Another asset that's, in fairness, somewhat by itself is Bitcoin. It has recovered meaningfully off the range bottom that prevailed, but that range bottom was there for the war, through its beginnings, and really it took the sentiment shift in early April to get things moving higher. Of course, we've taken out this range top now, and we're trying to hold it. So this seems to be perhaps a creature more of sentiment than it is of anything else. But nevertheless, it is noteworthy that this is probably not the same kind of story as what we have in stocks, probably not likewise the same kind of story that we have in bonds and gold and the dollar. And so with that in mind, this is probably a pocket to keep an eye on because if this is just pure sentiment and stocks turn out to be overextended relative to what is reasonable, then we're probably looking at some vulnerability in Bitcoin. But at least for now, it seems to be marching to the beat of its own drum. And so if ever there was a refuge from the broader macro story, for whatever reason, it seems to have emerged for now in Bitcoin, again, unless the faltering of sentiment is going to give us something that ultimately unravels this. Now, as far as the event risk is concerned, we begin, of course, with the Fed. And here's their statement from the March meeting. We can see it is already at the start of the war. This meeting occurs on March the 18th. So at this point, the war is about 2 weeks in. And we can see the Fed is opting not to say very much here. It's a very brief statement, adding only that the implications of developments in the Middle East for the U.S. economy are uncertain. And otherwise, the Fed backs up and says, all right, well, let's let the dust settle, or at least let's let a little bit more time pass before we pass judgment. We can see in the voting pattern, you already have a shift towards something a little bit more hawkish than you had before. Chris Waller, which had been voting for rate cuts up to that point, basically going back to the middle of 2025, he gets off the dovish side and gets over to neutral as everybody else basically watches what's going on. The remaining dove, not surprisingly perhaps, is the most dovish member, Stephen Micron. He continues to call for rate cuts, but of course his comments since then have also taken a move in the direction of moderation, and that moderation probably reflective of actually both Chris Waller and Mr. Micron no longer candidates for the Fed chair job after the nomination of Kevin Warsh. And in the case of Mr. Micron, no longer is he somebody who works at the White House. He had a dual role there for a while. He was on loan to the Fed from the White House, and he said that if he was still on loan at the end of 2025, he would quit the White House role and be solely at the Fed, and that's where we now are. So as we look at this then, we see that the Fed was kind of idling the car in March. But then when we take a look at the comments from Fed Chair Powell after that meeting, we can see that there's a clear nod to inflationary concerns. Elevated inflation expectations in near term have risen. They largely reflect goods which have been boosted by tariffs. The Fed, of course, has been arguing since last year that they expect that to be more of a one-off kind of thing. And as we'll see, that has not borne out so far. The implications of the Middle East are, of course, uncertain. We can see here that whether we look through energy inflation doesn't arise until we check the box on goods inflation. So what the Fed is saying here is key. It's saying, look, we know there's an energy shock, but underpinning it, under it, is inflation that is more structural, and that's the tariff inflation that's been bubbling in goods and that the Fed thinks is going to unravel as that one-off price adjustment is rebased out of calculations. Well, as we'll see here, that hasn't really been the case so far. Now, looking at the Fed's update in March of its summary of economic projections, we can see they have shifted to a longer-term higher rate, reflecting perhaps that less scope for easing, basically not just through this year and next and even 2028, but overall, pointing to structurally higher rates in the future. We see that they've upgraded growth expectations and inflation expectations. In other words, the Fed sees a hotter economy in March. And that perhaps speaks to why Chair Powell is saying, okay, yes, we know there's an energy shock this way or that way, but we're concerned about core inflation because it's there that we're not really seeing the kind of move lower that we want to see. Now, this is what we're talking about. We can see that stripping out energy, stripping out food, inflation in the goods side of things is rising at the beginning of the year. Now, it looked like the Fed was going to get its rebalancing because there was some plateauing of this. This is the year-on-year goods rate, as we started to fall off on goods inflation going into the fourth quarter. Well, that seems to be turning the other way now. And again, this is without the influence of energy. This is without the influence of the war. For now. We see here something similar in services, a pickup there as well, and in housing. We can see that services inflation in the first 3 months of this year posts some of the strongest monthly gains we'd see since the middle of 2025. We can see that housing inflation has been perking up steadily since the beginning of the year. And then, of course, there's the energy shock, where we can see it takes about a month for moves in crude oil to work their way into the CPI reading here, the headline one. And we can see that early January, February move in oil is perhaps starting to happen here. But the big spike isn't even in the data yet and should start to appear in April's numbers. But market-based inflation compensation measures, the break-even rate inflation expectations baked into Treasury bonds, they're surging again. In fact, the 10-year rate, speaking of the Fed adjusting to a structurally higher rate over time, as we just said, we can see here the 10-year inflation expectation rate is now at the highest essentially since the middle of last year, which again points us back at this idea that we had this pocket of disinflation that got the Fed hopeful. And so they started to cut rates a little bit at the end of last year, especially seeing some softer patch in the labor market. Well, we're going the other way now. So looking then at the break-evens, it would make sense that we'd be basically back to before that disinflationary period happened. We can see that disinflationary period, of course, in the numbers here. And then starting the beginning of the year, we see crude oil begins marching higher, inflation expectations begin to pick up. What has this done to the expected path for Fed policy? Well, clearly, here's the path now. We can see it is much more hawkish than it was at the beginning of the year. And of course, 3 months ago, this curve was not yet implying a war in the Middle East. A month ago, that war looked still fresh and a little bit more of a risk. And so there was that hawkish shift in policy expectations. If we were to look at the bonds and say, well, what is the difference then between a month ago and now? Well, rocket science, this is not. A month ago, we were here. Now, we're here. And so we can see that this was 3 months ago. This was a month ago. This is now. Looking again at the policy curve, 3 months ago, 1 month ago, now. So we've adjusted a bit as far as the most extreme hawkishness coming out of the war's impact, but only a bit. And we're looking much more hawkish overall. So we can see now that the likelihood from Fed funds futures that we stay at the current Fed funds range is now holding right around 80%. The probability of even one cut is dropping. The probability of 2 cuts, non-existent. The most recent PMI data is telling us that, as we see from crude oil, so too from the collective inputs of manufacturing and service sector activity, we have an inflationary impetus. Here we're looking at the highest inflation implied here for U.S. composite PMI since 2022. And of course, then looking at policy expectations, we can see essentially nothing on the board. We're expected to remain at the current rate at the soonest until October of next year. There you can see we're narrowly at 47.1%. So we're narrowly better than 50-50 odds on a cut. of some magnitude by October of next year. Until then, the markets don't see anything. Although, arguably in September, it starts to get close. And so then the question becomes, well, then, with that in mind, what's the Fed going to say? What are they going to do? The markets already know that they're not going to cut. The markets already know that we're not seeing cuts for a while. Certainly doesn't look like we have anything on the menu for this year. And then we're probably not going to get anything until later. So the question then becomes, well, okay, so is the Fed then something of a non-event? Well, perhaps not. Because what the markets have wanted from the Fed, going back to why they stalled right here when the Fed chastised them, is insurance. They saw the chaos of the tariff rollout and how much that rattled markets. In fact, the president himself, as in early April last year, the markets were in a state of panic, and we were seeing the dollar and stocks and bonds fall at the same time in a kind of sell America dynamic. We saw the president come out and say, okay, let's put this thing on a 90-day pause. The bond markets are getting yippy. So this is not a controversial statement to say the markets have been dealing with the rollout of policy that has had them in something of an uncomfortable position. And much of what we've seen in the rebound from that sell-off, starting from those April lows last year, has come with the building of rate cut expectations, as we can see relatively clearly in what's been happening with the bonds. What we see is this gradual pullback. But we can see that going into this, we were looking at higher bonds, which of course then stop going higher when the Fed makes those statements that got stocks all bothered. And since then, the situation has been moving the other way. We can see it in gold. And so the story here seems to be one where it's more about whether the Fed sounds prepared to come bail out the markets if one of the plates that they are spinning drops, and less so about whether they'll actually cut at some point sooner than the markets are currently anticipating. And if the Fed sounds like their reaction function is such that they have a very high bar, even in a generally tricky market, to deliver policy support, well, then, even with a new chair, perhaps as soon as after this meeting, it's going to look like the markets are out there on their own as the situation gets trickier. And that, of course, is probably not good news for sentiment. So, with that in mind, I'm still short gold, long the dollar, looking for that higher rates story to continue. That, of course, also is reflected in the put vertical I still have in TLT, being short the long end of the curve. I'm also short risk here still, and long Bitcoin, which hopefully continues to be on a planet by itself, because if I'm betting on risk aversion, Bitcoin probably wouldn't stand to benefit under those circumstances normally, but as long as it remains uncorrelated, maybe we can see something there as a balance and a hedge. But looking at still short risk, I've re-upped in the Russell here, and rather than expressing it as buying a put vertical, I've sold calls instead. So we'll see how that goes here. But I am looking for this to be a little bit of a better structured way here. You can get 1-to-1 risk reward here today, which is pretty good for a short premium position. And of course, still have the put verticals I own in the Qs, so NASDAQ and SPY, the S&P 500. And that is macro money for today. As ever, we are here Monday through Thursday. That's right after overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com. Go check that out. In fact, there's a weekly macro preview there that I published just early this morning. I'm also commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, please like and subscribe. And Macro Money will return tomorrow. Happy trading.